coffee. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
Hola, hola, hola.
That I thought you would be here today because you got a short week.
I am here today. What do you mean?
In studio.
I'm here. You don't need any more than me.
I can only handle one pedantic boomer at a time. And today's not your day.
You annoyed me so much last week, I couldn't do it. I couldn't do it.
No, last week was a lot.
Last week was a lot. No lie.
It was a lot.
Look, you got the black shirt memo. What happened to Vanetta? Vanetta, you didn't get the memo?
I rarely wear black. And if I do, it's going to be like a black and white polka dot with a bow and a ruffle. It's not my signature look. Like, it's Julia's signature look, like all black. And
she wears black.
Yes. And Christy Ross, it's her signature look, all black. But me,
all the girls. Tom Sosnoff, that's his signature look.
I like vibrant colors and patterns.
Oh, we didn't know.
I know. Welcome.
Yeah.
How was your weekend, Sparky?
My weekend was actually pretty good.
Okay.
Yeah. I mean, well, Friday we had the show.
Yes. Are we going to show pictures? Do we have pictures? Are we going to do that or no? Do we surprise production?
We got a few pictures.
Got some stuff. I was there. It was rare. That's a line from a Taylor Swift song. But okay.
And then
on the team there.
Hey, that's from the open house. That's me and Gussie doing stuff for social, holding it down. Hey, look at that good-looking crowd at the iconic Thalia Hall. That was my first time there. It's a cool venue.
It is.
It's a cool space. I'd never been there.
Yeah.
Did you know they serve food there, Sosnoff?
Didn't you hear those guys? They walked through the kitchen. They said, when they got out, they said,
Don't say it.
They said, I would never order food there in my entire life after walking through the kitchen.
You on stage with the guys from the SIBO there?
SIBO and the CME.
All right, okay. More shots of the crowd?
Yeah.
It was full, and there were even people up in the balcony area there.
Yeah.
That was great. It was a great show. Really enjoyed it.
It was nice seeing all the people.
It was great.
Met a lot of new people, a lot of familiar faces. It was great.
Saturday, I got dragged up to the suburbs to have pizza for an hour.
I'm sorry.
You weren't even there. It took you longer, to be honest. It took you longer to come and go than it did you stayed.
I had to drive like 100 miles an hour to get to down all the way. My son was going to a wedding, and he had his shirt was at the dry cleaner, and it wasn't ready in time. So I had to go from the northern suburbs to this dry cleaner, get his shirt, and drive it down to the West Loop.
Okay. Wait. I'm so confused. There's like 6 stories.
And I only had an hour.
But wait, why were you getting pizza in
the suburbs?
Yeah.
Because Scott's favorite pizzeria is 100 miles from here.
Barnaby's?
Yes, which is like very, very average.
My God, you are so mean.
We had a Barnaby's in South Bend. There was a Barnaby's pizza
it's not bad.
in South Bend.
It's not bad. It's thin crust average pizza.
Yeah.
And
wait a minute, is it better than Lou Malnati's, which usually gets voted best Chicago?
It's better than Lou Malnati's. It's better than Lou Malnati's thin crust, 100%. But is it better? Is it better than like Pat's? I don't think so.
Oh yeah, that's the Barnaby's we had. We had one in South Bend, and then it closed.
Bad drive
there. But you put it up there, right? You don't put Lou Malnati's up there, but you would put Barnaby's up there.
I wouldn't put it up there. I mean, I went there. It's good. I mean, I could eat it.
Sure.
You traveled an hour. You shoved your face.
So wait, but I don't understand. Why did Scott make you eat pizza at Barnaby's on Saturday?
We were paying homage to my friend Frankie Walsh is what we were doing.
Oh Oh, because Frankie came in town for the show.
Yeah,
Okay. Well, your stories are missing critical information, and you just merged two stories together without complete details.
It was a Frankie Walsh luncheon.
Okay, there you go.
And
It
then
was a goodbye. I think it was a goodbye party. The way he's walking, I'm not so sure. We might
I thought he looked good, man. I thought he was good. We were out, and then
Oh, he looked great. Frankie,
yesterday I went to the
you
Cubs
live-
game.
Just kidding. But can I have the Pontiac, Frankie?
No, but wait, can we go back to the pizza? What kind
Yeah.
of pizza did you get?
They got 100 pizzas.
There was
We had-
nine. There was 9 people. I ordered. There was 9 people. I got 7 pizzas.
Oh, wow.
We had about 5 pizzas left over.
Yeah. Did
If
you
I
take
wait
any
for
home?
Scott, if I waited for Scott and Tom to order, we would have been there for 3 hours because these guys, they don't go in their pockets for nothing. Like Scott did for 150 times. I go, so I get there, there's like maybe 4 or 5 people there. I go, did you guys order? They're like, no, we're waiting for Tom. I go, wait for Tom. What do we got to wait for Tom for? Like, you don't know how to order pizza? He goes, yeah, I've been here a million times. I go, well, there's no waitress service. I forget it. I said, I'll go up there and order. And I ordered all the pizzas and everything else like that.
Where's the
And then-
mushroom? You forgot the mushroom. You know I like bacon and mushroom.
Yeah, but Scott's wife is anaphylactic.
Who cares? Who cares about her? We're talking about me.
She literally has a life-threatening allergy.
Oh my God, no, she doesn't.
I didn't want to lay in on the
gaslighting.
floor in Barnaby's. In the suburbs, they'd have a helicopter.
They order
to get
in
her.
10 pizzas for 7 people, whatever it is. They can order
9
one pizza.
pizzas.
One pizza with mushrooms. It wouldn't kill anybody. That's all
Couldn't
right.
do it.
You
They
could
go,
do
"Good
without
luck."
some pizza. Let me just say, it's not going to kill you to go without pizza. How about that?
That's
Yeah.
fair.
And then yesterday you went to the Cubs game.
I did.
How was that?
It's great.
Cubs are not good.
Well, they won both. They won on Saturday and they won on Sunday.
They're still 8 games back.
Well, that's because Milwaukee won like
Brewers
150
are
games in a row. But
So
Yeah.
again, back to my validating statement, the Cubs are not good.
we had really good seats because I had Tom Ricketts seats.
Wow.
So
How'd you get those?
he gave them to me.
Really?
So
That seems odd.
we were
He
sitting
owed him
there.
a bet from the 90s.
We were sitting there. It was great.
Who's we?
My son and his wife.
Oh, okay. Interesting.
Oh, he's still with that girl?
I mean, he just got married in April, but he's still with her now. I can't say.
You guys are terrible people.
I mean, they're supposed to be married forever. I don't know what the deal is going to be,
Terrible people.
but they look happy.
That's all that matters. That's
Yeah.
great. So they were in town for another wedding.
They were in town.
It's like a story within a story within. I can't keep up. So they were in town for another.
Yeah, my son has all his. It's crazy. They're all his friends from high school. They're still like so close, and so one of his good friends got married.
That's great.
Yeah,
I bet it was very lovely ceremony.
I'm sure it was. I don't know. As long as I don't have to go, I don't care.
You don't care.
Did you get the shirt to him on time? That's all that really counts.
I got the shirt to him before the trolley left from the hotel where they were all staying.
Wow.
And,
And then he sent you on your way. Did he give you a tip?
What?
He sent you on your way. Did he give you a tip? Did he tell you a good place to go eat? Anything?
No, usually your kids don't tip you. They think it's part of your obligation is to, he's
Understood.
He's 30.
I can relate.
He's 33. I think he still thinks like my job is to drive him around and pick him up and whatever.
Whose fault is that?
No. So
Get it?
he actually came here on Friday, but we weren't here.
I was here.
Did you see him?
I came back after at work at 11. So because it was Diego's and I have only had them once before and I'm obsessed.
It's really good.
It's so flippin' good.
I agree. It's a great.
I'm not a burrito person, but I would die for that burrito.
I'm gonna tell you right now. The first time I had it, I was like, it's okay, but it's great.
No, it checks every box. I don't even know what's in it. I don't want to know the macros. Like I'm a little scared.
There's a French fry in there,
There's potatoes in there, which I love potatoes in
but it's
a burrito.
an unbelievable burrito.
It's great.
It could be the best. Yeah.
It's the only thing that has kept me from
It's
quitting
the
this
sauce.
job.
So So you know what we did after the show? We went to Chinatown.
I did not get invited.
Certainly
Don't
could
worry, I
have
didn't get invited either.
Where did you go in Chinatown?
I wanted to go to that place, QXY, the dumpling place.
Are you saying it right, or are you just saying letters?
I think it's called QXY. But anyway, we go there and walk in the door, and there.
Well, I love that you didn't have a plan. You didn't have reservations. You didn't give anyone a heads up.
It's noon on a Friday. There's an hour.
One of the busiest summer weekends in Chicago. But go ahead, pop off.
There's an hour wait. Something like that.
because why? Tell the people why it was an hour wait.
It's a very popular place.
Because it's one of the busiest summer weekends in Chicago.
I went to the restaurant next door, which was empty.
Okay. The audacity.
And it was great. It was great. I took out our research team.
Again. You know what, though? I would have rather still had a Diego burrito. So, sorry. I'm not sorry.
Yeah.
Like, random place because you couldn't get into the place that you wanted, or Diego burrito.
I mean, a random place, but it was really good. And
Yeah, but I live by Chinatown. I'm there all the time.
all right. I never go to. You know what? I realized I never go to Chinatown anymore.
Thank you for your support, colonizer. You should come down to China. Like, it was nice.
Chinatown or the Honky Tonk Barbecue?
That was right there on
I know.
18th Street. Yeah, I've been to Honky Tonk Barbecue.
I don't.
It's okay.
I don't know if I've ever been there. I don't know if I've been there.
Why are you looking at me like I can confirm or deny that? I don't know. I don't know where you've been. You're like a street cat. But anyway, I'm glad that you got the food. But the South Side was rocking because the Savannah Bananas, 2 sold out nights. Even though there was a rain delay on Saturday, traffic was terrible in my neighborhood.
Chicago was crazy this weekend. They had the UFC fight at the United Center.
Mikey Butler went. I saw it on his Instagram stories.
They had the UFC fight at the United Center. They had the Cubs were in town, so Wrigleyville was crazy. They had the Savannah Bananas on the South Side.
For 2 nights, they brought out Chance the Rapper, and Mark Burley came out, and AJ Pierzynski. Like, Burley pitched, and he's like, I'm going to need some icy hot.
They brought out Konerko.
Oh, Konerko. Yeah, all the legends. Yeah, Paulie.
It was great.
Yeah. I wish I could have gotten tickets, but it was $250 minimum to get in on StubHub when I looked on Thursday night.
They brought out Konerko.
Yeah.
Yeah.
And Burley. Yeah.
They're definitely
I saw an Instagram where he said he would never sell the bananas. I don't know if it's true or not, but that's what I heard him say from his own mouth.
Well, it's a wonderful story. Like, he's kind of like a modern day P.T. Barnum, but good for that guy.
Yeah, good for him.
He's selling out stadiums. Like, the White Sox can't sell out their own stadium. Like,
not at $250 a ticket, not at $25 a ticket.
It's unbelievable.
Yeah.
It really is unbelievable. It's like
you give people entertainment, they like it.
People want to be entertained.
Yeah. And the Aaron Water show, too, was going on. And
the Aaron Water show. They buzzed in Wrigley. It was kind of cool.
Did you see they blew out some of the windows, some high rises on North Lakeshore Drive? So during one of their test runs, the Thursday or Friday, they were flying really low, and there was a sonic boom, and it blew out all the ground windows. So then some Karen called 911 and was like, "They are flying too low." They're like, "Ma'am, we cannot arrest the Thunderbirds." I was like, "Ma'am, what do you want us to do?"
They were having fun over Wrigley. That's for sure.
Yeah. There's great videos during the 7th inning stretch where the planes buzzed.
Yeah.
Hayden Christensen, I guess, sang it. So that was on Friday, not Saturday, the day you were there.
Oh no, a bunch of young women sang yesterday. I don't know who they were.
Another cool story.
I didn't see on the screen who they were. But there was a Mound Bowl winner yesterday, and
Congratulations.
And the umpire landed it dead smack on the pitch, on the
rubber,
right on the rubber. And so I've never seen anybody stick Mound Ball onto the top of the mound.
Did you go down to the field and shake his hand?
No, but our seats were on the field.
I know, but you should have gone. You should have.
Oh, there's a net now.
Oh, all right. Well,
can't put your hand through the net. They yell at you.
Yeah, it is what it is. Bat, how was your weekend?
My weekend was good. Breaking news. Vinny made the JV team in hockey. Got the.
Yeah, but doesn't everyone make JV?
Everybody plays.
No, they have cuts. They have cuts. Yeah. No.
They have cuts for those whose checks didn't clear.
Yes. It's the only sport that's not sanctioned or supported by the high schools.
Oh.
So all the hockey players have to pay for all their own stuff, which means their parents have to pay for it. And there's no buses for hockey, Sadnoff. Can you imagine that?
What do you mean? How do you get there?
The kids drive or you drive.
How is it not sanctioned? But they can cut kids.
It's considered.
It's a club, not a team, I guess.
It's a club. Yeah, by the high school. It's a real racket. Racket.
You know, in Case's high school, they had the rule that everybody makes the team no matter what. So she goes, I'm going to go out for softball. And
so she was on the men's baseball team.
No. She goes, I'm going to go out for the girls' softball team. I go, Case, it's not fair to the girls that really want to play. Like,
that's a motivating speech from your own father. That's what you want to hear. That's nice.
That's what she said to me. That's what she said to me. She goes, Dad, because I was telling the story to somebody. I go, you know, because when Case was playing soccer, like, you know, when she was a little kid, she was the kid that would stand in the middle of the field and just turn her head.
Sure.
She didn't go up or down.
She was done digging a hole. If she was done digging a hole. If she was done digging a hole with her shoe.
I showed her that TikTok video last night. You know that TikTok video is pretty famous of this kid throws the ball to his dad, and then his mom goes, someday this kid's going to be a professional athlete. The dad throws the ball and hits him in the face. Have you ever seen that?
No.
Oh, my God.
No, I get outside. I touch grass, so I am not on my phone all the time.
Oh, I'm sorry.
Not on my phone. I don't know where this show's going. I'm just here so I don't get fined. But hey, we got a great show for you today.
Did you see somebody came out with a...
Okay, I was literally not talking in the middle of a sentence.
Somebody came out with all the quotes from Marshawn Lynch over the years. It's like a Yogi Berra thing, but all it is Marshawn Lynch.
What does that have to do with anything that we were talking about?
You just said I'm just here because I don't want to get fined.
Oh, okay.
That's a Marshawn Lynch quote.
Okay. Whew.
So they came out with basically like a very short book on all Marshawn Lynch quotes. It's great. It's
I'm
great.
sure it is.
Is it better than our show schedule today that I need to read?
Wow.
Yes, a lot better.
Well, I wasn't trying to do something as audacious
Well, you were quoting
as
somebody.
talk about myself. I was just trying to read the show schedule.
I understand, but you were quoting somebody. You didn't even know you were quoting.
No, I did know who I was quoting. I do. Okay, you're right. I'm just a bimbo today. I'm just here. So I don't even know until Tom tells me what my thoughts are. Hey, at the top of the 8 o'clock hour today, we got an options jive. The theta threshold. How much is enough? I've certainly had enough. That's my theta threshold. It's been reached today. It's been breached. That's at 8 o'clock. Then 8:40, the Skinny on Options abstract application. Got to see Dr. Jim on Friday. He was in town. So
It was very nice to see Dr. Jim making an appearance.
yes.
Hopefully he learned a lot so he can take that to his next live show.
Dr. Jim is going to be on air, the Skinny on Options abstract application, trading trade-offs. It's going to talk about trading trade-offs today. Then 9 a.m. market measure skew as a signature of risk trajectory. What? Skew as a signature of risk trajectory. That's hard to say.
Yeah, it is. It's a good piece. It's a really good piece.
What is it? What I don't understand though.
We're going to look at pricing skew,
Okay.
and we're going to talk.
Oh, it's pricing skew, not vol skew. Pricing skew.
Yeah, we're going to look at option prices to determine if skew can give you an idea about risk.
Okay. Oh, like to the upside or to the downside.
Exactly.
So, all right. Hey, and then live from the trade desk, big boy Scotty S. Scott Sheridan also made an appearance on Friday. Scott is going to be live from the trade desk, counting down all the top trending tickers over at Tasty Trade. So you definitely want to stay tuned for that. But hey, in the meantime and in between time, you want your daily dose?
Ooh.
Great. Hit me with my theme music. Let's go.
Our leading
In
story,
today's
breaking
headlines.
news, coming across the wire. Our leading story, top story, just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's August the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings imminent for this evening, Mr. Bat?
Palo Alto Network, Home Depot, MDT, if you care.
What's that? What's the last one?
MDT.
Oh, no.
Oh, do you have a Home Depot position?
I do not. I don't know how tradable Home Depot is.
Okay.
MDT is Medtronics, for those who are playing at home.
Honestly, Palo Alto Networks, we actually do have a position on.
Okay, PANW.
PANW. We have a small position on in there. Yeah, we're kind of right in between, so we should be okay. Let's see, are we up money or down money in this trade? I feel like we're unchanged right here. So we have an existing iron condor in there. We're completely flat. I mean, our P&L is zero.
Gotcha.
So I doubt I'll keep that, but Palo Alto Networks is tradable. Mm-hmm. I don't know if Home Depot is. Are the markets in there any good, Tony? I haven't traded Home Depot in a long time.
You know what? Home Depot has an IB rank of 27. You know, it's almost $400 stock. It's got $1.50 wide markets. It's just a popular. I don't think it's really tradable.
I don't think it is too. I think Palo Alto Networks, which is $170 stock with an IBR of 50, probably has. Let's see how much volume they have today. But I'm guessing that's going to be.
They're not open yet.
I'm guessing that's going to be the tradable one, if there is one.
I will say we had a open house here at the Tasty Live studios on Thursday. Thank you to everyone who came through. But people, as they toured the studio, they were surprised.
That was the biggest takeaway?
That was everyone's biggest takeaway. They were, because people were sitting here and we were like taking pictures and, you get the whole experience and they were like, wow, these screens are huge. They're like, why can't Tom see? Like, modern day mystery. Modern day mystery, everybody. But you saw it with your own eyes. Hey, getting to my first headline of the day. A lot of stuff on deck for the week. Powell's Jackson Hole speech. Huge retail earnings. A lot on deck. The investing world's going to turn its attention to northwestern Wyoming as Fed Reserve Chair Jerome Powell, JPZ, as I like to call him, is going to give his most important policy speech of the year at the Jackson Hole Economic Symposium. That's on Friday. Also this week, you're going to have a spate. Why are you looking at me like that? You're going to have a spate of retailers presenting their earnings. You have Home Depot today, Walmart Thursday, also have Target. That's going to maybe give some more insight into consumer behavior, impacts of tariffs, stuff like that. So I'm just presenting that's what's going on this week. Thoughts?
I don't really care that much about these earnings because the only one Target and Walmart are probably the only two that are tradable.
Okay, so 2 out of the 3 that I named. Okay.
There's more than that. And then as far as Jackson Hole, I mean, I think every single year we've been doing this show, there's been a Jackson Hole meeting and they're all completely worthless. So I don't consider this to be anything.
All right. It is what it is. Just do with that.
We're getting to the end of earnings season.
Hey, foreign holdings of U.S. Treasuries climbed to a record $9.13 trillion in June. That's according to data from the Treasury Department. Treasuries owned by foreigners were up nearly $1 trillion or 10% higher compared to a year earlier. Let's talk Treasuries.
Well, I mean, it probably makes a lot of sense because if you were able to buy U.S. Treasuries at a 15% discount, you're like, why wouldn't I go get? I'd rather have,
especially if I'm deciding not to go to war with them. I mean, they're gonna.
No. If you can buy, like if you're living in euro terms or whatever else it is, and you can buy a U.S. Treasuries at a huge discount with the same interest rate, why not?
Sure.
Euro currency, you mean? Yeah.
Yeah.
What are you doing personally in bonds to start the week?
We're long.
Bonds flirted with going under 114. Well, they did on Friday just for a skosh. They flirted with it this morning, 114.01. They're 114.12 right now.
Yeah, we got long last week. I didn't trade any on Friday, so we're just sitting here long bonds. I need them back over 115.
The end of summer usually marks one of the slowest period of the year for investment bankers, but this year the markets aren't taking a vacation. Halfway through August, the IPO market has already roughly doubled the amount of activity typically seen during the month. There have been 12 new issues worth at least $50 million, raising $2.9 billion in capital. August typically saw only 9 IPOs, raising an average of 1.5 billion. Crypto exchange Bullish enjoyed the latest high-profile market debut, but there have been others, shares of like Figma, things like that, Chime, Circle, CoreWeave. What are your thoughts on the resurgence in IPOs?
I think it's the biggest red flag out there.
Oh, I was not expecting that answer. Would you care to elaborate?
I mean, it's pretty obvious, but I think
It's not obvious to me. Go ahead. Why?
Well, I don't know, because if a company like Bullish comes out like last week and they have a like a $33 price and it opens at 110, I think that's like a red flag.
Why is it a red flag? Like they don't know what they're going to do. Like they tried to set their price within a range. Like how is that within their control?
They don't set the price.
Right, but how is that a red flag then?
Well, it's a red flag because people are just buying stuff at any price. Doesn't matter.
Okay.
And so I think that's my red flag. The IPO market is one of the markets to me that seems like it's very much out of control.
Okay. What's BLSH doing this morning, Bat?
It's down about $2, maybe $2.25, 7 and change. It does have options. There's some open interest in them. Some markets are a little tighter than others.
But I mean, this is here's my example.
Here.
So the stock comes out, let's say 33. I don't know what price they actually offer.
Mm-hmm.
It trades 110 last week,
Yes.
first day. Now it's 67. So here's what they did. Now remember, you can't short the stock.
Right.
So everybody piles on because they think they can sell. It's just a game. It's a stupid ass game of thinking, hey, I can sell to the next idiot a little bit higher. That person's like, I can sell to the next idiot. And then they all get caught.
Well, they ran out of idiots?
They ran out of idiots.
Oh, no.
And now it's down $50 from there.
Okay.
Okay, now it's probably closer to the range where it should have opened. Mm-hmm. But the fact that it did what it did shows me that right now that the amount of money out there for trying to like speculate
the appetite.
The appetite for speculation, just to take advantage of somebody else's stupidity, that's what makes the market. That's what's a red flag for me.
I've made a living doing that on the show with you.
Conversely, as part of that spectrum, I think CoreWeave is, very close to the end of their lockup period. So sometimes that creates...
I think their lockup period was over last week.
Oh, okay. So then that tracks then. I was like, because I knew it was close, so I wasn't sure what the actual date was. Was it Friday?
And as foretold, CoreWeave was up $2.50.
Well, we weren't on the air Friday, so...
Now, interesting thing about CoreWeave was on Thursday night, we sold... I've never seen this before. With 1 day to go and no earnings, because of all the lockup talk in CoreWeave, we were able to sell a dollar strangle 2 times the expected move with 1 day to go. I have never seen that before without a binary event.
Right, yeah.
And we ended up buying it back for, I think, 8 cents.
They were just pumping it in there.
Yeah, we bought it back for 8 cents. But I mean, I've never seen that before.
Hey, in other news, the Federal Reserve on Friday announced they were scrapping a so-called Novel Activities Supervision Program that they created specifically to police banks on their crypto and fintech activities. Instead, the Fed will integrate that work into its regular banking oversight. What?
What do you think of that?
Nothing.
I thought you'd be pleased about this.
I'm going to pass on my comments. I'm going to wait.
What?
I'm going to hold them in because this is.
Until you can discuss them with someone with a penis?
Yes.
Okay, cool. Love that for me.
Man, that makes me feel bad being in the room.
All right, fine. I'm gonna move on.
Penis that works.
I'm gonna move on. No. I'm going to move on. The Winklevoss twins, Gemini, is filing for IPO, but with that comes the transparency of what they are doing. And we learned that Gemini's revenue fell and losses widened in the first half of 2025.
What do they do? They could lose money.
Hold on. They reported. Do you want me to do the numbers, or do you want to? Okay.
I want to hear the numbers.
The company reported a net loss of $282.5 million on total revenue of $68.6 million in the 6 months ending June 30th.
Okay. Stop for a second.
Yeah.
So in 6 months, they did $68 million in revenue and lost $250 million.
That's right.
And now they want to go public.
That's right.
And you don't think that that's a red flag? How can we,
And you don't think that's worse than having an IPO? I think that's worse than having.
I mean, it's insane.
The company supports 70 cryptocurrencies and operates in 60 countries, and they confidentially filed for IPO in June.
And they're going to be worth more than we're worth as a firm, and we make $1 billion and make $500 million a year.
Yeah, but we're not led by 6'5" twins.
Yeah, that's the problem. We're led by one long-haired hippie freak.
And twins. Yeah. Okay. Bat, what's crypto doing to start the week? How about that?
It was having a good night. It was having a good night last night. Something happened overnight, and now it's 115.4, down about $1,800 after trading up to 118 and change last night. So the middle of its range, low end of the middle of its range.
What are you doing in crypto?
Nothing.
Nothing?
Nope.
What about Coinbase?
Ooh, you always get me with this.
Coinbase?
Yeah.
Down $7.
Oh no.
Yeah, that's significant. Coinbase hasn't had the best of Julys. I know we're in August right now, but after it traded up to about $420, it's flirting with 310 right now.
I think you were able to catch this live on stage during the show, but United Healthcare shares logged their best day since 2020 after Warren Buffett unveiled a new stake in the company. United Health shares soared after Warren Buffett revealed a stake of 5 million shares worth about $1.6 billion. Tell me a little bit about your UNH trade Friday, right?
Wasn't good.
Oh. Did Warren Buffett know you were live on stage and he's like, oh, this diva?
Oh, no. First of all, we didn't trade it on Friday.
I thought you did. My bad.
No.
Okay.
No, we were going to, but since the news came out, we decided
we were
not.
going.
Gotcha. Okay, I understand.
But
okay.
I had my own position on in there.
Okay.
Which did not work out.
Gotcha.
Up
Is
another
there
$8 this morning too?
how much?
Up another $8 this morning to 312 or so.
Why are you making that face?
It was at 304 after.
You were like, what are you gonna have to do? What are you gonna have to adjust in there this morning?
I just got to widen my strikes.
Okay, good luck with that. Hey, this is interesting. Open Door, the little sort of meme stock bat, it's just open, OPEN. Well, Open Door CEO Carrie Wheeler said Friday that she was escorted out of the door following an investor pressure campaign. First, the reports came out that she was resigning, but then she took to her Twitter and said that she was fired. I don't know what's true, but investors
Usually when they walk you out, you're fired.
Yeah, investors spurred a big rally in the beaten down stock, then led a pressure campaign against the CEO. I don't know if there's any opportunity in Open.
Where is this stock trading right now?
OPEN trading around $3.28. It is up a dime on the Vanilla News.
Okay. I know it's like a little sort of meme stock, so there you go. OpenAI, this is crazy, is in talks to sell $6 billion in stock at a $500 billion valuation. Be so for real. The shares would be sold by current and former employees to investors, including SoftBank and other entities like that. Last week, OpenAI announced GPT-5, which everyone just hated, and then they had to walk it back. But are they worth $500 billion?
I have no idea if they can sell. Well, here's the thing: they're selling. The insiders are selling the stock.
Yes.
I mean, who would buy a stock at $500 billion that the insiders are selling?
Well, it's going to $1 trillion, so you get in on this level. I don't know.
All right, I don't know either.
Yeah. Bat, what's Microsoft doing? Because you can trade Microsoft.
You sure can, and that's usually the one that people gravitate to. $520 and change, up around 30 cents. It's been going kind of sideways the last couple of days. Haven't been able to hold rallies. Listen, it's just off of its just off of its highs, but it hasn't been able to hold rallies.
Did you trade Oracle on stage Friday?
Maybe.
Okay. Well, could Oracle become a $1 trillion company? One analyst is charting the course. Oracle is said to be a disproportionate winner in AI, and its growth is picking up. That's according to Mizuho analyst. They're hovering near $700 billion market cap, but they only see blue skies ahead. What are your thoughts?
I'm so happy for Larry.
What can we just talk about the stock though? What are you doing?
I'm not doing anything there.
Oh, okay, what's the stock doing to you?
It's not doing anything to me. I don't really care.
You do.
When have
care.
you done anything in Oracle South? No, if it is near its highs, 247 and change, maybe down around 50 cents.
Okay.
Ivy rank of 62 though does percolate a little bit in there. Earnings are September 8th.
Oh yeah, that IV is juicy.
Mm-hmm. That's one of
good.
the higher ones.
The President Donald Trump's administration is eyeing CHIPS Act funds for Intel in exchange for a stake in the chip maker. What are your thoughts on the administration taking a stake in Intel?
I don't know why they would, but I didn't know that's what we do now.
Yeah, well, but you have a position in Intel.
Not anymore. We covered it last
Okay, you're like, not anymore.
I mean, we covered it last week because it worked. You know,
Okay.
Occasionally we played, not occasionally, but we played the Intel game last week and it worked out nice. Now Intel's $24, down about 50 cents this morning. It had a huge move last week. It moved almost 20%.
Are you doing anything in any of the other chip stocks, like in NVIDIA or in AMD?
No.
Okay.
Usually the government does something during, like bank failures and stuff like that, right? And
Ivy rank in all these stocks, except for Intel, is super low. And right now, I don't like the risk reward.
Okay. Here's something interesting. Samsung is taking market share from Apple in the U.S. as foldable phones gain momentum. In the second quarter, shipments from Samsung surged in the U.S., with its market share rising from 23 to 31%. That's not nothing.
I want a foldable phone.
You do not want a foldable phone.
Why?
Last month, Samsung introduced 2 new foldable phones, one that can effectively turn into a tablet and another that resembles an old school flip phone, but with modern features. Apple themselves is also said to be working on a foldable device, but no end date when that's going to get delivered, though.
Where do you buy a Samsung phone?
At Best Buy. You buy them at Best Buy. I like how I just answered questions about general life for you.
Well, I don't know.
You're not going to buy a Samsung foldable phone.
Why?
Okay, I'm sorry, you are. Go ahead. Go off, Queen.
Well, I'm sick of butt dialing people.
I tried to fix it for you, but...
It doesn't work. Yesterday, I butt dialed 2 people.
So keep your phone in your purse. I don't know what to tell you. Don't put it in your pocket. Bat, what's Apple doing this morning?
Why can't Apple build a mechanism so that your phone doesn't butt dial?
Why are you being Andy Rooney about this?
It's called turning it off. Yeah, they have that. You turn off the screen and then you can't butt dial.
You can lock your screen. Do you have locking screen on your phone? Is your phone locked or unlocked?
Unlocked.
Okay, so if you put a lock on it, then you wouldn't butt dial people. I can help you, but you have to want help. Hey, Apple Watch is getting reformulated. They're bringing back blood oxygen monitoring. In early 2024, Apple removed blood oxygen monitoring feature because it violated the light-based pulse oximetry patents from a California-based company called Masimo. Apple found a clever workaround where now the data is just aggregated on your phone. But anyway, if you have an Apple Watch, like I do, an Apple Watch 8, 9, or 10, you now have blood oxygen monitoring back. You do need to download the Apple update, and then you can get that turned back on. So Do you have an Apple position? No?
We do. It's a small position.
Okay.
Yeah.
Meta is planning their fourth restructuring of AI efforts in 6 months. The company is expected now to divide its new AI unit, Superintelligence Labs, into 4 groups that will then focus on AI. But Meta's AI now facing some political scrutiny. Senator Josh Hawley is investigating Meta for their AI chatbot that is having quote unquote sensual conversations with children. What are we doing? I hate this. What are you doing in Meta?
I have no position now. I'm looking to get shorted.
Okay. Bat, what's the IV in Meta?
That's his story. He's sticking to it. But Meta, on the other hand, is trying to say something else. 779, Sadov. Might be too late to short it. Down $6 this morning after flirting with new highs.
The Data Center Coalition, the DCC. I didn't know there was a Data Center Coalition. The only DCC in my heart is the Dallas Cowboys cheerleaders, DC, America's sweethearts. Anyway, the Data Center Coalition, which represents data center owners, including Google, Amazon, Microsoft, is calling on U.S. Treasury Secretary Scott Bessent to uphold existing rules for wind and solar subsidies, saying they've enabled the industry to grow quickly and to stay ahead of competition in China. Of course, inexplicably, we're getting rid of a lot of our clean energy subsidies, and then the data center companies are like, hey, we should keep these because we're going to go through a bleep ton of energy, and yeah, we're passing those costs on to people. Have you noticed your energy bill is a lot higher? It sucks in Illinois. Yeah, it's AI. It's AI. It's all AI data centers. I'm like, I don't want to pay for that. But they are hoping that the subsidies get turned on because wind and solar subsidies obviously could help offset the massive power consumption needs of these data centers. So just keeping an eye on that. In other news, criticism of Roblox for its child safety measures is starting to spook investors. Louisiana has sued Roblox, alleging its lax security protocols make it easier for predators. Other states are also looking at similar legislation. The stock fell as much as 10.6% on Friday.
Down another 2 this morning.
What are you doing in Roblox? Are you okay?
Yeah, I've been shorted.
All right, gesundheit in advance.
Roblox was the most overpriced stock I've ever seen. I think it got up to like 130, 140. Such a joke.
Bat, what's Roblox doing this morning?
Good
Down
question. IB ranked
Down
at 43. It is, well, almost down 2. I would say 1.5. After making highs that were flirting with 150, it's sitting at 115 and change.
Did they have earnings already?
Yeah, they already had earnings.
So the IV is high in spite of them there being post earnings. Okay.
It's in the news.
So then that's good. So I'm just saying it's something that's in play.
Oh my God.
Oh my God. Shein and Temu are expected to raise prices due to the de minimis loophole closing this month. The trade loophole that allowed for low-value goods around that $800 threshold to be shipped to the U.S. duty-free is ending August 29th. So Shein and Temu, fast fashion brands, obviously were taking advantage of this. But bad news for Shein and Temu means good news for Amazon. So you can look at PDD, which is Temu, and you can look at Amazon. That's it. That's the tweet.
Amazon, Sadnov, you care?
No.
AMZN is trading at 230 on the bid. That would be down around $1. Ivy rank is only 6, basically sideways.
And PDD?
PDD, haven't looked at that. PDD is trading at 119, up about 25 or 30 cents, sideways-ish to higher.
You're not doing anything in the Chinese retailers like a Baidu or a Baba?
Nope.
Either? Okay.
Ivy rank is 37. Earnings are August 25th.
We are long JD.
Oh, so they're this week. Okay. Oh, you're long, JD. Netflix could soon be losing the creative team behind one of its biggest hits. Variety and other Hollywood publications report that the Duffer Brothers, who created the iconic Stranger Things, were in talks to sign an exclusive deal with Paramount, now under the ownership of David Ellison's Skydance. Stranger Things, massive hit. But the show is dragged on so long. The kids are literally 25 years old now. I have not been able to keep up with it, but I loved it the first 2-3 seasons when it came out. But now, taking 3-4 years between each season, I was like, I don't even know what's happening. Are we still in the upside down?
I've never seen one episode.
It's really good. It was really good. It was a sensation. It was well written, heartfelt, all that jazz when it came out. But they got to get that money, I guess. What's Netflix doing?
Stranger Things was horrible.
Okay, well, it's not for you. I'm sorry, it doesn't compare to your shows of pegging housewives.
That's correct. Now that was good. That was
what
good.
Are we doing? I watch a wholesome show about kids growing up in Indiana in the 80s, but
people want to be entertained. Who gives a crap about
go
kids
off.
in
What's Netflix doing? Can we talk about Netflix, the stock, please?
Sure, we could. Netflix is trading on the bid $12.34. That would put it down around $3 or so.
Do you have a Netflix position? No.
Even the S&P down 7, Nasdaq down 37, Russell down 1, and the Dow down 10. Market's basically unchanged.
Sad news to report. We're sort of seeing a crisis in the fast casual segment of the American restaurant market after disappointing earnings from Cava and Chipotle and Sweetgreen. Sad news to report. Noodles and Company. I love Noodles and Company. They're closing 32 locations after a revenue decline. They announced last week that they'd be closing 32 company-owned locations by year's end. The Colorado-based chain has been operating since 1995, specializing in classic pasta and noodle dishes. Delicious. They reported a net loss of $17.6 million. Hachi machi. I like their Japanese pan noodles, no mushrooms, with chicken.
Noodles and Company is gross.
It's good. It's good for what it is.
It's absolutely disgusting.
In the winter, like a nice hearty bowl.
When have you been there?
Or their
I thought they all went out of business.
They did not go out of business. They have 400 locations.
Oh.
But then they're only closing 32 of them. So I don't know what to tell you. What are we doing?
Honestly, I couldn't even tell you where there's a location.
There's one in the South. There's one in the South Loop. That's the one I go to.
Mac and cheese is edible for a child. The rest is disgusting.
Okay, moving on. Nike co-founder Phil Knight is donating $2 billion, yes, with a B, to the Oregon Health and Science University's Knight Cancer Institute. The Knight Foundation says it's the single largest donation ever to a U.S. university, college, or health institution. That's admirable.
Good for him.
Good for him. So, because I believe research at colleges.
Good for him.
I believe research at colleges is important. I know that that's a radical belief now.
Good for him. Good for Phil.
Nike, NKE bat. I don't know what Nike's doing.
Nike, we haven't traded that in a while, but Nike is hanging out at $77-ish. That would put it, kind
of mid-range.
Sideways, yeah. Mid-range.
It is traditionally like the last to report earnings, so I know that they've got still earnings on the horizon. Hey, finally today for my viral video of the day. Oftentimes when you travel to a foreign locale, you gotta just be aware of your surroundings because just keep your head on a swivel. But this, I've never seen anything like this in my life. Here's what happened when a man was just trying to take a shower in India. Watch this.
Leopard.
No, it's a tiger. The way I would literally try to pet this cat. He looks friendly. He doesn't look angry. He just looks curious.
He looks stuffed is what he looks. He's coming through the vent?
Well, what does he put his head through?
Like a hole in the wall?
Looks like a vent?
Yeah, it's just a hole in the wall. Mind your business.
I'm not judging. I am going to look.
You know how you have construction projects at your house and you tell your wife, yeah, I'm going to get to it? Well, that.
That's what happens. You get the Bengal tiger.
Yeah, when you're like, 2 more weeks, honey. Well, that's what happens. And then a tiger pops his head in and is like, Candy Graham.
Hey, is that a tiger in your bathroom? Or are you happy to see me?
Oh my God, I would try to pet it. I would try to give it kitty cuddles.
I don't think you would.
That is my toxic trait. Anyway, hey, that's my time. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got confirm and send for now. Goodbye for now.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with confirm and send. But before we do, let's check out what the market's doing. Even the S&P is down $6.25. They were up around 8 handles for most of the night. They've had a pretty tight range here of just under 30 handles with an expected move for the day of about 30-ish handles. So I don't know, see how that works?
I saw him up 12 and like down 12. So that's been the range I've seen.
Yep. NASDAQ down 34, Russell up $1, and the Dow down $1. Basically unchanged across the market.
You know, if you came out to the show on Friday, we thank you. The Bat and I tried to talk to as many people as we could. Scott was there. Vanetta was there. There was a bunch of Tasty Trade researchers. Dr. Jim came in. So it was like a full house. We had about 20 people from Tasty over there. And if you came to Chicago, thanks so much for coming up to Talia Hall. The place is beautiful. It's funky. It was fun. I know they could have had a better screen, but we did our best. It was fun trading. We made a little bit of money, which is always a nice little kicker. And just had some fun. And then if you joined us last night on the Sunday night show, thanks as well. Kick off every week with a Sunday night show at 4:55. Although next week, Tony and I will both be out of town. Chris, Ilya, and whoever else joins will be on Sunday night. So every Sunday night, 4:55. All right, you ready? It's 7:55 right now.
Beautiful. Let's do it.
And Monday August 18th. We'll tell you about our next live show. Our next live show is actually going to be, well, this week it'll be in Mexico City, and then after that, I think it's San Francisco, right?
Yep.
In September, we're in San Francisco and New York. So those are our two main cities. Next week, we'll be in Mexico City and Guadalajara. Let's go back to the slides. Confirm and send, John. I'll go back to this in a second. So, emails that came into us over the weekend, and from just viewers all over. Can you explain what you mean when they say puts or schmutz? I am trying to understand, because as of now, it's my favorite strategy. What am I missing?
Yeah, I mean, we sell puts, right? So when you sell something, we sell options. When you sell something, you don't want it to be worth anything. And I forget what schmutz means in Yiddish, but I believe it means basically nothing. Like it means it's not worthy of any time, money, or aggravation. So, why buy puts? They're schmutz. They're not worth anything, so we should sell them. And that's where it comes from.
You didn't take Yiddish in high school?
I did not. I don't even know if that's the proper spelling for it, to be honest with you. But yeah.
I don't know either.
It might even be slang for, it's like dirt or something like that. I don't know.
Our schmutz. It's the first. I mean, we have said that on the show many times.
Yeah.
The market has what we call positive drift, which means over extended periods of time, the market goes higher. That's why people invest in the stock market, because it goes higher over time. And, you can get a rate of return that exceeds risk-free rates. Otherwise, why would you ever invest in the market? So we have the single best strategy going back as long as there's been derivatives, options at least, is to sell puts. Now, it scares the children sometimes because they also, down moves have a lot of velocity and things like that. But you're not missing anything.
Right.
It's your favorite strategy now, because whenever you started trading the last year or two, you never took any heat, or maybe a little bit in April.
Right.
Let's go to the next slide. Maybe more than a little bit. I heard you say that when the VIX is between 10 and 15, you recommend using no more than 25% of your net lick. My question applies to naked puts. When considering that allocation percentage, are you referring to the buying power or the notional if you were assigned the stock?
25% of net lick. My question is it for the buying power or notional? It's always about buying power. I mean, that's what we're looking at when we're changing the amount of money that we're using. Net lick and buying power are I guess not the same thing, obviously, but it's the percentage of buying power we're using to net lick.
Yeah, I mean, there's a couple things in here that we need to cover. The answer to your question is that we use buying power. We're never going to use notional. So we're going to use buying power as it relates to net lick. But the first part of your question is, if the VIX is between 10 and 15, we're kind of where it is now, no more than 25%. That is the most conservative case. And the most aggressive case would be over between 50 and 60%. And so we have a conservative, a moderate, and aggressive case. This is the most conservative case. The moderate case is probably, let's say, 35 to 40, and the aggressive case is probably 45 to 55 in a really low VIX. Sure. Right now, just to give you an idea, we are hovering around the 20% number. We're not even at 25. We are very underinvested right now just because of the low implied volatility, are kind of all around. Let's go to the next slide. Do you have any hard and fast rules for assessing whether you are using enough buying power at a given time? That's what we just talked about. For example, I'm using 21% of my buying power in my taxable brokerage account. That's close to what I'm using. Given that the market is at all-time highs, I feel comfortable at this level of buying power utilization. However, is there an objective criterion that I can use to assess whether I have deployed too little or too much capital at any point in time?
I mean, an easy way. Yeah. I mean, I'll give you a pretty wide range. You're in the 21% range. I like that what you're doing there, your buying power, using it against your net lick, which we just talked about a moment ago on the last question. Everybody's risk tolerance is a little bit different. I mean, mine would probably be somewhere on the low end where you are in the 20-ish range, and the high end probably in the 50-ish range or more. I mean, there's been times in the market, I don't think the implied volatility or the way the market has behaved at all-time high warrants anything more than that. But there are times when I've been, 75, 80, 90% or more of my buying power.
Yeah,
but again, 20 to 50%, I think, is a pretty conservative range.
I think you've articulated this nicely. And, I can understand 20. I'm right around there myself right now. But is there an objective criteria? I mean, it's a little bit of common sense. I mean, we have, again, like I said, we have a conservative, moderate, and aggressive case. And I think the most mechanical way to do it is based on, where the VIX is trading. If you've got a better idea, I mean, there are people that will do certain things based on the amount of liquidity in a certain underlying, or, the amount that they want to commit to a specific product. But as a retail investor, I think it's best to do it on implied volatility. Let's go to the next slide. In the last 2 months, I've been trading SPX 0 DTEs. And I think I am seeing a weak correlation between higher VIX one day and losses. In reviewing my trades, I'm seeing more losses when the VIX one day gets above 9 and more winners when it's below. Why do you think the threshold is so low?
My trades are seeing more losses of VIX one day gets above 9. I'm seeing more losses when it gets above. I don't know why the threshold is so low. I mean, that's really basically volatility is supply and demand. I mean, you can get as crazy as you want with trying to figure out why. It's just supply and demand. A higher appetite for taking off risk brings volatility higher. I don't know. I guess when we're starting with such a low implied volatility and you're putting on these 0-day SPX trades, you don't have any leeway with volatility contracting intraday to make up for any of the moves that you get. And when you get a move that's, so small, like we have today, 30 handles, or sometimes it's even less than that, any type of movement outside the range, it's really just delta, and there's no volatility component to it to contract. So that would be my answer, probably. Hard one to answer.
I'm just gonna say that I have no doubt that what you are saying is what you've experienced. But our research going back 2.5 years shows that that whether the VIX is high or the VIX is low, I'm talking about VIX one day, whether the VIX one day is high or it's low, your winning percentage is going to be the same, but you're going to make more money when the VIX one day is high. I think what you've and we have a lot of quantitative research that supports that, meaning that if the VIX one day is low, let's just say you have an 80% win rate if you manage early. If VIX one day is high, you still have an 80% win rate if you manage early. The difference is you make more money when the VIX one day is high. But I think what you've seen here is recently, because this is like for the last 2 months, like you're saying, what you've seen recent last 2 months is we've been grinding higher. So the VIX one day, when the VIX one day is low, it has been a winner every time, because you're only looking at the last 2 months. So I think that within the context of what you're saying, sure, but the reality is, using our research, there's no difference, and you make more money when the VIX one day is higher.
Yep.
Let's go to the next slide. I think it's just the last 2 months have been very good for that trade. Is there a way I can see my overall cost basis on a trade through all my roles? I've been fighting a position for a few months, but I have no idea what my basis is at this point.
Fighting a position for it, but I have no idea what my basis is at this point. When they say cost basis, are they coming from a place where they own stock and selling calls, or is this just an option position, Tom?
Just an option position.
Well, your cost basis or what you're short the product at should be right there inside the Tasty Trade platform when you look at your chains feature that shows you how much all your credits are that you sold this position for. That's your cost basis if we're using that as what is your high watermark or low watermark on the trade.
Yeah, I mean, we spent a lot of time, a lot of coding dollars building a feature called chains, order chains. Yeah. And we're the only platform that I know of that has such a feature. It's really one of the coolest things about Tasty. It is in your right-hand gutter. Is it possible you could pull up, Tony?
Let's see. Possible.
I just don't know if we can pull it up. You know what? We'll try to do it during the next break and show you.
I can get a screenshot of it. It'll show all the positions that I have.
Yeah. Let me pull it up during the next break and we'll show you where it is. But there's an icon. There's an icon that is in the right-hand gutter. The second icon down. And you can click on that. It will show you all your history for every trade, including all the rolls. Really good.
That is correct. Hold on, Sosnoff. Give me a thing here. I can do this if you want. Hold on. So here I go down to these little lines. If you go down to these little lines, if I can click it real quick. Well, I'm having problems showing this, but if you go down to the little lines right here, it's the second one down. I don't know why it's not clicking for me right now. Can't get it to show on this.
Popped it out.
It only shows it shows the screen, Sosnoff, but it doesn't let me have the functionality to punch on it.
That's fine. Let's go to the last slide. I had a 3 standard deviation move on a strangle after earnings. Nick and Mike don't normally invert more than the credit received. I followed that advice, but the move was so big that I still have 80 deltas. Do you ever go over the credit with your inversion to bring your delta down more? I think I'm just a little confused about the role of intrinsic value compared to the credit received.
I'm not 100% sure what Mike and Nick do. They probably change the position from there, either closing it and opening up a new position or go from inverted to a regular strangle or something like that. That's my guess. But I'm looking to reduce delta all the time. So I don't think I would be 3 times standard deviation, strangle that wide, that inverted. I would probably at that time buy the guts and sell the wings, or buy the guts and come up with a new position. Remember, you don't have to make the money back right in that position itself. You could stay in that stock if it's got tight liquid markets, high implied volatility, etc. But you don't have, the market doesn't care, the platform doesn't care, your family members don't care how you make the money, just as long as you make the money. So for me, I probably wouldn't be staying in this strangle at this time. I'd probably, again, if it's going to the downside, I would probably have some sort of long delta on. If it was going to the upside, I'd probably have some short delta on.
Anytime you get a 3 standard deviation move, I mean, with Nick and Mike, they the key word here is normally. And but there's certain circumstances, like a 3 standard deviation move, when normally goes out the window. Personally, I don't care about inverting more than the credit received. I'll do whatever I have to do to reduce the delta. So the reduction of delta is way more important than the credit received. So although they don't normally do it, they would do whatever they needed to do to reduce the delta as well. So in this case, we would either recenter the trade or go as inverted as you have to. Listen, the deltas, when you have a bad position on, the deltas rule. It doesn't, nothing else matters. Okay, your job is to reduce. The necessary adjustment is to reduce the deltas. That's it.
Very good, sir. Let's take a quick 90-second break. Quick one, Sadno, because even the S&Ps are down 375. Let's do a quick one before they turn green. We'll be back in 90 seconds because we've got an option jive next.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful...
no, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York when I was a young kid. I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that, Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's Option Jive. Option Jive, Sosnoff, you are 100% correct. Even the S&P is down 7, NASDAQ up $1.50. But you know what? We got an Option Jive. Go.
It's all over but the crying.
All over but the crying. Biggest mover on a percentage basis, nat gas down 4.5 cents, Sosnoff, followed by Bitcoin.
Nat gas hasn't had an uptick for like forever. I'm a little bit long it here, but I always get like, it creeps me out when nat gas doesn't have an uptick for like 3 months, because I know when it does.
Don't worry, seasonality is coming. Winter.
I know when it does, it's gonna rip your face off. Yeah. I'm staying long that guess no matter what happens. Go to $1, I'll be a little bit long it. Yep. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. We are 1 hour and 15 minutes into the morning. We'll have this segment, and then we'll take you through the opening bell. Looking forward to it. I like to hear. I was telling the story on Friday. I like when I'm either going through airports or I'm on an airplane, or you're at a restaurant and you hear or you're in a coffee shop and you hear the tasty opening bell go off. Yeah.
Or the opening bell.
It's happened to me in a restaurant before. It's happened to me in an airport. Or you hear the ding. I love the ding. When you hear the ding, I feel like, feel good. All right, let's do this. The theta threshold. How much is enough? Let's go to the first slide, John. Theta is an important indicator that gives premium sellers the potential to make a fairly accurate prediction on their daily profit loss. If we're able to collect and keep 0.1% of the total asset value per day with everything else kept constant, we estimate an annual return of 36%. Let's just be realistic here. But we're just doing it super simple because people say, hey, what should my number be? Right now, by the way, my number is really low. And like in April, my number was really high. So these numbers will fluctuate a lot. Like in April, I was hanging out at like the 0.3%. Now I'm probably hanging out at the 0.01. I'm guessing. Sure. I don't even know.
Which is what I was trying to say on one of those confirmation questions.
Let's go to the next slide. But we are not suggesting that everybody that just sells premium is going to make 36%. That's for just a starting point. Yep. So for a healthy portfolio, how much theta should we have each day? Well, to test it, we simulated a portfolio with $1 million with 25% capital allocation. So you're allocating $250,000. Trading 45 days, 16 delta SPY strangles. We monitored the daily theta ratio. That's theta divided by asset value or net liquidity value. And all the positions were held to expiration. Okay, let's go to the next slide. Without any management, the median daily theta ratio is 0.1% of the asset value with a range of between 0 and 5%. Okay, like I said, sometimes it gets, and again, this is at expiration, so you pick up much bigger numbers as you get close to expiration because it's not the same. 45 days out, it could be 0.1%. 1 day out, it could be at 5%. You got to be careful. Yep. We manage a 21 DTE to remove all that high risk. Low is not risk. So we remove all the high risk by managing at 21 DT. So the median asset value doesn't go much over 1 to 0.2%. Like that's all it is. And then it starts to accelerate from there. Let's go to the next slide. So managing positions at 21 days can get a better long-term return with less fluctuation. So what's the theta ratio look like when we manage early? And you can see right here, it's the average is a little over 2, as opposed to a little over 3 5/8. Let's go next slide. So interesting, the median theta ratio still stays at 0.1. However, the range of the theta ratio is much higher, indicating lower volatility in the expected P&L. So exactly what I said before. Barely move the dial when you manage at 21 days. See, if the median is always going to be 0.1%, that shouldn't change. But the high goes from 0.6% when you manage at 21 days to 5%. These are the highs when you go all the way to expiration. It's crazy. Let's go to the next slide. That's why you have to manage early. Using 25% capital and options can yield a better return than a buy and hold strategy. The SPY, it could. Might not, but it could. So the ratio of realized to expected returns from theta is around 1 to 4, meaning that for every dollar realized in profits, investors should expect to have an average of $4 in theta on a daily basis. Again, this is the best case, most straightforward way to look at it, with no issues. Okay, there's never a time when you're trading where you have no issues. This assumes no issues. And so here you have your expected annualized return on capital, the 20-year annualized return on capital, and then your realized theta return. Let's go to the next slide. So some of the takeaways. And again, it's just a very broad view of theta just because it's important. By allocating 25% of your capital, we could generate a daily theta of 0.1% in a portfolio. I'm going to tell you right now, if you try to do that now, it's pretty hard. Like, to generate 0.1% in theta using 25% of your capital right now would be next to impossible.
Yeah, you're going at the money closer,
volatility is too low, and don't force that. Managing early can help to close the gap between expected and actual. And to achieve the desired return on capital, traders need to generate a daily theta of at least 4 times the expected return. And that's really hard to do when volatility is low.
Absolutely. Good job out of you.
That's all I got.
We'll take a quick 90-second break and come back. We got more Tasty Live. Even the S&P is still down 6. We'll be back in 90 seconds. This is Tasty Live. Opening bell.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live with the opening bell here in about 3.5 minutes. Even the S&P is silent. They haven't moved since we've been on the show now for about an hour and almost a half. They're down 6. NASDAQ down 32. Russell has always been the one that's been green. It's been green all morning, ever so slightly by 80 cents. The Dow is down $4. Volatility completely unchanged. You'd see here it's been down to 1835 up to 1860, basically mid-range right now at 1845. Bonds up 7 ticks. They've traded up to 18, down to 1. They're sitting at 114.07, mid-range for the day. Bitcoin, which was a lot higher last night, take a little bit of a beating this morning, down 1,200, back down near its lows of around 116. I mean, it's been lower into the 112, 13 handle about 2 weeks ago, but sitting at 116 right now. Ethereum down 31 cents, oil down 4 cents. Gold has been higher, over 3,400. It's 33.88, up $5. Silver up 24, actually a larger percentage move right now. And net gas down 4 cents. Sadnov, what are you thinking about here? Palo Alto Networks, Home Depot, Medtronics for earnings. Probably not the movers that you would expect, to move the market here. So what do you think about the market, I guess, is my question. Here we are sitting just a skosh off at all-time highs.
Well, you should have watched the show last night because you would know what I'm thinking. But instead...
Darn. I took the cliff notes, but I thought maybe everybody else
and you could have watched it afterwards on replay. But instead...
Darn.
Now you're trying to ask me to repeat myself after I gave it.
I hate how you like to repeat yourself. I mean, I haven't heard one of those stories from 40 years ago, not 15 times.
So all I'm going to say is when I'm no longer part of this world, when I'm long gone, okay, I don't want you using my stories as your stories. Okay.
What are you talking about? I do that now. Why? I'm not waiting for you to go. I said I built Thinkorswim. I built Tasty Trade. I actually produced Case. I mean, there's so many things that I already say I do. Are you kidding me?
Okay. Well, judging from
why not? Everybody else seems to do it. I mean, if you say it long enough.
Judging from her attitude, I'm.
You're right. I would be too dominant of a gene to have her be like that. You're 100% correct, Sadnov. You're right.
Yeah,
You're right.
I'm pretty sure she got that attitude from
from Mama Bear.
Yeah, from her mama bear. Because that kid, oh my God. I said, we had a barbecue at my house last night, and I turned to her husband, and I'm like, I don't know how you do it. I don't know how you do it.
I don't know how you do it either. Sadnov, opening bell here is imminent.
Yeah, I don't know what I'm supposed to do.
Well, first thing you're going to do is look at stocks that move, one way or the other against positions that you already have. I don't think you're going to be looking for anything new right now. Bonds are higher, which is better for you. Gold is there. Oil's been kind of getting a little bit of a down.
It's crapola. Oil.
I mean, it's down on the low end of its range for sure. Well, there's your opening bell, Sosnoff.
You know,
Opening bell.
only thing I want to mention is sometimes when you get to the late stages of earnings, you get the nasty ones, you know?
The ones that are less widely watched and move outside the expected move kind of thing.
Yeah, like the way outside the expected
low
move.
implied volatility.
Yeah, the ones that hurt.
Yeah.
Like I'm looking at Palo Alto Networks right now. It's not that rich.
No, but I tell you, the ones that are moving right now, First Solar Sosnoff up $16. That's a big 8% move. I don't know if you have a position.
Because they just announced that they might. That means ENPH is probably going to be higher. Yeah, it is, and that's good for the good kids.
ENPH is higher by $2. UNH is higher by $7. Netflix is higher by $5. CVNA, also known as Carvana, up almost $5. Lulu up almost $3. Chewy up almost $3. Sosnoff, where's the stocks we trade? Oh, there they are. Microsoft up $1 and change. Tesla up $2 and change. Baba up $1.50. Let's see what's bringing the market lower, Sosnoff. You've got Meta down 18. That's the big canary in the coal mine right now. Ivy rank is only 7, a 2.5% move lower. Coin down $5. MSTR down $3. AVGO down $2. And your beloved Oracle down $2. Roblox down $2. That's all I got.
Yeah, I'm going to have to roll up some calls in your. First of all, this is a tough stock to trade. UNH.
Mm-hmm.
It's a tough stock. Well, got filled somehow. And I'm checking out PANW.
Okay.
I don't know, Bat. Markets are wide. I don't think it's a great earnings play.
Agreed.
I do not think it's a great earnings play. Okay. All right. Worst performer out of the chute, UNH up big. That's it. That's my worst performer. I think they owed us a little money from Friday, but I had this talk last night with Chris, and first of all, a couple things. A lot of money was freed up, because of expiration and all that kind of stuff. They talking about trillions of dollars, and but what I found interesting about the markets is how many options are trading, because people are speculating in equities, but the futures markets are kind of quiet. And one of the things I said to Chris, there's two questions I'll ask you. I asked Chris and Ilya both the same question. On a scale of 1 to 10, where do you think we are complacency-wise right now?
I would say we're extremely high. Well, so 10 being the highest, I would say we were at 8.5.
Okay, Chris said 7. Ilya said 15.
Okay, I can see Ilya's point of view.
And you're saying 8.5, which I would agree is very high. I would say on a scale of 1 to 10, I would say between 8 and 9. I like that. 8.5 is good. That's okay. And that's cause for concern, right? That's reasonable cause for concern.
Sure. Anytime there's complacency, it's cause for concern in anything that you do.
There's a record amount of
there's a reason why they say it when you least expect it. I mean,
yeah, right. The futures volume is really low, which makes me think, do you know anybody that's short right now?
No, not with any type of size. Right. Sure, individual products and everything else like that. Right. Yeah, but I don't think we get, because volatility is so low, if we get two-sided action, which we have not had, but if we got two-sided action, I don't think it's the big kind of sell-off that somebody might be expecting. I think it could just be the stair-stepping down that we've had on the same way of the stair-stepping up for, 4, 5, 6% kind of thing that prolonged month-long kind of movement lower where everybody's trying to buy the little dip and it just doesn't keep coming, like that kind of thing. And they take some of the higher flyer stocks, the AVGOs of the world, and reduce their market cap a little bit. And some other stocks that we don't trade that much kind of come back into play. That's what I think. I don't think we're going to have a complete meltdown. That's my thoughts.
Well, up to this point, everything has been incredibly cyclical. And
it is summer too, Saz.
I understand. Well, yeah. Up to this point, markets have been cyclical. I think we're in a stock picker's market, and at the end, if you're looking for another reason that kind of nervous about this market, at the end of every rally, it's always a stock picker's market because you go from being a broad-based rally to a stock picker's market. It's totally normal. Anyway,
it's been the usual suspects now for years.
Yep. And there's nothing you can do about that. And you can't if you bet it early, you haven't gotten paid. That's for sure.
Right.
And just look at this morning. It's the same cast of characters. It's Nvidia up, Roku up, Microsoft, Google.
But the Metas of the world and the AVGOs of the world, the Microsofts of the world, those are a little bit lower. Although the Nasdaq is catching a bid now, it is up 5, 9.
Yeah. I got to find some trades to do this week.
Yeah.
I looked at PA&W this morning. Not much there. I looked at. Let's see what else is popping up on my screen. This is gonna be. We're gonna be pulling teeth today.
Yep.
I hate Reddit.
RDDT, is it up again today?
It's up every day.
Absolutely, it has to. That's the memo I got, Sodden. Up and away is what it says. Up another $4 and almost $5. There you go, Sodden. Nice 2% move in Reddit.
It's unbelievable. All right, let me just look and see if there's any other crazy stocks, and there is not. So far, it's an okay morning. We've just made some adjustments. We have not made any opening trades yet.
As for today,
I'm getting ready. Well, I don't have my finger on the trigger yet, but if the bonds get a little bit lower here, we will nibble there. They're 114.05. If they get back down under 114, I think there's going to be some good two-sided trade in the bonds this week with whatever is happening in the Fed, whatever you want to call it.
The Fed, whatever you want to call it?
Well, whatever, your meetings, your talks, your drinking beer in Jackson Hole, whatever the hell you're doing. I don't know.
Okie dokie. All right. Well, if you're done, we got the Skinny on Options abstract applications with our world traveler, Dr. Jim, coming up next. Are you ready to do that?
I'm good. Yep.
Let's take a quick 90-second break and come back. We've got Dr. Jim next. Nothing says Monday like the Skinny on Options abstract applications. We'll do that immediately following these messages.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this man, nothing says Monday like Dr. Jim Schultz and the Skinny on Options Abstract Applications. What's up, Dr. Jim? Good to
what's
see you.
going on? So John, I lost my full screen. I only see Tony. I don't see.
That's all you need to see.
Yeah, but I kind of want to. I see Tom like in the corner or something. But anyway, I just want to make it very clear. So Tom, when you leave this world, I want to make it very clear that all your stories are up for grabs now. So I just want to call dibs. I'm taking the sell every strike story. Like, that's mine now. Like, I sold every strike. Like, I went across the board, and that's my story. And so I want to make sure that you're very clear of that. And also, number two, I know that you remember 2018, 2019, we were in Phoenix or Houston or whatever, and then you were really struggling. Like, you were struggling. We were at the event. Like, Liz went out there, crushed it. Jenny went out there, crushed it. Bat went out there, crushed it. I went out there half decent. And you came back to me in the green room like, listen, man, I got nothing. Like, I got nothing. I started, listen, $100.
I do not remember this story.
$100, I'll give you my Dr. Wood story. $100, I'll sell you my Dr. Wood story. You said sold. So you took my Dr. Wood story. So once you go away, I get that back. So not only do I get to keep your $100, but I get my Dr. Wood story back.
You do know that this was a whole episode on Seinfeld, right?
Of course.
Okay.
You think I made that up on my own?
Okay.
You think I'm that clever and witty? No, come on now. Yeah.
Because it's pretty classic how Larry David comes up with this stuff.
No, it's as far as I don't know, man. Have you ever seen The Office? Did you watch The Office all the way through?
No.
I don't know, man. I mean, Seinfeld is it's obviously in the discussion for #1. Office is obviously up there too. It would be worth it, man. It would be 100% worth it. I know you've got a lot of time on your hands. Tony, have you seen The Office?
Not all the way through. I've watched it. I love it. I think it's I just have more important things to do, like clean my fishbowl.
Right, sure, of course. The fishbowl takes precedent, but if you ever got the desire or the gumption to watch it all the way through, it's worth it. It's 100% worth it.
Yeah.
But yeah, the sell every strike story is mine, Tom. So thank you.
Yeah.
Hey, your Bears look pretty good. What do you guys think about the Bears?
8.5 bid, 17-0, the whole deal.
Okay.
Chicago.
All right.
Chicago's buzzing today. They just
I mean, they gotta be.
Yeah, we basically have.
Yeah, I mean, Caleb Williams, he only played the first series, right? Was that all he played?
He played 2 series.
Okay.
We're set. We got ourselves. Actually, we think we're like, maybe 15-2, that kind of thing.
Sure. Yeah. So, what do you think about my Dolphins? You think probably 11-6, maybe 12-5?
I don't even know if they're going to be 500. They stink.
We got a lot of in-house problems, lots of in-house problems, but it's okay. It's gonna be all right. Yeah, don't worry about it.
Yeah.
All right, you guys ready to do a little finance?
Sure.
Man, let's do it. All right, John, go ahead and hit us on the introductory slide this morning. So today we are going to talk about trading trade-offs.
Trading trade-offs.
So, gentlemen, when you trade, you're zigging and zagging, you're making some moves. Are you aware that you're always making trade-offs along the way?
Yeah, I think so. Sure.
Mm-hmm. I mean, this is what trading is, right? You're always kind of going after one thing in exchange for another. So today, specifically on trade entry, I want to talk about some of the trade-offs that we have to make. And then I kind of want to hear, how you guys used to do it, or maybe how you guys do it today. And so, John, go ahead and get us going here on the intro slide. So as out of the money premium sellers, high probability positions are the bedrock of our portfolios day in and day out. But in establishing those positions and building our portfolios, we must remain aware of the interconnectedness of all the metrics at play. And it's been said before, Mr. Tom Sosnoff, for every gimme, there's a gotcha, a core axiom that will be on full display this morning. And that's it, man. I mean, that in 10 years, almost 10 years, that is my number one contribution to the network. That line right there. Would you guys agree?
Well, in the Hall of Fame, in the eventual Tasty Hall of Fame, that will be your line. There'll be a little, they'll have a little picture of you, and for every gimme, there's a gotcha.
I don't want a picture. I want a bust. Can you not spring for the full bust?
Busts cost money. Pictures are cheap. And we're gonna, if we can only do 1 or 2 busts, we're going Liz and Jenny, not you.
Sure. Okay. Fair enough. Fair enough.
But theirs is going to be, trade small, trade often.
Right.
Yours is going to be every gimme. There's a gotcha.
Okay. What's yours going to be? What's Tony's going to be?
We haven't figured out me and Tony yet. I don't know.
Okay.
Tom, for me, it's going to say Tom made me and he can break me.
That's pretty good. Yeah, I think that's
I don't know what I'm going to say. I don't know what we're going to say yet.
Okay. Tom's is going to be I invented the internet.
Oh my God.
The other guy.
Oh yeah. Oh wait. I forgot to even mention because I wanted to make sure I called dibs on the every strike story. Friday was amazing, man. How about the Friday event? How about the live trading? That's the first time I've been to an event like that where you guys are actually slanging them there live. And I mean, I sat in the crowd and just faded everything you did. And I made a whole bunch of money. So
that's impossible because we were up on our show. Don't do that to me. You can have that when we lose money. Cannot have it when we make money, and we made money.
We've done five of these shows so far. We made money in 4 of them. We lost money in 1 of them.
And the one that you lost money in, Sosnoff, was I there?
I don't remember. I think
no,
so.
That was Milan, Sosnoff. Milan. I was not there for that. You had some other flunky helping you. Yes.
Maybe. I'll have to check. I need to check. I need to see the travel records. There's a lot of stuff. I need to see your passport. There's a lot of stuff I need to see.
Check the tape.
Friday was amazing. And it really is evidence. It really is evidence to everybody that was there, everybody that's watching it didn't make it. If Tom made money, it all really is random and unpredictable. So that should give us some comfort. Like that should give us a little bit.
And don't forget, we're making 35, 40 trades, and we're giving up the edge on all of them.
That's right.
Yeah, I mean the bid-ask differential, not watching what the market's doing.
I saw it. No, that's not fair to Tony, though. Hold on a second. Yes, you were giving up some edge, but Tony was working those orders hard, man. Like he got improved. Like he was hanging at the mid-price.
Let's
sweating. Give my man some credit.
Sweating. Yeah. It's the different. Obviously, if we made money for X, here, let me put it to you a different way. We made money every time I was doing the driver. And he lost money every time I wasn't doing the driver. So, yeah, Saz might look great on stage because, as Bloomberg said, it's his show. He did it all. He was all by himself. But the only time he lost money, or every time he lost money, I wasn't there.
Every time. Yes, that's correct. That is technically correct. You have a future, Tony. You have a future in media relations. You have a future in kind of,
Thank
yeah.
you. Going to marketing tomorrow.
That's good stuff. No, that's good stuff.
Yeah.
All right, so let's talk about some of these gimmies and gotchas. So, John, hit us on the next slide. So, at trade entry, right? These are four of the relevant market metrics that we have to decide what do we want to go for and what do we want to give up. Probability of profit, credit collected, directional bias, and theta decay. So sometimes these agree, sometimes they don't agree. Sometimes when you go after one, you get another one. Sometimes when you go after another one, you have to give another one up. So when it comes to these four, I'm just curious. Probability of profit, credit collected, directional bias, and theta decay. Which of the four, not even are you trying to maximize, but I'm actually curious, which one, when it comes to trade entry, are you looking at usually before the others?
Well, if we're talking about a blank screen, then it's going to be probability of profit. But we also, you can't discount directional bias, and then comes credit collected, then comes theta decay last.
Okay.
So I go white, gray, black, yellow.
Okay. All right. Okay. Fair enough. Tony, where are you at on this?
Yeah, I think I gotta go white, gray, black, yellow. I think Tom is right. Top, bottom, kind of way. I'm always looking for probability of profit. That's the first thing.
Okay.
I'm looking for directional. I guess directional bias might even be 1, 2 with probability of profit. Like, do I have a directional bias, long, short, neutral kind of thing? So maybe it's 1, 2, or maybe it's gray, white. And then I'm looking for a trade. And then I'm looking at the credit collected. Theta decay is a given. I know every strategy that I'm selling premium with is going to be a positive theta decay. So I don't look at one as being, $4 per contract, the other one being $3 per contract. That's probably the least important to me.
Yeah, I agree with
That's really interesting because, of course, that's correct. You're selling premium, it's going to be positive, but it can be, there's varying degrees of positive. Like some are like barely positive, whereas others, if you really snuggle up against, the at the money strike, like you're going to be able to collect a nice little bounty of theta. So that's really interesting.
Yeah, I'll give you that.
Yeah. So I'm about the directional thing though. I'm curious about that. So you guys both mentioned that you look at that probably second, let's say, past probability.
Mm-hmm.
So, why are you guys placing such a high emphasis on that, given market randomness, given whatever?
On directional bias?
Yeah.
Because when we put on trades,
I have an opinion.
We have a little bit of an opinion. Directional bias is also neutral. So, like when we think about a trade, we're thinking, remember, Jim, a lot of our trades are adjustments, and those are all to get, closer to, that's to reduce the directional risk. When we're opening trades, we might choose to be completely delta neutral, but then again, we might choose something that's, a little bit long or a little bit short. Like, I don't think I would change my answer no matter what you tell me.
Oh, I know that's true. After almost 10 years, I know that's true. But I agree with you. I actually do the same thing, but the people want to know, man. The people don't really care what Dr. Jim thinks. The people want to know what the creator thinks. The people want to know what the visionary thinks. Right? And so I just kind of wanted to probe you a little bit there. All right, so let's go to the next slide then. So, okay, we're going to start with probability of profit. So here's what's interesting. Let's say that your objective was to maximize probability of profit. So you went in and you're like, hey, I want to push my probability of profit as high as I possibly can. That is my top priority. Here's what's going to happen to the other three variables. They're all going to decrease. So your credit collected is going down. Your theta decay is going down. Your directional bias is going down. So in other words, the higher pop trades are always further out of the money. So this would be, you're selling a 10 delta instead of a 20 delta. You're selling a 5 delta instead of a 10 delta, and so on and so forth. And so all of the other variables are going to move lower. Do you guys ever, you guys both said probability of profit's number one. I agree. Do you guys ever go into a trade thinking, all right, I want to maximize my probability of profit on this trade?
Maximize it? No.
Correct.
I do, but it would be like it's probably the only time I think like that is if it's
earnings.
Earnings, yeah. Because on earnings, I'm like if it's a binary event where I don't think I have any edge, I might move to the weeklies or dailies, and try to maximize. That's it.
Mm-hmm.
Okay, so that's interesting. So based on what you just said, so that implies that you think on non-earnings trades you do have an edge. You think that's fair?
Also, the concept of a higher pop are always for that money. That's not actually correct either.
Okay, hold on now. Please correct me. Oh, grand one.
I'm going to, because if you want to do anything that's horizontal, the closer you are to at the money has a higher probability than out of the money.
Okay, so yes, if you're talking about time spread, all bets are off. I guess I made the underlying assumption that we're all in the same.
Well, you wrote
expiration
always.
segment. Oh man. Okay.
The word,
Tony.
the actual word should be are generally.
Sure. Okay. Fair enough. All right. Yeah. Fair enough. Man. Wow. Yeah. It is a Monday. All right. Next slide, John. Let's get this now, man. This is All right. So, by the way, I'm in the market for a new car. Did I tell you guys? I didn't tell you guys that I got. Okay. Oh, Tom, I don't think you know this.
Tom doesn't know, but I know.
No, Tom doesn't know it. Okay. So, hold on. Okay. This is good. Okay. So, you know that I Total Pacific. Okay. Yeah. Okay. So the insurance guy calls me 3 days later. Okay. And they totaled it. They said it's done. We can't salvage it. It won't start. We're not even going to try. They said, all right, we're gonna cut you a check.
It wasn't salvageable when it was running.
Yeah, it actually was. Surprisingly, yes. Okay, Tom, here you go. I'm gonna give you some details.
Okay, go ahead.
2010 Honda Civic, 120,000 miles. The cigarette lighter thing didn't work. The USB port thing didn't work. The back windows didn't roll down, and there was duct tape on the back bumper. 120,000 miles. How much do you think they gave me for it?
$4,200.
No. They gave me $6,000.
That's what I said.
$6,000. Tom is the greatest trade of my career. And I didn't even have to do anything. Like my man was like, it was like 58.50 or something. Sick. I couldn't believe it, Tom. I couldn't believe it.
So what are you going to buy?
I took that. I'm going to get another 2010 Honda Civic. No, I'm going to get like a 2012 Honda Civic. I'm going to upgrade a little bit.
By a year?
Yeah, I haven't gotten anything yet. I'm waiting for the checks in the mail. But no, I'm going to get, Autumn wants to get a van. Like she's really pushing me hard on this van, which that would be nice for the kids and stuff. But I'm like, no, I need something sporty.
You're a sporty guy. Yeah,
I can't be seen in a van.
Living in a van down by the river.
You get me in a 2012 Honda Civic. It's it's a chick magnet, man.
Uh-huh. Mm-hmm.
All right, so let's go back. Let's go back to the slides. Plus to the flow. It's got a sunroof, man. Like I open up the sunroof and you just get the flow.
Tony, I can't take it. Give him a freaking car. You got like 100 cars. Give him a car.
Yeah, give me that Denali. Hey, I'll take the banged up Denali. Give me the banged up Denali.
The Denali, you want to hear what their quote was for a small little bump on the roof?
Oh,
you ready for this?
2,700.
3 to 10,000. That was their range. 3 to 10,000. I'm telling you, it has a fist-sized bump in the roof.
Well, they got to replace the whole roof.
That's what he said. Depending on how deep it goes and how far, they might have to replace the whole roof. I go, you got to be kidding me.
You don't think I could be an insurance adjuster? 2 seconds out there. I'm going to take one look. Oh, I got to replace the whole.
And he goes, the back window didn't crack. The back window didn't crack or anything. He goes, but look, come to the side here and close one eye and then look a little bit with your head tilted. You'll see it's a little beveled there. We got to replace that.
Oh man, that's too funny.
And then they'll cancel. And then they're going to cancel your insurance.
Yep, totally. It was an act of God. What am I supposed to do? A tree fell on it. I was sleeping.
That's so funny.
Yeah.
All right, let's say now your objective is to maximize credit, right? So if I maximize probability, generally speaking, right, the other 3 variables are going to drop. But now let's say my goal is different. So now my goal is to prioritize credit collected. Well, now things are going to be very different because now my probability is going to go down, but my theta decay and my directional bias are going to go up because generally speaking, now I'm closer to at the money. And this is, I mean, the easiest way to think about this is with just a short put. If I'm selling a 40 delta put instead of a 20 delta put, right, my probability is going to go down, but I'm collecting a lot more. My directional bias is stronger. I have stronger theta decay. And so, I mean, you guys said you don't really look at the theta decay in terms of the numerical value, which is fair. But there are times when you might want to look and say, hey, I want to get a little bit more meat on the bones. I want to bolster my theta numbers right now. Maybe if volatility pops or something like that. And so this is another example of the gimmies and the gotchas. This is another example of, if I'm maximizing credit collected, I'm going to have to give up my probability of profit. This is actually, I would say, this is the most classic gimme gotcha exchange that exists as a premium seller. And this is the thing that's really helpful to wrap your mind around. Probability and credit collected are always going to move inversely with one another. If you want higher credits, you have to be willing to accept lower probabilities and vice versa. You're never going to find both. You're never going to get, the same side of the fence with a given trade where you have a high probability and a high credit collected. So it's helpful to remember that they move inversely with one another.
What do you think about that, Sosnoff?
I think that's fair.
All right, fair enough. All right, so next slide, John. So now what if my goal is to maximize directional bias? Which again, like you were saying, Tom, a lot of your trades are adjustments. There are a lot of times when you want to maximize the directional bias, right? Because you want to neutralize your delta. Is that fair?
Yes, 100%.
Yeah, that's exactly right. So now understanding if I want to change my directional bias quickly, right, in just one trade or a couple of trades, then now all of a sudden I'm giving up my probability of profit, my theta decay, I'm giving up probability of profit, my theta decay goes up, my credit collected goes up. So this is going to follow kind of the same path as maximizing credit collected, generally speaking, because you're closer to the at the money strike. Now, I'm actually curious, when you do make adjustments, so you've got your deltas are out of whack, right? And it doesn't matter, bullish, bearish, doesn't make a difference. But your deltas are out of whack. Are you you're normally adjusting current positions. You're not putting on new positions to adjust the deltas, are you?
No, because we have a rule, and Tony and I stick to this. When we have a trade that requires an adjustment, we are not going to add more capital to it. I mean, there are occasional trades that we make where we will add to our position because A, it's a winner, or B, because we want to, because of like the situation. We're in a position and we're losing money on that position, we will not add capital to that position. And I just want to go on record as saying that has saved me throughout my career.
So that makes sense to me, not adding capital to the same position. But what about like starting a brand new position? So like, for instance, let's say you've got, you got HIMS, you got this, you got that, whatever, right? And you're getting hurt across the board and your deltas are out of whack and you need some bullish delta. So what about just going in and you're not adding capital to HIMS, you're not adding capital to Palantir or whatever, but you go in and you sell a couple of puts in SPY. So it's a brand new position and it helps neutralize your delta, but it did not require adjustments in the previous positions. What about that?
It'd be rare.
Okay, interesting. All right.
We would do that, but it'd be rare.
Okay. And I'm assuming what would be even more rare would be instead of selling a put in SPY, you actually buy shares in SPY to neutralize your delta. Is that fair?
We would not do that.
It would be a time constraint.
It would be issue. Yeah, the only time we do that is like when we did the live show on Friday. We like to show occasionally we'll show that how to neutralize the delta, but we took the delta down by 50 on Friday. But sometimes we'll take it. Sometimes we'll buy, or sell 100 shares of stock or something, or 200 shares of stock to neutralize the delta at the end of the show, just to show people how we get flat. But it's not really how we trade. That wouldn't be a normal trade for us.
Right.
Okay. All right. Fair enough. So these are the gimmies and gotchas on trade entry, gentlemen. Let's get into a few takeaways because, man, I gotta browse some 2012 Honda Civics. Because those things sell like hotcakes. Like, you think I'm going to be able to get one? Like, it's going to be gone before I can even get to the shop. With everything in trading, whenever you go after one thing, you're naturally forced to give up something else. And this relationship is fully on display when examining the interplay between probability, direction, theta, and credit, where we normally opt to boost probabilities. See, I knew what you guys were going to say. It's almost like I've been here for 10 years, man, while remaining aware of what we're giving up in doing so. And Tom, I have to say, and I've said this many times before, but I have to reiterate, nothing makes me feel more loved and more included than when you use the pronouns we and our, and it's very clear that you're not including me in that. It's very clear that I'm on the outside of that inner circle. Like nothing makes me feel more important than coming on here on a Monday morning and hearing
How would you know that?
Thank you.
How would you know that?
It's just, if you're listening, you know, I can tell by the nonverbals, man. Like I can tell by the nonverbals, the tone inflections, you know, I love it. But it doesn't matter. It doesn't matter because again, right? Whenever you're gone, right? I'm stepping up. I'm taking the stories. I'm stepping up. Doesn't make a difference, man. Don't worry about it.
Doesn't make a difference. I don't know if he's running with him.
Did I ever tell you guys about that time that I sold every strike on the board?
Oh my God.
I'm gonna practice it right now, actually. I don't know what comes next. I got to workshop whatever comes next. I don't know if I made money or lost money. I'll figure it out.
Good job out of you, my friend. We're going to take a quick 90-second break. Even the S&Ps look like they were breaking down there, Sodom. They're down 8 for a quick second. They're down 2 right now. NASDAQ did turn red, down 19. Russell still green by $4. Dow down 64. We'll take a quick 90-second break and come back. We got more Tasty Live, Sodom. What comes up next? That's right, a market measure. Good job out of you. Good job out of you, Dr. Jim. We'll be back in 90 seconds. Tasty Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. E-mini S&Ps down 4. Sadnov, we've gone nowhere quickly on the E-mini S&Ps. NASDAQ down 33. Russell up 4, and the Dow down 33. Sadnov, we're right where we've been all day long. I'm looking on a percentage basis here. Maybe Bitcoin's your biggest mover, but it hasn't had much intraday. Silver maybe after being up 15 cents or so is up 7. So that might be your biggest mover. That's it.
Well, I just got my bonds at 01.
Sign off. Wait a minute. I think I found a bug in the Tasty Trade platform. Let's see. Reddit. RD.
Oh, it's down. Yeah.
It's down. It's red. It's not allowed to be like that.
I know. It's something that it's a mistake somewhere.
Obviously. Down 2-ish or so. Yep.
Yeah. Now you threw me off. Yeah. Well, we bought some bonds. First kind of opening trade of the day. Everything else is, I don't know what else to buy here.
Yep.
So we got a lot of stuff going on. The next 2 live shows for Tony and I are where we're going to be, live trading that Dr. Jim came in for. We're going to be in San Francisco. John, can you put up that screen for a sec? Yeah. We're going to be in the Regency Ballroom. Sounds very fancy. Regency Ballroom in San Francisco. I do not remember if we've ever been there before, but the Regency Ballroom in San Francisco, Friday, September 5th. That is the week after Labor Day weekend. The Bat and I will fly out there on a Thursday. We'll be, and we'll be doing the show, Friday morning. Can't wait. Doors open at 8. The show starts at 9. We're ready to go. And then 2 weeks later, we're just turning around and, oh, this is kind of crazy. So 2 weeks later, September 19th, we're going to be in New York City at Webster Hall. And for the, doing the same show in New York, doors open at 8, show starts at 9. Both those are going to be awesome. You know what's crazy? I have to go to New York the week before on the 12th. So I'm going to be on the road 3 straight weekends. That's not good for good kids.
That's on you, dude. I mean, that's you.
The week after that, I'm going to be on the road. It's foliage weekend.
You're going to need a lot
You'll be
of
doing
rest.
some digging for foliage week. That's right. You'll be doing some digging, some begging, doing a whole lot of stuff for foliage week.
That's 4 weeks in a row.
When is foliage week just going to be symbolic foliage week? Like, remember when we used to do this? That should be, I think you're close.
So, yes, that's where we're at. 4 weekends.
Foliage week, where a fish boil has new meaning. That's correct.
We're going to be, got a lot of road trips coming up. Yeah, that's crazy. So, and this week, the Bat and I will be in Mexico.
This freaking picture. I don't know who this was.
The Bat and I will be in Mexico City this week. And I'm doing a talk on AI, digitization, and the future of risk-taking. I'm also going to write about this next weekend because we've been doing a lot of research on this topic. On the Cherry Bomb over the weekend, I wrote about whether AI is going to kill the internet or not, as we know it, kill search as we know it. And I'm going to present next week what I think are some of the positives of AI with respect to trading and risk-taking. We're going to discuss that in Mexico City this week. We have 2 nights, Wednesday night at 6 o'clock and Thursday night at 5 o'clock. That time's been changed. So Thursday night at 5 o'clock, Wednesday night at 6 o'clock. All right. And I'm sorry, but we cannot doing a talk on next Monday in Guadalajara, but it's private and it's at a university. So I can't let customers in that. But if you want to come to the one in Mexico City, you're more than welcome. All right, let's go to the market measure for today. Skew as a signature of risk trajectory. Vanetta was right. That's hard to say. Skew as a signature of risk trajectory. Not the easiest. All right, what do we got here? This is our research team, sponsored by SIBO. We discussed the concept of option skew as being a reflection of the direction of the velocity of risk that's inherent to a stock. Today, we're going to look at some of the history of some of the underlyings with different skews to see if that's really the case. What we mean by that is if calls are more expensive than puts, then it doesn't mean the stock's going higher or the future's going higher. It just means that the options are suggesting that the velocity that it goes higher is going to be faster than the velocity of it going lower. And the opposite is true when puts are more expensive than calls. It's not like we're going lower. It's just that because the market never goes lower and puts are always more expensive than calls, but it represents the perception of the velocity of risk. If we were to go lower, they would go up faster. Let's go to the next slide. So we did a study. We used SPY, IWM, UNG, and GLD. The reason we took UNG and GLD is because those are mostly call skew. And the reason we did SPY and IWM is because those are mostly put skew. We did 16 delta strangles, 45 days to expiration, managed at 21 days for 10 years. We observed the direction of the worst case losses for each underlying strangle. And then we observed the average of the top 5 outlier moves up and down since 2007. There's some really cool research in here. Let's go next slide. So each underlying's worst case loss was caused by an outlier of a specific direction. For the underlyings here, the direction of the outlier was the same as the skew for that underlying, meaning, yes, skew had the velocity of risk correct. It didn't predict when it's going to happen. It just has the velocity in there. So the worst case losses for a 16 delta strangle managed at 21 DT. This is managing early. So in the SPY 5200 and the IWM 4000, in gold 1900, and UNG, which is a cheaper stock, $95.
Sure.
You can see the max drawdown as a percent. You can see the loss rate, and you can see the direction of the underlying. And in all four cases, it's exactly the way it should have been. SPY and IWM down, GLD and UNG were up moves. Now, again, all this means is it explains why puts are expensive in the ETFs for stocks and why calls are expensive in GLD and UNG. It doesn't tell you when it's going to happen. It just tells you why the options are expensive. Let's go to the next slide. So when looking at the average size of an outlier move, we can see the direction of the skew is the same as a larger average outlier move, except for the SPY. So why was the SPY's upside outlier greater than the downside outliers on average?
Oof. Why was the downside greater? Is that what you're asking?
No, in the SPY, the upside was
really
greater.
not.
The upside move in the SPY was greater than the downside.
Right.
When it came back, and the answer there is because, or I think the answer is because when the stock market goes down and it makes a bottom and it rallies back strong, it has to rally back more to actually make a new high. Let's see.
Okay, makes sense.
Yeah.
Makes sense. I didn't think about it like that.
Let's go next slide. So the 5 upside and downside outliers for the SPY all occurred in 2008 and 2020. And recently, the downside outliers all happened first. Because the downside outliers happen first on a percentage basis, they will be smaller than the upside outliers that come afterwards. That's exactly right. So for example, if the market crashes 20%, it has to go up 25% to get even. The up move had a larger percent move only because it happened after a down move, and the net result was flat. Yeah, and that's why. But the important thing here, the real takeaway from all this is that the way options are priced, they're priced correctly. So if you see something where why are these calls so expensive? It's not because the underlying is going up. It's because if the underlying does have an explosive move, it will be to the upside. And
yeah, that makes sense. But listen, and I know this is SPY because I would usually say, that's true on an individual stock, but the implied volatility and the skew is on the put side for SPY, and that might be skewing some of these results, Sadnov.
Well, when you talk about SPY and you go, why are these puts like 1.5 times the price of the calls? You just know because if we go down, those puts are going to move faster. It doesn't tell you that we're going down. They're usually always more expensive. Let's go to takeaways. So skew is never randomly placed in the stock market. That's a really good line. And it tends to come from a combination of the future velocity of risk sentiment and also the results of market history. Historically, skew for current positions is consistent with the magnitude of the product's historical outlier direction. And again, that is the biggest takeaway from this and one of the most important things to learn about option trading is that their SKU is there for a reason. And it doesn't tell you what's going to happen, but it just tells you where you got to be careful.
And you got to be careful too, Southmouth. Bonds just traded down to 114 even. The 114.01 is where you bought them. They just traded 114.02. You got a tick. Do you think you should take it?
No.
I'm just kidding you. We're going to take a quick 90-second break as even the S&Ps go green for the first day since we've been on the show. The NASDAQ is up 13, first time since on the show. And the Russell up 8, as foretold. Southmouth, we're going to take a quick 90-second break and come back. We got more Tasty Live with your friend of mine. That's right, Mr. Scott Sheridan from the Scott Sheridan Studios. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
On Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
Muskies, some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full.
Hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this man.
Oh my God.
Tasty Trade World Headquarters, you're a friend of mine. The very popular pizza eating. That's right, my friend and yours, Mr. Scott Sheridan from the Scott Sheridan Studios. How are you, Scott?
We've switched from pizza to tacos this week.
Yeah, we're on tacos.
Oh, we're on top. Yeah, well, this week I'm going to be big into tacos.
Yeah,
big.
But what I'm hearing, so maybe you get better information from your travel partner than I am, because I keep hearing it's an omakase taco bar, but we're not going for tacos because we didn't get in time, and we're getting like some variation.
No.
Has he told you?
Taco bar. There's two places. One is a taco bar,
But we're not getting in that one.
No.
Well, they don't take reservations.
That's just a street place.
Okay, what's wrong with street place?
It's just street food. There's not even seats. You just walk outside and eat outside.
Same restaurant?
No. It's a different place. They're two different places.
But what's the one? I thought you said we're not getting omakase because we're going at the wrong time or something.
No, because we can't.
Oh, will you stop sounding so entitled and bougie? Seriously, you're like the guy that cuts in.
You're
like
sitting
the guy
at a
that
table.
cuts in when there's traffic all the way down like for a mile. You come on the right-hand side and try to cut in.
Just so you are aware, mister, Uncle T is already in Mexico City.
Scott?
He is rolling out the red carpet for you two.
He's planning.
Let me tell you something.
Yeah.
Scott's already trying to find wine stores so he can buy wine that we can have at dinner.
Absolutely, factually incorrect. Although I will say, I haven't been in Mexico in a while. There are some nice wines from Mexico. They have crazy import taxes. So it is really expensive to buy American.
We just drink mezcal.
I'm good with mezcal. Tequila, mezcal, Modelo.
Sosnoff, we're going to have to hide you a little bit. Like, we're going to have to make you our biatch because you're going to embarrass us either with your dress or your speech or something like that. So we're going to have you. What are you going to be, like our bodyguard or something like that? What are you going to be?
I could be a bodyguard.
Not unless I want to get accosted.
Well, anyway.
Hate to burst your bubble, but nobody knows who you are.
Okay.
Even if they did, it wouldn't
I'm
matter.
gonna regret asking this question.
Go ahead.
Are either of you bringing your clubs, or you just take whatever they give you?
Take whatever they give you.
Take what they give us.
Bring in my clubs.
I might bring balls because I don't want to be embarrassed.
Okay.
I might bring a dozen balls because I don't want to have to buy a dozen.
Is it a like? Can you lose balls on this course?
No, you can't lose any. It's
wide open.
Yeah, and the caddies there, they drop the balls for you.
Tony, give your caddy a sleeve. You're good to go.
This place has professional caddies.
Yeah, just give him a sleeve and you're good to go. You'll never have a problem.
Here they drive the cart.
Give him 2 sleeves just to be careful. I'll give him 2 sleeves.
You never lose a ball on this course. These caddies, they'll set your ball up. Yeah.
That's good.
Yeah, where were we playing? We're at Chucky's.
Oh, more importantly, what did you go with? Because we got the breakfast selection. What did you choose for breakfast? It's nothing.
Huh?
You're not getting pasta.
For what?
For your flight on Wednesday. I'm on the same flight, but on Thursday.
Oh, I didn't choose.
Oof. You better choose.
No, I let my biatch choose.
Oh, what'd you go with? Do you get like A and B and you just pick which one you want and give Tom the other one?
I went with the Vindaloo chicken. I went with the Tom.
Well, you get 1 chicken, 1 fish, and then you decide, and then you give Tom the other one?
Hey, listen, we go to
something like that.
We go to the lounge ahead of time.
I'm going to be in the lounge too because it's international. Okay, so I'll be there. By the way, Tony, are we flying home together on Sunday?
I believe so. Will you wave to me as I walk by?
Right.
Will you even acknowledge me?
I don't know. I'll ask the 6 if she wants to sit next to you.
She might. After your weekend, she's probably going to be done with you.
Yeah, she may. All right, so, okay. Tony, did you watch the Bears game last night? Because I know you're a hater at 8.5. I'm 17 bid.
I'm not. Well, I'm out of 8.5s. I'm getting hit
I
on
got
9.
Grover all scared this morning.
What'd you say? 9 bid?
What?
What'd you say? 9 bid?
Well, not 9 bid.
Right. I'm 8.5 bid.
You guys want 9s now? 100 apiece? Just
No. I'll just take my 100 and walk away off into the sunset. I mean, because you're going to owe it out. You'll be dormy after the 9th week.
Probably. That's what I'm
9-0 to start.
I have people picking up my 9s already, but I saved 100 each.
That
for both
actually would be priceless if they started 9-0, you lost the bet, and then they lost the next 8 games.
What does my name look like? Sosnoff?
It's one of the nice things about Chicago sports. We have hope for the first game or two.
You don't think I grew up as a Giants fan, not having hope? Every city has hope.
Yeah, but the Chicago, we've got.
You ever listen to sports radio in Philadelphia?
No. Oh, what in Philadelphia? They've won. Boston's won. I mean, they've had winners. When was the last time we had a winner? Cubs. Hawks won in 15. Cubs won in 16. Yeah, big deal. It's 9 years. What have you done for me lately?
Oh,
right,
it's not bad.
You ain't kidding.
All right. Did you see the president? Was it Warren, the president for the Bears, when he was talking about Arlington Heights? And I love how he's spinning this.
It's Cook County.
It's Cook County. It's Cook County. I'm like, okay, I don't know about your kids. My kids, Tony, cover your ears. My kids go crazy when they're out somewhere and somebody says they're from Chicago and you go, where? And they say,
Naperville.
Naperville, Glenview. Okay, I'm sorry, that's not Chicago.
Well, Arlington Heights is worse.
It's Cook County. Greatest line of all time. That was a good one. That was impressive.
I thought the same thing.
And he pushed it a couple times. They're serious about trying to get it built out there.
They're not going to put the money with it.
What's going to happen?
Who's going to put the money up? State's not going to do it.
I don't know.
It's in Cook County.
It's in Cook County. Oh, and his next comment was, Metro will drop you right off.
That's right.
There you go.
But it sounded like they got a roof.
It's a retractable.
Yeah. Nice.
It would be beautiful. I mean, who wouldn't want a beautiful, $5 billion stadium?
I don't know, but I think that one thing I think for sure is that this is going to force them to do it in downtown Chicago.
Well, you think they could retrofit Soldier Field, put a dome on it?
No, man, you're so wrong.
Soldier Field, they would have to tear down.
Oof. Isn't that it might be a historical monument building. I think it is. Well, I don't know where else they're going to put it. All right. Anyway. A war. Tony, I want to thank you again for lunch on Saturday.
And by the way, they're talking about private investments in Arlington Heights.
Yeah, they could.
They need to do it privately.
You could do it privately.
They're talking about doing it that way.
Yeah, you could do it.
About doing it that way.
Yeah, you could do it.
And the teams.
Yeah, then they could.
What are the Bears worth now? 8, 9?
They just sold 8.8.
They just sold some at 8.8.
Mm-hmm.
They sold some to
billion.
I don't know how much he bought, but that was the number they gave.
That's when you go, listen, keep $100. We need a print.
Oh, no.
We need an $8.8 billion print. Tony, you didn't hear me. Thank you again for lunch on Saturday.
You're so welcome, Scott. You know that. Well, I mean, I had to do it by default. I mean, you were sitting there for 15 minutes before I got there. The 5 of you were sitting there waiting for somebody to feed you like Democrats. You're all waiting for a handout. Okay. I had to finally come in there and say, did you guys order pizzas? They don't have waitress service here. Let's go up there and get some. I said, frig it. I'll go up there and I'll get it. I ordered 7 pizzas for 9 people, took a little bit home. It was a beautiful day. You guys would have sat there for another hour waiting.
Well, if I was there, I would have had mushroom.
Yeah, Tom would have had mushroom pizza. And could we please stop with revisionist history? Who had their credit card out first?
After it was paid for, yeah.
No. I have my credit card out, and you said, quote unquote, nope, you're in my neighborhood. It's on me. And I said, all right, thanks.
Said that. I remember saying that. That sounds like something the Bat would say. I remember saying
I said, all right, I got tricked.
I mean, I already signed for it. I already had paid them and everything else like that. It was a good gesture.
Did Vinny like the leftovers? Did Casey eat it? No way.
Love the leftovers.
I gave it. I didn't see it till last night. I gave it to her last night.
Oh, nice. You gave her a 3-day-old pizza.
Sadnov took the pepperoni and left me just the plain cheese. He's so entitled.
You can't eat a pizza. You probably left it sitting out, too.
Don't tell her that. Because she's going to feed it to Patrick.
Oh, my God.
No, I had it in the refrigerator. And
why is Patrick not at work today?
I had a
because he's got food poisoning.
Right. Exactly.
Yeah, I had them over last night. I barbecued.
Oh, that's nice. Thanks for the invite. Tony, did you get the invite to the barbecue?
No, got nothing.
Yeah, I was hoping, actually. We were scrambling. We were trying to figure out what we were going to do. We wound up with Chinese food, but a barbecue sounds nice.
I'd say I went to Chinatown on.
Oh my God, my wife cooked last night for the first time in what seems like weeks, and she was gonna make just chicken cutlets with a little bit of pasta, nice little fresh pasta, chicken cutlets. And then she stuck the chicken cutlets in the oven just to keep them warm. She forgot about them. Hour and a half. They came out. They didn't even bounce. You could have whipped them against the wall. I'm telling you, they scratched my throat. Like I was done eating. I was like, she goes, they were a little tough. I go, I was looking at my son. My son was over there crying. I'm like, my throat is like scratching.
Good thing you didn't say anything.
I know I did. In front of my son, he gave me an ooh. I said, you know what, honey? Everybody excels in different rooms of the house. The kitchen is not your place. I didn't hire you for this reason. It's okay. And my son just put his head down and shook.
That's funny.
It's true.
Well, lighten up, because next time she's going to tell you.
She heard me. She just walked in.
Right? Go make your own chicken cutlets. All right. Should we get to some business?
I thought she was upstairs. I didn't think she could hear me. Yes, we can get to business. I'm
sorry. Tony, you know better than anybody. The walls have ears.
The walls have ears. You should have stopped me about 4 minutes ago. I apologize.
All right.
Wait.
Top 20 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Tom, for you, number 20. Microsoft at a 7. For everybody else, UNH at a 38, Meta at a 7, PLTR at a 14, NVIDIA at an 18, Tesla at a 6, Google with an L at a 26, IBIT at a 33, Intel at a 38, Open at a 56, GLD at a 12, CRWV at a 7, NVO at a 54, Apple at a 17, AMD at a 16, MSTR at a 19, Amazon at a 4, Hood at a 21, Lulu at an 80, Coin at a 14, and number 20 for Tom, Microsoft at a 7.
You know, we talked about the VIX one day this morning, Tony.
Yeah.
670.
670 what?
That's where it's trading.
That's the number it's trading at. It was
There's a
9
1 day now.
It's always been 1 day.
For these, no, it's different than VIX.
Yeah, it's VIX one day, VIX 1D.
Didn't trade it.
Watch the show here.
670.
Yeah, I just put up there on the screen for you. Down 43%.
670. So nothing's going to happen.
Yes, that's what they're saying.
They're saying there's going to be less movement than Saturday night on a Sosnoff foliage weekend.
670.
Yes, and it's only 9:44 in the morning. So anybody looking for a big move today, they're basically telling you
You're gonna be disappointed.
You're gonna be very disappointed.
Here, open up the ES options. Open them up the 0 day.
What do you want to know?
You're looking at a $14 expected move for the rest of the day.
$14 for the rest of the day is about as low as you're ever going to see at 9:44.
Here's the good news. That can change quickly.
It can.
It's rare.
And it typically does.
I said it can. I didn't say it was going to. It can change quickly.
Yeah.
Well, I mean, this is a minor crash. SPOO's down $5 on the heels of what were they down on Friday? 15, 20?
25.
25. There you go. What are you hoping for?
You got your move. Now you got a scoopy.
Oh, is your son in your ear?
No.
Bonds have had a decent sell-off.
Yeah, they're ugly at 13.30 right now.
Yeah, bonds have had a decent sell-off.
Yeah. I just bought 'em.
Tom's long those.
I'm long those.
Long bonds?
Yep. You got to be long bonds.
Got to?
Yeah. It's the best play on the board.
Best.
He got a memo. He's got to be long.
It's literally the best play on the board.
To be long bonds. Going to where, sir?
Maybe 115.
Maybe 114.
Maybe 130, 31.
Maybe
113, 30, 30, 31, maybe 114. I don't know. It's you think. Tell me why interest rates. Tell me why do you think big long bonds here?
Because they've been trading in this range.
They have been in this range for a while.
And if you bought every downtick, you never lost once. And you have to keep doing it because they're going to lower rates. It's just a question of when. Is it September, October, November, December?
What's the probability for September? It's high, isn't it?
It was, but now it's dropping like a rock because they're under 114. Probability was like almost, I think it was almost 100% when they're 116.
Yeah.
Now at 114, I think it's probably pretty low. But it doesn't matter. They're going to. I think
Sosnov's not looking at the Fed watch tool. He's looking at the price of bonds, and he's just
right. But I think they're gonna lower interest rates, and the market's gonna get killed because it's just a sign. That's all. That you raise interest rates because the economy's too hot.
What if, throwing it out there, I was listening to a podcast that was interesting, just hypothetically. What if Powell decided to try to appease Trump and lower rates by a lot, like a point or a point and a half?
He won't do it.
He can't, not with the market at 114 or anywhere.
The market is what the market is.
Okay, what if the new person comes in and decides to do it?
Powell said he's not quitting. And
what if monkeys fly out of my tuchus?
Yeah, I mean, if he were to lower rates by a full point,
the market probably crashes.
Market would crash.
That's why you're not on the show, Scott, for more than just a couple minutes a day.
I mean, I agree with you. I think the market, if he did that, people would be like, what's going on? What is, how bad are things?
See, the challenge that Trump has, he's put so much pressure on him to lower rates, but he doesn't understand that lower rates, like he fires the person with the statistics because he doesn't like the statistics because it shows the economy's weak.
Correct.
But doesn't realize that sent the bonds higher by 2 points, which lowers rates. Understanding that's too complicated.
Tony, earmuffs. Earmuffs, Tony.
Anyway, the point is you can't have both.
Yeah, I got it.
Yeah. So I don't think I think when they lower rates, they're going to do it they'd rather do it stagger over time, like a quarter of a point. I think they lower them maybe quarter to 3/4, maybe 2, 3.
Well, I think there's 2 rate cuts, isn't it, by the end of the year? I think it's factored as 2.
So then why would you buy bonds here?
I'm not saying that I would or wouldn't buy bonds here. You just said it's the best trade on the board. I mean, to me, there's some stocks that have had some just crazy moves that I think.
Like what's the better trade? Give me a better trade.
Well, I'm sure Reddit. That's not working out so well.
Well, it's down today.
Wasn't it just down a second ago?
Down $3.50 today.
Oof. It's up $90
I know.
since earnings. Okay. I mean, you could look at.
What else?
I don't know, PLTR, that sold off a little bit.
They're all
look at Google.
They're all in the stratosphere.
Yeah, look at Apple, look at Google, look at Amazon. I mean,
they're all
right. I got it. And yours, but your
cheap. Find something that's cheap.
But your comment, which is you think that rates are going to go down, the market's going to go lower. I'm not disagreeing with that.
But find a stock that's cheap out there. It's really hard.
Really hard.
Other than, there's a couple we trade.
I mean, the one I missed was my dream, the layup, and I missed it, was Peloton. It got to the 3-hand. It was in the upper 2s, actually. It's now $8.
Okay, stop yourself. I'm not even going to put it up on the screen.
I'm agreeing with Tony. We're not putting it up on the screen.
Right. You could have said that at 10, 9, 8, 7, 6, 5, 4, 3. I mean,
there you go. I think it traded 280. PTON. Put it up. Let's see.
No, I'm not going to do it.
Oh, I'll take control.
I wish that was true, Scott. I wish that was nobody wishes that more than me. Believe me. You know what? Just because you are in control here, my friend.
Yeah.
PTON trading at down 2 cents, but at 8.50. You are correct, my friend. You are correct. There you go. I
haven't traded that stock in
I haven't touched it. I mean, it went to during COVID. It was, I think, 170 was the all-time high, which is crazy. But
are you still doing your exercise stuff?
7 days a week.
Nice.
It is, and it's interesting because I got a survey from them, so they're clearly making some moves here. But I got a survey because I was selected, which was nice. It made me feel good that I was selected to answer.
Handpicked.
So it is a steal relative to work. I shouldn't say relative to other bikes. I don't know what those are because I think SoulCycle has a bike. I don't know what those subscriptions are. But if you're going to go to a class, it's a steal. It's $50. It's weird because I don't know what it is. It's around $50 a month, unlimited use. And you could ride, you could stretch, you could do yoga, meditation, weights, a lot of stuff. So the question was, would you pay more? Would you pay a premium for a variety of things? I said no to most of them. But it's interesting because clearly they're trying to come up with some new revenue. So, stocks, anyway. I have no position in it, but there you go. I'm just hoping they don't go out of business because that would be really unfortunate.
Yeah, and make everything obsolete.
Here it comes. Lucid, maybe. Peloton, maybe. What difference does it make?
Lucid's not going out of business.
Okay.
Lucid's not going out of business because Sosnoff has one, and he will build it. That's
and I saw one yesterday.
Saw one what?
The wild.
A Lucid, or did you see the...
No, I saw a Lucid in the wild. I don't see a lot of Lucids around.
You don't look. It's the yellow.
Yeah, who the freak can afford them? In this economy?
Wait a minute. Isn't it great again? Isn't this the booming economy?
No. I can pick and choose. Okay?
You can pick and choose.
I can pick and choose. I'm not like you guys pigeonholed into one thing. I like a lot of things from a lot of people. Like, look at the two of you.
Which one of us do you like today? Neither?
Right now, I think I'm Team Sosnoff. I'm not gonna lie. It's a rare move. You came in too hot.
Wow.
No, that hurt. We're gonna have to.
I gotta travel with him all week. You know what I mean?
You have a lot of traveling coming up with me. We're gonna be on the road together for like the next 3 straight weeks.
Oof. Where's after Mexico? San
Francisco.
San Fran. What weekend is that?
New York City.
Is San Fran?
And then the following week, I have to chaperone for Foliage Week.
Is San Fran before Labor Day or after?
The weekend after.
Weekend after. We got the game Monday night. You better be back.
Oh my God! Yeah.
Okay. No staying in New York.
No. I'll be at the
show's Friday. You're back Saturday.
Yeah. No, I'll be. Oh yeah. No, I'll be at the game. Are you kidding? We're going 17-0.
17-0. Go Bears.
Yeah.
Tony, I'll let you out for.
Guys,
I'll let you out for 90 right now.
I have a little bit left at 9. I saved 200 for you guys, but you got to let me know pretty soon because people are already nibbling. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
$4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. Welcome to the Monday edition of the Liz and Jenny Show. It's Liz Deerking here. I have two beautiful brunettes, one Dan and one Jenny Andrews. Welcome, brunettes. How are you guys?
I'm doing well.
Hello.
How are you?
Good. I'm very excited for the second edition of Dan the Crypto Man on our show.
I know. So happy to have him back. Dan, it's been a kind of a wild crypto week since you were on. And you're almost like a sage because you were on, the cryptos were up, and you talked about how they'd probably come down, and they really have since we saw you last Monday.
Yeah. We've definitely gotten a pullback here. I think our general read was that we had that huge July month. I think August is always a slow month in markets, so it just made sense that we'd get a little pullback here. I don't know if there's any reason driving it other than, hey, sometimes you just need a little bit of a break on some of this. So good time to pay attention and see if you could scoop up some undervalued tokens.
So last week you talked about the roll, like a roll that was happening that, kind of causes the boost in crypto. Now, how do we know when that next roll is coming so we could maybe try to get in on a little bit of upward momentum before that roll?
Yeah, so I think we do this a lot on the Tasty Crypto Show, that we play the ranges, right? So, anytime we get a pullback here, I think we're at 115 on Bitcoin. It's a good time to be looking to maybe throw some limit orders in, maybe scale in a little bit. I think in general, some of these maybe some of these altcoins would run next. I think that's what I mentioned, how people kind of pile into Bitcoin. We see Bitcoin run up, and then it rotates out further on the risk curve. So that's your Ethereums, that's your Solanas, that's your Suis, and some of these other ones. So I think now would be a good time to pay attention to them. And, indications for me, I guess, when that happens is I'm a big sentiment guy. Crypto is driven off of sentiment. Obviously, there's a lot of quantitative stuff you can look at, but it's kind of when you see all these treasury companies come online, you see sort of everybody talking about it. People, like I said, it's like a wealth effect. People get rich in Bitcoin. They want to go and find the next thing. They rotate some of the gains into Ethereum. They do some more on chain with DeFi. They borrow, they lend. There's leverage in the system. Talked about the perps a little bit. That's kind of how the cycle usually plays out. So I would look, I would just be patient the rest of August, just see kind of where we trade. We might be in a little bit of a chop. There's nothing on the broader macro environment that I'm aware of that could get us to shift away from sort of this bullish momentum. But let's see how it plays out into the fall, and maybe now is time to scale into Bitcoin, scale into ETH, depending on what your risk tolerance is. So,
did they all kind of fall at the same percentage, for lack of a better term? Because I mean, I never know when it starts and finishes, right? So I never know when the time stamp is, where, because it says it's up today, but I know I'm down on crypto and ETH. But they seem.
Like I said, I think it does. A lot of these markets are tied to the broader traditional markets. Like I still think that, given the asset class, the size of it, how it's tied to fall. The altcoins usually, so like your XRPs, your ETH, Solanas, and some of these other ones, these lower liquid, lower market cap ones, they usually fall a little bit more than Bitcoin. Bitcoin's volatility has gone down as time has gone on. So, I'm looking at CoinGecko right now, 7-day change. Bitcoin's down 3.5%. ETH's up the last week, just 1%. XRP's down 7%. Some of these others are kind of unchanged. So, again, I think it's just a little bit of a breather. I don't know. I don't really have any indication of why stuff would be moving, other than now might be a good time to look to scale in. So
you mentioned SUI. What is that? I don't have that. I don't know what that is.
SUI is it's just another altcoin, layer one, similar to Ethereum, similar to Solana. It has a different smart contracting language that allows more performant applications to be built, right? So it's just kind of I call it like a Gen 3, Gen 4 layer one blockchain. And it just allows more performant applications to be built, more secure, more performant applications to be built, faster transaction times, cheaper transactions. We actually have the chief investment officer of Mill City Ventures, ticker MCVT. He's coming on the Tasty Crypto Show later this afternoon. We're going to do an interview with him because they just launched a treasury company to buy up SUI. And SUI is on the platform, so ticker
SUI, right? So I just looked at it. SUI. 3.57. Okay, it's a $3 coin.
$3 coin. Yep.
And you said that company is MCBT.
MCVT.
MCVT.
As in Victor, yeah.
And they're buying SUI.
Yeah, they just raised $450 million to buy SUI underneath their publicly traded vehicle.
So then what happens to SUI?
What happens to SUI?
Like if they are buying or
no, they're not buying all of SUI. It's like MSTR.
So just right? Like other companies. So they're just buying part of it. They're just buying 450 million of it.
All they're doing is they're going to use the money they raised to buy SUI, hold it on the balance sheet, probably stake it, probably do some type of DeFi yield things. We can get deeper into that in other shows. I don't want to get too above of our listeners on what's going on there, but this is kind of that indication I talked about where I'm like, okay, we had MicroStrategy. Our MicroStrategy worked. It's been around. This playbook, this Michael Saylor playbook, using stock to borrowing against the stock to buy the spot crypto. That kind of works. People copy it. You have Tom Lee and Kathy Wood and all them going into ETH. Now you're seeing okay, now we're getting pretty far on the risk curve. We're going to go do some of these other less proven, lower market cap tokens. So I'm really interested to see kind of how that shapes out. I'll be interviewing them later today, so I'll let you guys know how that goes. But I think the idea is that as I dig into this and as I showed on the show the other day, it's giving people access to these tokens that otherwise might not have it through traditional markets, right? And then all on top of that, you'll have access to options. You'll have access to some of these other, altcoins. So, but to me, as a cautious optimist in the markets, I just look at that and I'm like, okay, how far out are we going to go with this, right? Because next they'll be talking about doing it for Dogecoin, right? Yeah. So that's kind of an indication of where we're at in the cycle. I'm generally positive. I don't, I feel like a lot of people in markets, they kind of are always quick to fade or always quick to be contrarian or, sentiment check, NFTs are up. They don't really understand what drives market structure here. So I generally think like I'm paying attention and I'm participating. Like I've been trading in and out of MCVT. There's another one, UPXI, that's Solana. I'm taking advantage of this momentum, right? But I'm in and out. I'm not doing like kind of long-term plays with this. It's just more of I bought it. I think I bought both of these last Monday and I got out of them on Thursday. So I just took like a little 40-50% profit on just the equity, just the stock, just trying to play news. You can kind of catch these announcements pretty early if you're in the right circles on Twitter. So that is kind of the way I've been playing it. Right or wrong, I think there's a lot you can do with the options too, as far as, like we said, taking advantage of the premium. But with these treasury companies, you are missing out on holding the spot and doing some of the strategies around, owning and custodying your assets. And part of that is staking, right? So I want to kind of transition to this because I want to make sure our listeners kind of understand sort of the deeper benefits of holding crypto. Love it. I got a few slides. I just want to run through this because I think you guys were like, what is staking? What is some of this? So staking is just a way to earn rewards by locking up certain tokens to help secure and validate the network transactions, right? So because these are decentralized networks, people are running code to validate the transactions going on, there needs to be an economic reward for that, right? You're not just going to do that out of the goodness of your heart. You're going to get rewarded for that. So certain tokens, ETH, Solana, SUI, some of these other ones, not Bitcoin, they provide these rewards for users staking value to validate transactions, right? So that's the easiest way to think of it. You're locking up your tokens to earn a reward.
So is it almost like interest? So, somebody borrows money from me and then they're going to pay me back with a little bit of it, but I don't have that money anymore. It's that they now have it. Is that would that be a good?
Exactly. I mean, it's just the only difference is there's no like central bank or monetary or FX rates moving this. It's just you're helping validate the network working, right? You're staking economic value to help validate that transactions on this decentralized network are going to process. And for doing that, you're being paid a reward. So that's the easiest way to think of it. Hey, it's an interest rate. It's the equivalent of an interest rate in crypto. Probably the easiest way.
If you're buying crypto, you might as well stake it, right? Because there's no real harm, except you have a lockup period. Is it kind of like, I'm giving Jenny this money for this house for 10 years? Is there a lockup period when you stake it, or can you trade in and out of staked cryptos?
There is a lockup period. Depending on how you're staking it, some networks are pretty much like instant unlock. Some have liquid staking, right? This is you don't want to, there's liquid versions of this. One's called staked ether. You can earn the reward by using these liquid tokens, but then you can go out and you can borrow against it, do DeFi things, do liquid things with them. So there's different flavors of it, I would say.
So can you explain and walk through like how to get yourself in this position? Let's say I have Ethereum through the Tasty platform. Like if I'm on Tasty and through the platform, I have Ethereum, which is held by, held by someone else. I buy it through the Tasty platform. Yeah, held by Zero Hash, but I buy it through Tasty. Then how do I stake that?
Yeah, so we'll have that functionality coming in the future. You currently can't do that on the platform. Other centralized exchanges, centralized brokers offer that ability. So Coinbase, Kraken, Gemini, they all offer, Crypto.com, they all offer the ability right in your platform to just click a button. It's called Earn. You just click a button, you earn it, you earn the yield automatically. And it just does everything in the background for you. So that's the easiest way if you're using, and you want to participate in this and you're using other platforms. But if you're on ours, I like ours a lot better. You can transfer it out to a wallet, self-custody wallet, Tasty Crypto Wallet, MetaMask, Phantom, and then you can go and within those wallets, they allow you to stake. So you can just
so if I have my crypto through the Tasty platform, I would have to transfer it into the wallet.
Yes.
So then
Sorry?
With the Tasty wallet too, right? Isn't there a Tasty Crypto wallet?
Yeah, you would transfer it out through the Tasty Crypto wallet, and then you would stake it through a wallet interface.
So then when I log into my account, would I not see it because I'd have to go into my wallet to see it?
Yeah, you wouldn't see it in the Tasty Trade platform. Again, this is a feature where it's slated to be added to the platform a little bit later. I don't have like a exact timeline, but it's something like we're really heavily pushing as a functionality because I think anybody wants to earn money on their money, right? So right now it's a little convoluted if you're a Tasty trader to do this. If you're a little bit more sophisticated, you can transfer it out to a wallet and participate that way. A lot of the wallets have this staking functionality in it. Otherwise, you can go to a different applications and do that through a self-custody wallet. So that's the easiest way. That's the easiest way to do it. So I kind of wanted to move on to the next slide because this is the difference between like Bitcoin and the rest of crypto, right? Like just crypto's a technology, crypto's internet money, whatever you want to call it. But like any technology, things evolve, right? So, everybody looks at Bitcoin. People usually trust Bitcoin. We think it's a store of value, digital gold, whatever you want to say. The way Bitcoin works is pure raw energy power, right? So you need you need access to a lot of electricity to validate transactions. That's what mining is, right? And usually only these big miners, we've gotten to a point now where you can't run your own miner and compete. So now you have these big, big publicly listed ones, right, that have access to cheap energy. And that's how they earn the rewards. They earn the Bitcoin rewards for processing the transactions. Ethereum uses something called proof of stake. Solana uses a flavor of proof of stake, right? And this allows normal users to participate in rewards on the network, right? So this is where a system of validators are chosen based on stake weight to create new blocks based on how much cryptocurrency are delegated to them, right? So this becomes a different model for how transactions and how validating transactions on the network works. So just to make that like quick, to divide them up, like Bitcoin, raw energy, electricity takes a lot to compete. Proof of stake is a different consensus mechanism, a different way of validating transactions. Doesn't take as much electricity, a lot more energy efficient. It's based on economic value, right? There's always trust assumptions inherent, right? So a certain group of validators will get a little bit more stake weight and be able to process more and earn more rewards. There's this whole like underlying market structure to these networks of how participants validate transactions. That comes from who's staking to what service is providing a boost in rewards, what APY they're providing, whether or not they're getting slashed or for not doing certain things correctly. So there's a whole market structure underneath this. I just want to stay at a high level to make that distinction between how Bitcoin works and how proof of stake works, because you hear this, you kind of hear this pushback. Crypto's so energy intensive, it's bad for the environment, blah, blah, blah. That's not how Gen 2, Gen 3 blockchains work, right? That's just not how it works. This is more of like a economic value, economic staking value that people kind of put to different services in order for them to process transactions. So I just wanted to make a distinction of that.
So now, like, I've sat down with Ryan Grace and like it all sounds confusing, right? A lot of this sounds confusing to just to someone like me, or I don't know, I'm not going to say you, Liz, but just sometimes it sounds confusing. And Liz and I will always say, we don't care how the sausage is made. We just want to know the trade. Like, we don't maybe care as much about like all the ins and outs and details. We just want to know what we need to do and how to make money. Do you agree, Liz?
100%.
So we just always want someone to tell us like, okay, here's what we have to do in order to make money. So, because I think people get lost and confused in all of the details.
Sure. Yeah.
And I think our viewers, they tune in because they're like, okay, yeah, where's my next next way to make money? I know how to trade options. I know how to sell puts. I'm starting to do futures, and now I want to make money on this crypto game. And like, how do I do it?
Yes.
I'm glad you brought in staking, because it was a reference that you brought in last week that we didn't really understand. And to me, it just means you're getting interest on a coin if you already own it, but you can't do it with Bitcoin. You can only do it with the altcoins, correct?
Yeah. For our conversation here, you only think of like the altcoins, your Ethereum, Solana's, XRPs in some ways. There is a way to do it on Bitcoin. This is the financialization of Bitcoin. This is why there's opportunities out here, right? Because you can actually have a wrapped version of Bitcoin on Ethereum. I won't get into this at like too deep, but there's always a way. It's just like traditional markets. People are always coming up with a new product, right? Like it's a lot more accessible. I guess back to Jenny's point, I think the easiest way if you're a new person to make money in crypto is to just set a certain amount aside and just buy weekly, buy monthly, buy quarterly, right? Like I think that's the easiest way to get involved.
Would you say pepper in fields? Don't just put all your eggs in Bitcoin. Don't put all your eggs in Ethereum. Don't put all your eggs in
I would overweight Bitcoin, then I would put it into Ethereum, then Solana, then your XRPs and some of these other ones if you want to go a little bit more out on the risk curve. I just generally think like the first way to do it is don't worry about staking, don't worry about DeFi, any of this buzzwords. Just get some exposure, right? Like just like we talk about in traditional markets, if you just get some exposure, a small amount, whatever that is for you relative to your portfolio, it helps you pay attention. Maybe you start following more people on Twitter. Maybe you start paying attention to some news, right? Just to kind of get you, in the mindset. Now's a good time to do it. Yeah.
I will second that, Dan, because since we have it on our platform, I have kind of gone in and the only way that I know what price anything is trading is by buying it.
Right.
It's a lot. I'm not
having it in your account. Right. I like having it there and seeing it.
Then I keep an eye on it, and if I've done something, I know exactly what I've done. Where otherwise, it's just in theory and concept. I'd be like, where is it trading?
Yeah.
You know what I mean?
The funniest thing is like everyone asks me internally, clients, they're like, how do I learn more about crypto? Like, what do I read? All these crazy terms, it's confusing. And I'm like, I've kind of come to the conclusion that the best way to learn about crypto is to just buy it, just buy a little Bitcoin and just kind of like either you're going to force yourself to go deeper and learn a little bit more, or you're just going to put it in a drawer and look at it in 5 years maybe, or, whatever it might be. So I think like generally for crypto, being a long-term holder and then like, being a little bit savvy, trading around some things has been kind of a successful way to do it. I don't think you should be like FOMOing in at all-time highs. Like I generally believe, So the biggest mistake I see for traders, people that are involved in markets, they might not pay attention to crypto until it gets out into the mainstream, is they end up FOMOing in at all-time highs because they have no frame of reference. That's why I say like, hey, maybe it's better you just set up a recurring buy and you say, I'm going to commit to this for the next, 2 years of couple bucks a month, couple bucks a week, and just kind of like build up positions. And then, if you get these big swings or whatever, you can, trade out of them. IBIT's fine. Trading options on IBIT's fun. But for beginners, like I generally don't like the whole, trying to be like a swing trader or any of that. There's obviously pick your areas of opportunity, but to be successful in crypto, you've generally had to have conviction to hold through 70% downswings. You've generally had to be a long-term holder to really profit. Obviously, there's exceptions. There's ways to make some trades. These new shiny object trades are always a good, always get popular. It's just like for somebody that's a beginner, I just don't know that they have enough information to know when to like exit or where we're at in different cycles. So that's why I'm like, hey, the best way to do it is buy a little bit, force yourself to pay attention.
Now, do we have like a crypto ETF that's a little bit of everything, like a little bit of Bitcoin, a little bit of ETH, a little bit of Solana, a little bit of everything, so people could buy into that and they're buying into everything rather than allocating to each different one?
No, as far as I understand, that doesn't exist yet. There's been no.
That'll come eventually.
Yeah,
Is my guess.
Yeah, it definitely will come. The thing that's interesting to me is a lot of crypto native companies, Crypto.com, Coinbase, Kraken, they've actually capitalized on this by giving users the option to buy baskets, right? So like it would be your layer 1 basket, ETH, Solana, SUI, I don't know, BNB chain. It would be your store value basket, and that's like Bitcoin, XRP, or whatever. They're just different baskets of cryptos that you can buy and have exposure to. Just kind of makes it easier. It's like a thematic, right? Like these like thematic ETFs. It's a feature we've talked about adding. I would need to gauge if there's demand for that from our users, but it makes it easier because I don't know that people want to sit there and like research and try and understand why does Dogecoin have value? It's just memes. It's just human nature, right? Mimetic value has gone back centuries. It's a human psychological factor, right? Now we have a token to capitalize on that. That's why it has value, right? Just like there's no like, oh, it has fundamentals and all this. It's just that's what it is. It's kind of that's the easiest way to think about it. And there's different versions of that. So yeah.
All those little meme coins, the only way they're going to get a bounce is if the people start getting behind it and talking about it, and it gets a boost from social media somehow.
Pretty much. Yeah.
Okay, so one question that I think was really good from the chat: what are the fees and commissions? I know we talked about maybe putting little bits in there. Is there any detriment to doing little bits, or is it beneficial to have like a buy in bulk? Or what about the fees and commissions on these cryptos?
Yeah. So for Tasty, we just take a spread. So it's baked into the price. We don't charge commissions at all. So you're really it's price improvement. So the way to get around that is to just put a limit order in. If you're depending on what your size is, right? Like I think it all kind of comes down to size of the trade. But we take it's like a 65 basis point spread for Bitcoin and ETH, and then. Or it's a 50 basis point spread for Bitcoin and ETH and like 65 for the other coins. So the way to kind of get your price is just put a limit order in, right? So I don't necessarily think that's that big of a deal because compared to competitors, like Coinbase is charging you a commission and they're market making against you. They run an exchange, right? Kraken, same thing. Crypto.com, same thing.
People realize that, Dan. I don't think people realize that because you can't. It's not that clear when you're. I mean, I have a Coinbase account and I have a Tasty account, and it doesn't. It's not that clear that they're doing that against you.
Yeah, I know. Actually, I had to do a big report on all of our competitors, and their pricing structure is incredibly confusing. In fact, with staking, they take 30% of the rewards. That's their take rate. So yeah, that's why I think like if you're a little bit more sophisticated, doing it on your own is beneficial because you keep 100% of the rewards. So
with staking, if they're taking 30%, and then I don't know how you're taxed on staking. If you're taxed yearly, like short-term gains, or if you're taxed, I'm not.
I think it's taxed as income. I think.
So then you're giving 30% away to them, and then you're giving half away taxes.
Exactly. That's why.
I'm not loaning you any of my coins.
Yeah, exactly. That's why I think there's benefits to being a self-custody power user crypto. You don't have to pay these. Like that's the option, right? Like there's an example. Hey, like I trust Coinbase. They make it easier for me. Maybe I'll be okay paying for that peace of mind. But if you really want to go out and be a sophisticated user, the next step is to get a wallet, self-custody your tokens, and go interact and stake yourself and kind of learn the microstructure of the market and how these markets and networks work. So, yeah, I mean, a lot of people don't know that, but at the same time, a lot of people will pay for that peace of mind too. So, I think our offering is very competitive. So, like I said, we're not taking commissions. We're just charging a spread, which you can. If you can get your price by putting a limit order in, just do that. Yeah. And yeah, we're adding more tokens as we go. If anybody has questions or anybody wants to kind of chat through this, or they're doing something that they might be confused on, me and the team have we love talking to clients. So there's other trades that we can do, and we can kind of cue you in on this, because to your point, you kind of want the know-how. You kind of want to know how to take advantage of this. I could sit up here and go through slides all day about terms, but like where is the opportunity? Where is the next trade coming? So I don't think you necessarily get that from just kind of doing the education stuff. You have to force yourself to participate. So yeah.
It's been 30 minutes. So here's my question for you.
Okay.
What is Dan buying this week? SUI?
I have had a huge position in SUI since about 2023.
So you're talking your book.
Yeah. Well, yeah, I'm not. Yeah, I'm like a buy it. I'm a build a position and hold, and then go out and do things in DeFi on SUI, right? So I'm earning probably like 6-7% staking and doing some of this stuff on the SUI network. I think, Bitcoin's back at 115K. It gave up a lot of this run that we had in July. I think I'm looking to scale back in and buy, if Bitcoin goes a little bit lower. ETH might pull back to 4,000 on its way up past 5K. Same with Solana, might get a pullback to 150. So I'm looking to kind of scale into some of the majors, Bitcoin, ETH, Solana, XRP. And then, I'm looking at Chainlink. I'm looking at Aave, some of the SUI, obviously, some of these that are a little bit what I would consider altcoins, but have real users, have the networks are generating fees. I think those are kind of where hidden opportunities are. So my core positions will always be in the majors. I believe that crypto follows like a Pareto, right? Like it's a long tail asset. Bitcoin successful, ETH successful, Solana is getting there. People are knowing that more. XRP, obviously, I think like you want to stay where things are liquid and really just hold those core positions, and then kind of pick and choose your spots on some of these, longer tail, more risky assets, but have an opportunity to make 100x, have an opportunity to make 1,000x.
Awesome.
Yeah.
We don't want to keep you.
I don't want to keep Dan, but I just want to find out, Dan, if people want to tune in and watch the piece with you and MCVT, what time are you on today?
We're on at 4:30 Central on tastylive, so YouTube, you can watch it. That's 4:30 Central. We'll have a half-hour discussion. You can also watch it through our Twitter, Tasty Crypto Twitter account. We will stream that live through our Twitter. And I hope you guys tune in. I think this is the first time we've really ever talked to a treasury company chief investment officer. So it'd be interesting to kind of hear the strategy there, right? Like, why is their thesis SUI? Like, that seems to be kind of, not many people have heard of SUI, I think. So, like, what's going on there?
We'll for sure tune in. And we cannot say thank you enough, Dan. We really appreciate you giving us your time on every Monday. And you'll be back, you promise? Next Monday?
Yeah, I'll be back. You guys need to give our listeners, not just you guys, our listeners, if there's anything you want me to cover, email me or email Liz and Jenny, tell them like, hey, I want to hear this for Dan's crypto segment. I'll prepare some stuff and, I'll give you a trade, or if that's kind of what people want, I'll be more than willing to do that.
And Dan, what is your email address? Just so people know.
Dan@tastycrypto.com.
Okay, and I'm Jenny,
Oh, pleasure.
J-N-Y at tastylive.com, and Liz is L-I-Z at tastylive.com. So people can send us their crypto questions, and we'll cover them on Mondays.
And zero pressure, and this is my final statement. Dan, we want Dan's lock of the week every Monday. That's all we're looking for.
Hey, also, my lock of the week is usually published every week in the Tasty Crypto newsletter. And,
Perfect.
And real quick, one that I made a call at about a month ago, Aerodrome, the ticker's AERO. It's it just got sponsored by Coinbase as their preferred decentralized exchange. It was trading at 31 cents in April. It's at $1.30 now. So there's popular, there's pockets there of opportunity, but I won't get too far into it.
I have so many shares of that little Peppy because I liked the green frog.
That's another one. Hey, memes are valuable.
All right, thank you,
Dan, thanks so much.
Thank you, guys. Thank you. Bye.
It goes by so fast, Jenny.
Oh my gosh, I know. It's already 10:35.
Let's pop into the platforms. Boozer down the line.
Yeah, let's pop in the platform. And I actually have some of these pulled up that Dan was taught. Well, I have the zero hash.
Yeah, you have the Bitcoin and Solano.
Right. That's what I had before the show started. But now I actually want to look at, he talked about this SUI, which I don't own any SUI. Do you?
No.
So that was new to me. Not because I've never really looked at it. There's so many, and I don't have any. But now what I'm going to do after this show is going to go buy some SUI.
Yeah, SUI looks great. And I might have to have some Pepe, because if you've got Pepe, I need Pepe.
Oh my gosh, let's look at Pepe. Where is it? Here it is. PB. There's a little, I only like the little green frog. There's his symbol is a little green frog. It's 0.000000. This is so cheap, but you could load up thousands of them for a low price.
All right, let's pop into our platform and we'll look around. I do like having Dan on and I want to learn more about crypto, but I'm glad you brought up that point too. I'm not going to learn all the ins and outs. I just want to know what the lock of the week is.
Just tell me how to make money. Right. And the staking, eventually it'll come here. If not, you got to move it to the wallet, which is great. I get the whole idea of making 7% on the money you've got tied up in. Well, he said he's making 6 or 7% on the money he's got tied up in SUI. And if someone wants to get into more detail on that, email Dan at tastycrypto.com.
Yeah.
Okay. So what? We've got a handful of positions on as far as any big movers. CRWV is not really moving, but what we had was just this weekly Broken Butterfly. Do you remember when we put this on?
Yeah, I mean, for we could take it off for $170.
Yeah, I know we had the playing it to see, what if it goes down? But we could take this off now and put a new one on for next Friday.
Put this on for $160, and I know that was the plan, and I'm glad we did the downside instead of just selling the put, because we actually made some money on it. It's fine.
I know. So I'm going to take this off. We'll take our $167. Small credit to take it off. We're getting back $1,000 in buying power because we had about $800 in buying power tied up in the trade, and then we made, 170. So that's why we're getting back so much buying power.
Yeah, love it.
I don't know if these are wide markets.
Okay. And then push that out, and I'll go everything to follow feed so we can do it in real time.
Sure. Today, let me look at today. GTC and Enphase Energy hit Friday, but I don't know. I know we had this discussion, and I can't remember. We have so many positions and so many accounts. I couldn't exactly remember what our GTC had to buy back a put. I know we talked about adding on a call, and then we said, well, what if there's some news in the solar industry? And there actually was, and so it jumped up, and our put came off on Friday.
Did you push that through? No, Enphase Energy put is not pushed through.
No, I didn't push that through.
I will push that through. I'll put it on as late.
Let me see if I can go back to 7 days. So
yeah,
1208. Yeah, 1208. But we paid $3 for it. So we paid a lot for it. I don't know why that GTC was set for $3 unless it was just like 50% after a roll.
Sure.
And I don't know if we would decide to continue to stay. And I know it had a bounce, but not. It's still low. It's still a high rank. I don't know if we want to keep.
Yeah, but I thought if you're going to look at it, you would. What else did you just get filled on?
That was you.
Oh, that was me. I'm out of my SPX.
Again, they're coming up quicker and quicker, but the vol is so low.
I am out of my SPX. That's bonkers. Okay.
So Enphase Energy, I don't know if we want to keep up with puts in there. The 32 put is $1 using only $324. It seems like a good return on capital.
I'm glad that our GTZ hit on that random put for $3 because I would rather look at this with a fresh set of eyes and have that 32 put than a $3 in the money put.
I agree.
Sure, ship it. $3, good return on capital, and put a GTC in for that.
Once it fills, Liz. Once it fills, I know. I'll go as quick as I can. Okay, so we're filled in Enphase Energy. I will push that out. So basically, you pushed out what we closed on Friday in there, and then you could push out this new put in Enphase Energy.
Perfect.
Now. So that's in.
So BE is Bloom Energy. I think that was last week, and we're at 47%, I think, right? Am I looking at that right? Oh, I'm sorry, 25%.
26%. We got in it on, Wednesday or Thursday? Oh, this must have come from what's your assumption?
Is it thundering by you?
No.
Guys literally just opened up.
Really? Well, I know they're calling for rain today. I know they are because and I don't need to get into detail. We got a late show, but where I know they're calling for rain today. We got a lot going on because we're still packed. I know you're packing and going. We're packing and going.
I'm leaving. We're packed. They're outside. Cars loaded, and at 11:01, I'm hitting the road.
Hey, one thing I forgot, which you definitely need: paper towels and like some kind of cleaning spray, because you might not have thought of that, but it might not be like sparkling clean when you walk in there.
Oh, I've got so much stuff. I've got the Costco thing of paper towels and cleaning spray for days because he's got his own apartment.
Oh, yeah. Okay. All right. Good. All right. Good. All right. Moving on. $40 is Bloom Energy. I'm totally fine with taking this off.
Oh, when I looked at it, though, I don't mind taking it off, especially because it's a spread. But Bloom Energy has still got a 50 rank, and there's no earnings coming up.
We got out. We made some money in Bloom Energy. We'll take it. Dow is just starting to move. We had in the money puts that we rolled, and we added an extra put. What I do think we do is just take off this extra put we added because that's 46% in just a few days.
Do that. And that's what I'm saying. Let's clean this up as much as we can because you have TP, and Glenn on for the next 3 days. And
I know. You're not going to be back till Friday, which I think is a long time. So
Friday, tune in at 7 a.m. if you'd like to see these two ladies. We're doing the morning show on Friday.
You're right. We won't even have our show. We'll just have the morning show.
Yeah. So no trades then.
And thanks for reminding me, or you would have been on it solo. I forgot.
Well, it's going to be a sunglass episode because we can't say certain trigger words to stop me.
No, it's fine. Let's go. Let's keep going. Lockheed Martin. We sold puts in Lockheed Martin put spread. I know, again, 26%, but we sold this 4 days ago. So let's take some winners off the board.
Take it off.
And look at all that buying power we're getting back. Because TP, he's going to go crazy. We're going to be selling 30-cent put spreads like crazy.
Well, TP does love, and I do thoroughly enjoy this now. I get a daily text from TP about his SPX trades, and I love it. So he does love the 0 DTE SPX trades since our last show. So I feel like that's going to be a big topic of conversation too. I find out whether he wins or loses every day, and it's fantastic.
And AI, we've got a Strangling AI, and it's getting a little bit of a boost. So fine. That's fine. I wanted to take a look at CRWV. We put on that downside broke wing butterfly. Let's see if we want to do one again next week. And if we could even move a strike. We had the 195. Could we do the 95.90?
Yeah, we could probably take a look at it.
I think I got to move it up a little bit.
Yeah, because we took in $1.60 on the other one.
Yeah. Okay, so here's the 98.93, or let's do 98.94. We're getting 212, and then I can spend like 80 cents. How much? Oh, this is exactly how our last one was. We used about $800.
Yeah, we got that back. We might as well. I don't mind.
Break even here of 89. Right around the expected move.
Yeah.
What do you think?
No, I like it. Perfect. Ship it.
Okay. So this this is what this looks like. They're weekly. Why do we like some of these broken wing butterflies weekly? Because max profit is going to be at this peak, and we're only going to make that if it hits it right at expiration.
And we don't mind. If something happens and we get to keep the 130 pretty quickly, fine.
Yeah. I'm going to go down to 125 final offer. Filled. So here's where it's trading no matter what to the upside. We keep that 125. If it goes down and we're sweating this and it's down and this is losing, well, we'll just hold it till the end of the week and hope that it hits that peak.
Yeah.
What is going? Natural gas down again. It had a little pop last week. Natural gas had a little pop, but now it's kind of coming back down.
Is it through our spread? What do we have? What's our spread?
Did we move our spread?
No.
Where is natural gas? Oh, geez, here. Oh.
Yeah, it's through our spread.
Yeah. 8 days. Well, we need a pop. We need another pop in natural gas. We'll keep a close eye on it. When we had the visitors in town last week, viewers in town, I met someone who they're just trading like corn, soybeans, wheat. They're just trading all the futures. And that was interesting to me. And that's something I thought like, I'm going to start keeping more of an eye on those.
I mean, there's a lot. I think a lot of people and I love when people find their wheelhouse, whatever it is that they like. Do you know what I mean? Some people just trade 0 to T SPX. Some people just trade spike lizards and SPY. Do you know what I mean? It's just people can find their own way because there's so much out there.
All right, I just pushed out the core weave out to the follow page. We have our new core weave position on, and that bullish, which was a new IPO last week, down again. I switched my position. I sold out my stock and just sold puts in there. And what I do like with these new IPOs is that you get a lot of premium. That's what I find with the new IPOs. You get a lot of premium. Like where else are you going to have
They don't know how to price it yet. There's no Ivy rank. They don't really know how to price it, right?
Right. Yeah. And usually you tend to get a lot of premium. Like here you got a $55 put for $3.30. Now I know everything's cash secured on these new products, but sometimes it's easy to spread it off. It's still a lot of buying power, but it's just something for people to keep an eye on. I do think when we get these new products out there, there's potential there, right? Like this year in CoreWeave and Circle, and there's been a lot of premium to get to be.
Are my eyes deceiving me, or is that a ridiculous amount of call skew? Like go.
Yeah, no, it is. You're looking at
standard deviation 45.80. I just looked at right in between those dotted lines. The 45 put is $1, and the 80 put is $3.
Yeah, and you look like if you look at $3, the $3 put is the 55. That's $8 away. The $3 call is the 80, which is $17 away.
So they did a great segment this morning. I actually didn't hear it, but I heard the concept of it. So, but they were talking. Actually determine which way the market is, but it shows the velocity of which way the market could move.
Right, that, like where if it does move that way, it could like pick up way more steam, and that makes sense. Like if bullish is going to keep going down, well, maybe it won't go down on this in this going down. Well, maybe it won't go down on this in the same velocity that it would if it started. Yeah, I like that. I like that. That was good.
It was a pretty interesting way to say it, so I did like that.
So. I don't know what you think of a put spread in bullish.
I mean, I don't mind. Let's see. Can I see the chart?
Here's $1.55 for 345.
That's a number I can live with. There you go. I don't even need to see the chart then.
Yeah, here's the chart. It just IPO'd.
No, yeah, I don't care. I just want to see it's down beneath its IPO. I just didn't feel like risking $1,000.
No, I mean, I'm glad I'm not the guy that bought it at 118.
Are you sure you're not the guy that bought it at 118?
No, I bought it this day. I bought it like 70 something, sold it out $5 lower and just sold. And then I got in with puts. I don't know, maybe the 70 puts or the 65 puts, but I know whatever puts I sold them for like $1,000. I'll sell $1,000 put all like any day in a $60 product.
Right. Cause you're at 50.
Yeah. Yeah. Oh, you know what we never did? Twitter.
Let's go.
Because we've got 10 minutes to go. So there were a lot of tweets coming in early, but I wanted to go to Ash Finn because he's showing us what he does at night. We see Ash Finn's closes, but here I entered my overnight ES fly.
He shows his opens too. He shows both.
Oh, okay. Well, yeah. I didn't know exactly what time. So he says right here, like I usually put these on sometime after 8 p.m. EDT.
Eastern. So that would be
that would be like EST.
Well, it's EST or EDT. Like we can be CDT or CST.
Okay. All right. I wasn't sure. So
remember how it's like daylight time or not daylight time? So I think that's where it comes from.
EDT. Yeah, Eastern time.
Yep. Told ya. I love that you have to check my work.
EDT is daylight saving time or 4 hours behind GMT. EST is Eastern Standard Time or 5 hours behind GMT.
Yeah, because it depends on if it's, yeah.
Oh, yeah. Sometimes. Okay. So, yeah. So right now they're just an hour ahead. If we're 10:50, it's 11:50.
Yeah. So that's
putting them at 8 p.m. It's 7 p.m. our time.
Correct.
So putting them on sometime after 8 p.m. Set my closing order right away after fill. I have mine set for 10:50 now. So if he sold it for 11.75, is buying it back for 10.50. He's making $1.25. You cut that in half, and he's making like $60 something,
which is fine. And he's making it $15 wide, which is actually only $7.50 wide. So it's not bad. It's very similar to the iron fly that we do, except it's less risk because you're 15 instead of 20. $20 wide would be a $10 wide in here. I know that because I do it with my son.
Right, because remember, like the ES is a 50% multiplier. So a $20 wide would be a $10 wide. Like Liz said, if you're collecting $11.75, you got to cut that in half. And then if you're making $125, you cut that in half because of everything is a 50% multiplier. Nice. Yeah. Which that's tricky. Again, like I know for new people, they're like, well, why does it have to be like that?
It's so funny because I'm so versed in it now because I'm helping my son with it that I was like, I was showing the viewers when they were in. I was like, I've got them. You open up the bar, you sell this one, and you go skip, buy, skip. You know what it is. Like,
well, you better hope one day he's not looking at something with like $25 wide strikes.
No kidding.
So funny. All right. And Frank, the housing market index, that was the only thing on the calendar today. Oh, and I love this. Jack Tucker, update from Friday where I attended the live show at Work by 11. Content was great, and I met my Twitter friends. Sorry I couldn't meet Liz and Jenny and Nikki Bat. During the show, I put on 2 tranches with GTCs that closed, and then 1 more at lunch. Total profit for the day after fees, $4,082. Great.
That's a great day, Jack Tucker. That's a great day. I love it.
So here's Jack Tucker. Here's Blue Wackadoo.
I wonder if Jack Tucker and Blue Wackadoo were friends before this.
I don't know, or did they just meet? That's awesome.
Yeah.
Love it. Love that. And, and here's Eric. Posting his picture. Happy Monday. It was so great to meet the Tasty crew and so many trading friends Friday. Back at home and Ivy rank is down. Put on 2 5 lots at 17 Delta, 50 points wide. And, everything's working out. The market's not moving much and vol's coming in.
Yeah, it's worked out for everybody. So hopefully, fingers crossed today for everybody.
Good. Monday morning, 2 tranches, collected $11,000 in premium.
I love it. Jack Tucker, I really wish we could have met you.
I know. Someone had to be on air and do the show.
Yeah.
Okay, and Ashfin, another overnight winner chicken dinner. Good. Thanks, Ashfin.
I like that. And so that's fine too. You can put it on overnight. And what's great about that is I think he had, he just came in the chat. The max loss on that would have been $162. That's it. So he's putting them on overnight. It's a $162 loss. That's great. I love it.
Does this make you want a beef sandwich?
Yeah, I do love, I love Italian beefs.
Liz grew up, her family owned an Italian beef shop.
Love a good Italian beef. Wait, what did you do? Oh, Al's beef is good. Good job.
Oh, that's what I was wondering. Al's beef. I've got a bone of beef on the corner, which I like bone of beef. Now that you don't have your beef store, where do you go near you?
I think Pops is the best. Now, Pops is not nationwide.
Pops
is the best, and they have the best fries and cheese fries. I'm not
So
saying.
done for the day. Super quick, $13.27 after fees. Nice.
Stop it, Eric. I love it.
Look, thank you, Mr. Market. You paid for the Chicago trip.
That's awesome.
Ajit.
It was so great to meet Ajit too.
No, calendar spread for this week's earnings with 2 different expirations for the long leg. And
Target. I did get an email from you. I think TP and Jenny are going to talk about it tomorrow. So
share it with me. Let's forward it to me.
Well, no, you're going to be surprised. TP will have it.
Good morning, ladies. Can you please double check 45 DT options, HIMS, SPX?
4 DTE options, HIMS, SPX, and IBIT.
Four. I just threw in the 45.
So the SPX is going to be something we put in very, very small. I know it was something we saw in volume when we were on the SIBO floor. So we'll take a look at that. But let's IBIT, Fabio, we've been doing weekly IBIT trades. I know our puts in the money because Bitcoin's down. I looked at it, but I'm not doing anything with it. Like Bitcoin can just as easily have a quick pop. Either Bitcoin has a quick pop and it comes off for a winner, or if not, I'm going to deal with that on Friday because I don't mind rolling in the money put. There's extrinsic value, and if Bitcoin has this like a little fall and we've in the money put, kind of like a synthetic covered call, I'm okay with that. So we're not doing anything in IBIT either. HIMS, we just have a call spread. We put that on as kind of a band-aid over a bullet hole with our deep in the money put. That also expires this week, but that's another one I'm going to leave for now. That's close. That's very close. A little pop up in HIMS, and that could be right back. Yeah. And that was one where it's kind of like synthetic stock where we washed extrinsic value. So we had just synthetic long stock anyway with a deep in the money put. Correct. I like it.
Okay, Punish Pixels, good morning. It's a short 18-hour nonstop from New York or Seattle via, hit the wrong, Singapore Air.
Love it. Sign me up. I'd love to go.
Yeah, I would go for sure. 18-hour flight.
And then Jeep comes in, Target calendar spread for this week's earnings with 2 different expirations for the long leg.
Okay, I can take a look at Target. And I think Target's always on the list of high vol lately, and they have earnings. So earnings are the 20th. So, hey, who doesn't want an earnings calendar? I don't mind it.
I don't mind it at all.
But what strike? That's the tough thing. Should we?
I'll go back to Twitter. I want to see what Ajit was doing. Just so. Oh, I can't find Twitter. That's weird. Go back to Twitter and see what his strikes are. So he's got the
106 call, 9.5 and 8.29.
Yeah, 106. Okay.
106 call, 29 and 5th. So he's like
September 5th.
Buying the 18-day and selling the 11-day. It's cheap. Yeah, sure. 30 cents. Oh, we'll get in.
3.
I'll actually do 2.
3. You got at least 90 up. You got to do it.
Oh, if we're going to do multiple calendars, I'd rather separate strikes, a little bit.
Just ship it. I'll run it out of time. We only have a minute, and I really do have to run on time today. So ship this.
Oh yeah, I know you're on your way. Build.
Okay, push that out. And we are done for today.
Then we're done. We are done. That was a quick show, but we had Dan the Crypto Man on.
I know. I loved all the information.
So this is who he's meeting with, MCVT. MCVT is Mill City Ventures, and they're the ones putting all that money into SUI. So this had quite a run up already. I don't know, did SUI have that same run up last week?
I do not know, but I'm going to tune into that crypto show and find out.
Yeah, me too. Okay, everybody, have a wonderful day. Liz, I will miss you terribly. I have TP on tomorrow, TP on Wednesday. I'm on with Glenn on Thursday, and Liz and I will be in for the morning show Friday. So we're not at the SIBO this week. It's kind of a crazy, hectic week. Safe travels. Go blue.
Thank you very much. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. I'll see you tomorrow with TP.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
Doing good, it's been a quick week already, so
yeah,
just enjoyed some of that rain overnight. I don't know if you guys got it up here, but
that was insane.
It was very loud. Very loud.
I thought it felt like our building was getting just destroyed. It was because you heard like the and then it would just explode. I'm like, what is going on right now?
Yeah, the dogs going crazy.
Oh, I bet.
We gave them some of their doggies Xanaxes. And, yeah.
Love that.
Yeah.
Yeah, it was crazy. There's like definitely sideways rain.
My plants needed it.
Oh, I'm sure.
They were not
probably
happy.
Thriving.
They were not happy after the Seattle trip. It must have been pretty hot over the weekend.
How often do you water them?
Well, I was gone for like 2 days, 2.5 days.
Yes, and Daddy.
Yeah, so one of them was a little not happy.
Revolting?
Yeah, it was revolting a little bit, but it's okay.
Nice thing, you got a balcony. If it dies, you could just throw it over.
That would...
It's right in the street.
Yeah, right onto Ashland. And just a little too busy of a street for that, but yeah, it was good to get a little rain on them.
Yeah, speaking of Seattle, thanks to everyone that came out.
Yes.
It was a glorious time. The old crocodile. We got lucky with some incredible weather.
Yes.
It was literally sunny, zero humidity, 75 degrees every day. Not a cloud in the sky. No rain.
It's supposed to be like gloomy there?
Yeah. All the time. Yeah. It is gloomy there all the time. Yeah. So we brought the sunshine.
The weather's really nice though. It's very like dry, not like humid, hot. It's really a good place.
Yeah.
How was the coffee?
It was really good.
Really good.
The cold brew there is unmatched. Yeah. Just a straight black cold brew. It just tastes like there's stuff in it, but there's not.
Yeah. And I think between the two of us, we probably got, I would put our over-under on oysters probably at like 75 combined, me and you.
Yeah. We went back to the same place twice. They welcomed us back the second day. They're like, welcome back. We're like,
you're here again.
Yeah.
You guys.
Just hammering oysters. But yeah, they are extremely good.
They're West Coast oysters?
Yeah.
Okay. All right.
We were told that we had some oysters that you're not going to find anywhere else.
Huh.
So that's how they sold us.
I thought the marketing for the East Coast oysters, the like Blue Island or whatever, they always hype that up. But
well, I will be going to Boston in a little bit, so I'm going to do
you'll compare
and contrast. Yeah,
Boston's always fun.
Yeah. But it was a great time. Met some new faces, saw some familiar faces.
Yes.
And yeah.
You're in the Chicago area.
Oh, yeah.
Tom and Tony's
this Friday.
On Friday. Mike and I will be hosting the show, the morning session. So you want to come out for that. That's still open, I believe. And then we have also at the open house. So if you are coming to the event and you want to come to the office, please send us an email so that we can give you the link to sign up because you got to, it's all the security stuff and all that stuff.
Yeah. It's not like the old building where you can just walk in.
Yeah, it's, we're corporate.
It's an actual building.
Business now. We're not just, doing our fun thing anymore. So.
Mm-hmm.
And I'm actually allowing people to sit at my desk and do my work for me for an hour.
Yeah.
Perfect.
Anyone that wants to.
Yeah. A real live-in experience.
Yeah.
Yeah.
That's a good call. I like that.
That is nice. Smart. Nice. But yeah, it'll be a fun week, busy week. But yeah, sign up if you want to go to the show on Friday.
Yes.
Doors at 8, shows at 9, back to work by 11, as the title of the show says. Talia Hall's sick.
Yeah, it is a really cool spot.
A lot of really good taco places around.
5 Rabanitos right around the corner.
Yeah.
Is that what we have today too for lunch?
Good question.
I'm not sure.
What do you got?
We do, yes.
5 Rabanitos. Okay,
Yeah.
good. So
Always hits.
Yeah, it's a good one.
Yeah.
But yeah, if you like
of the Taco Tuesdays, it's far and away the best one.
Strong.
Yeah.
Strong offering.
Yeah.
But yeah, Crazy week, busy week, but we are back. And it is Tuesday.
Yes.
We got some futures content for y'all. I haven't done anything in this portfolio. I'm trying to free up the buying power in this gold broken wing butterfly with gold selling off a little bit.
Yeah, I took gold off yesterday. Gold had a huge move yesterday.
Yeah.
It was down like $80, $90 at one point. I know there was some like other tariff on, tariff off, taco, gold taco thing, you know, who knows?
Patty gas going to zero. Maybe one day.
The gift that keeps giving.
This is why I've avoided it for so long, because now I'm back in the pain train.
Yeah.
But it's small. We'll be okay. We'll be able to hold it. Be fine.
I'll do a quick market update. E-mini's up 51. We're at the high of the session. I think this is a new high for the year, or just about there. NASDAQ up 215. You got the Dow up 460 and the Russell up 45. So the Russell and the Dow actually the strongest of the group, having the bigger moves of the four. Oil selling off a bit, / CL 63.29, breaking below that 65 handle. That it's been kind of stuck at. Volatility futures are in the dumps. You've got / VX vol futures 16.15. The VIX itself below 15. Wow. Bonds down 19 ticks. Gold down $4, 3,400 on the dot. You got silver up 24 cents, and then Bitcoin having some choppy action, but staying around that 120 mark, I should say. Ethereum as well, new highs 4,500. Certainly a risk-on day today.
Yeah. E-minis at 64.50.
Yep.
When moon.
Yeah, this is moon. Is this not the moon?
This is the moon.
I mean, come on.
Even Starbucks, Pike's Place.
Literally doesn't matter.
We walked by.
It doesn't matter what you're buying, as long as you're buying.
Yeah.
That's what this market has been.
That's the one thing that will never change about Seattle. The line out the door at the Starbucks in the fish market, or right near the fish market, is just absurd. It's like an hour. Yeah. It's like
Starbucks?
For Starbucks.
Oh.
Yeah.
Is it worth it to wait an hour for a coffee every day?
If you're a Starbucks collector, because they at that location they use all the original logos,
so it's like a
the
tourist
original.
attraction?
Okay. Yeah.
I see.
Yeah. It is the original Starbucks, if I'm not mistaken.
Makes sense. Yeah.
But yeah, lots of stuff coming back. Eli Lilly, I was talking to a gentleman at the Seattle show about that trade. I said we just need a rally, and in the last 2 days, it has done just that.
Yeah.
So looking okay there. If this continues, we'll be able to close that one for a scratch or a small winner. Starbucks reversing. That one's down, basically a scratch now after some earnings gone wrong. But yeah, crazy moves. Yeah, the only thing I'm doing right now is trying to fly off this gold broken wing butterfly. So I've got the 3480, 3500, 3540, a 20 by 40 in the 17-day cycle. And I sold that out for $2.60 initially. I'm trying to buy in the risk for $1.60 to lock in a $100 credit.
Very nice.
I think I'll get filled pretty soon here. It's right there. But yeah, plenty of cash on the side if you got any trade ideas. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. And yeah, you can throw in your trade ideas in the chat.
Cherry picks coming today too.
Yeah, it is Tuesday. Wow, I forgot about that.
Yes, no, I know. My days are all mixed up.
Yeah,
weird. You know, not only traveling, but then you come back and it's Tuesday, first day back. It's a little weird.
Yeah.
So, but yes, cherry picks coming out very, very soon.
Lovely.
Yes.
Should we get to some slides? You can tell us what we should focus on since we are fresh to this week.
Yes.
You were traveling yesterday?
Definitely.
Let's do it.
So the WASD, it came out about 11 minutes ago, top of the hour. Yeah, top of the hour. You know, this corn is really moving right now on it. I mean, I guess we'll go right into the first slide.
Okay.
This yield on the left is what you're looking for, the average bar. The second one from the left. The yield actually came in, the bushels per acre, it came in at 188.8. That was far above the average estimate, which was at 184.4. So, we're about 4.4 bushels per acre for yield over it, and corn prices are selling off right now. This was a report. The August one is interesting because every WASDE up until August is more of a model-based forecast. And the August one is important. It spurs a lot of volatility because it's the first one where they're doing like on-the-ground stuff, actually looking at the crop. They're using data from the National Agricultural Statistics Survey, or whatever that's called. So this yield actually blew it out. And corn, before that we were selling off in corn in anticipation for the higher yield forecast. So the past month,
it's been a straight line down.
Yeah, and now
it's
we're
down,
getting
10% in a month?
Big red bar going here.
Yeah.
So I was kind of anticipating, I traded it long, sold a put spread because we had some good volatility in here.
Yeah.
That's already looking like it's in danger, so I don't want to tell anyone to go long right now. But this is, we're in uncharted territory, pushing down 373. That's really low. I mean, farmers are going to get hurt by this. The one good thing it could do is export demand for corn has been pretty strong. And as these prices get lower,
they want more.
You can see that export demand getting even stronger. So Mexico, Japan have been big buyers this year. I'm not finding the production number yet, but I'm assuming production is also blowing out to the top side. And let's just go over the next chart. We'll keep talking through it. Then we can come up with a trade if there is one. This is the ending stock projections. So ending stocks, it came in, you're looking at the right one here, and that survey average, the circle in the middle of that, that's the average estimate, so 1918. It came in above that, 21, around there. So billion bushels that's in, and that's, it's near the top. It's not above the survey average, the high ranges. So it's still in there, but above average estimates. That's another thing pushing down the price. You get more production, you get, more yield per acre. So you're getting more production. That's really, weighing on the prices right here. We'll go to the next chart, look at how some of these trades play out after the August WASDEs over the past 5 years.
Have they ever had numbers that have come outside of the projections?
Yeah, I think that's happened.
Really? Because I would think, just intuitively, if things are within expectations, you wouldn't see as big of a reaction in the markets as you're seeing now.
No, yeah, and corn is down 3.25%.
And that's a lot in a commodity where you have 18, 19, 20% implied volatility. I mean, is the reaction that you're seeing based on the numbers more volatile than you would expect, or
this is a little more volatile than I expected. Trying to see if so we've moved about 11.25 for corn right now. Trying to see, I think that was outside the expected move.
I mean, I would think so.
Yeah.
Let's see. I mean, the current expected move the next 10 days is $12. There's 12 points. So we're certainly outside. I mean, you've had a day, a 10-day move in a day. So it's certainly outside volatility. I'm just wondering, because, a lot of times, I know the market's up 51 right now, and we had CPI this morning, but a lot of times when these numbers are at expectations, it's a pretty muted move, just because that's what's expected, priced into the markets, number is exactly there, and it's a nothing burger.
Yeah, definitely. But again, the August one is usually a little more volatile just because you're using, the data models kind of change for how they're estimating it. So we are coming up, the next swing low is all the way from August 24th or August 26, 2024 at 360. So, we got 13 points to go until that. So, I mean, we're doing 13 points right now. You're potentially one more day move from this swing low going back to 2024. And before that, you have to go all the way back to 2020 to get a move under that. So, I mean, if I was trading corn now after the WASD, which is probably what I should have done before putting that trade on, I wanted to have a trade on for the show, but I would probably maybe, with the volatility here, do something where you're not expecting those prices to go below that August 24 level at the 3.7 or
basically right where we're at.
360, yeah.
Like an at the money. Do you have a corn position on?
I did. I mean, it was the 420 call that was left over from a calendar spread, I believe.
Yeah.
No, it was a diagonal spread.
I have a wide put spread that's in August.
But I've had this on for 2 months. So I've been trying I initially played to buy the dip, and the dip never was bought. So, yeah, I would get back in for sure. I think it's an interesting time with the way that the U contract is significantly lower than the Z contract, but the Z contract is entering into this new three option cycle situation where you've got the 45-day, the 73-day, and the 100-day all pointing to the Z contract. So you could do something like a calendar spread, diagonal spread, and with this depressed price, these are pretty cheap. Even if you do like a 70-day, 45-day diagonal spread or calendar spread, it's like $500.
Any specific stocks that are playable on this information?
Not with options. Yeah, not really with
there's
options.
Like nothing.
I mean, I think you have the corn ETF. I think it's corn, which is that's down 2.4%. I did go long soybeans as well, though. So I bought a call spread 45 days out, the 10-10, 10-20. That's doing a little better after the report. Soybeans up about 1.3. Let me see the numbers. So the ending stocks for the new marketing year actually down to 290 million bushels. That's from 310, so a 20 million bushel drop there. Production down just a little bit. The bushels per acre actually up just a little bit. It looks like it came in under estimates, though. It came in at 52.5. Market was looking for an average of 52.9 with a high range of 53.6, which is right where it came in. Or actually, yeah, the August for soybeans, billion bushels per acre came in at 53.6. That was at the high mark, a little above, but still the ending stocks for last year and the new crop are down. So soybeans a little bit more of a positive report. Corn just really negative here. So, doing okay on that soybeans trade. The corn already taking a little pain there. So
wheat moving as well. Wheat's getting hit on this.
Yeah, wheat moving. I did not look at the wheat numbers that much. I'm guessing the numbers were pretty bad. Trying to pull up those wheat numbers. So wheat ending stocks for this year came in at 0.869. That's down slightly from 890 last month. The average was looking for 882. So we're a little bit below last month's, and we're also below the average estimate. So yeah, wheat looking, I mean, like a slightly positive report, but it's still selling off. So
all right. I dabbled some more corn.
yeah. I think
no, double down on the corn.
Yeah.
Why not?
If we could go back to that third slide, though, I think we skipped that.
Yes.
Just look at it really quick, just to look at. So this is what happens after the August WASD for the past 5 years, going back to 2020. 21, 30, 45, and 60 days out, you're at an average gain. Every year, except for that 2021, after the August WASD, you are up after 21 days. And then, 4 out of 5 times, if you took a long trade, 80% would be your win rate if you took a long trade.
That sounds good.
Yeah, I mean, if you look at last year, 2024, you get a negative reaction out to 14 days, and then 21 days after, you're at a pretty good gain. But
yeah,
the market is priced in so much weakness. I think this report is a little shock that's going to drive a little bit more weakness. But I think if this export pressure keeps up, and the lower prices might give it even more of a boost. Maybe we recover in 2 weeks, but for now, I think this is probably a negative report into the weekend at least.
Well, I'm getting long.
Again?
I have to. At these low levels, I think it's a digestible risk for 70 days. Yeah. With a 70-day long and a 45-day short for $500, like that's. If you get up to 420 on the Z contract, that would basically double the value of the spread. So we'll take a shot at it. The U contract was a loser, but at these levels, I like taking the defined risk directional shot to the upside, even if it's just for a short-term short covering. Like I'll just keep my eye on it and take it off. I do have a question for you. If we can go back to the first slide. Did you design these to look like pieces of corn?
A little bit.
That's what I thought.
The colorway.
I made some for soybeans too. I made it green.
There you go.
But yeah, I figured the thematic element.
Yeah.
A little artistic.
This is the first thing I thought. I was like, these are literally corn cobs.
Little that putting my classes from high school with Microsoft Paint into use.
Oh,
as you should.
They look good.
So yeah, I'm getting long corn. I'm buying the 400 October call, and I'm selling the 420 September call against it, and the net cost is like $500, somewhere around there. But yeah, if you look at the curve analysis tab, you can see if you get up to 420, it'll pretty much be a double. But I'm just looking for a short covering here anytime soon, and we'll take it off. Fading the move. Cool.
Yeah, that's it for the WASD. Now it's here, so that's it for.
Was CPI as much of a nothing burger as the market seems to be taking it as?
I was kind of surprised that yields continued to drop after the report, where ZB now down 0.5%, and still down a little bit. Oh no, I think the September rate cut is at 94% now for the CME's Fed Watch. So it looks like September is definitely happening. It's a little weird. I don't know if you guys saw this. The new BLS chief, he said he's thinking about not releasing jobs reports for a while. I'm not sure how the market's going to take that.
That's interesting.
Yeah.
Well, it's got to be good, right? If you have no idea,
it's a little scary.
I don't know.
The market
I don't think that's ever happened before.
Yeah, that sounds like it's a setup for a big violent move once they're finally released, because the market just has to operate under assumptions, and then if the assumptions are wrong, those are now compiled over a period of time.
Right.
But that's kind of crazy.
Does PPI matter at the end of this week, you think? Now that we got this.
A little bit, but I think, the report this morning is more. The PPI is like factory gate wholesale prices. It's a little useful, I think, for kind of projecting inflation more, because you're going upstream a little bit more in the chain than consumer prices. But the tariffs, it's hard to keep track of all of them. The pause is on again for China.
I saw that, the 90-day.
Yeah.
Is this the third?
Yeah, I think this
we've had
third extension.
Nice. So this gets us through basically the end of the year, another 90 days.
Yeah,
We will be at all-time highs by the end of the year for the nice narrative.
And we'll move the next one 90 days. We'll just go 90 days.
Take it.
That's what it seems like. Everything just operates very, very short term now.
Yeah.
So I'll just one more week of this.
All we can do
Next
is
week.
All we can do is ebb and flow with the way that things move.
I mean, I think you just stay long equities.
I mean, volatility would tell you that.
Yeah.
Yeah.
Especially with
16
the move
queue.
today is pretty incredible. They're telling you
1489 in the VIX.
It's crazy. Yeah.
Jeez.
When you look at the vol curve too, I mean, it's a deep contango.
Yeah. But these are the times where, like, if you've ever been looking for a time to actually throw on something to try and play for a vol pop, like
It's as cheap
UVXY or
as it's ever
VXX,
been.
like these are the environments you would want to do that in if you're gonna do it, because these volatility products are percentage move products. So now with the VIX at 1487, if you get a VIX move from 1487 to 17, that's a 20% pop. In these products, that's a 20% move to the upside. Where if the VIX is already at 25 and it goes to 26 or 27, it's the same monetary move, 2 points or 3 points, but it's way less of a percentage move. So,
yeah.
But the problem is timing it is extremely hard, especially when you have really low volatility where volatility can cluster for
get some
long periods of
duration
time.
on there.
I was filled on some stuff, so I got long the ZCZ5 contract for an 8-point debit, which is $400.
Okay.
And then I was filled on the gold Broke-wing butterfly, so I took the risk off of that. I moved the 35.40 down to the 35.20 for $1.60, so I locked in $100 net credit. And now if we get a rally up to the spread, I can sell out of that for additional value. And then I got out of the live cattle futures for $100.
I'm still in the live cattle.
Nice.
Yeah.
Very nice.
Your views on gold and silver? I mean, you'd think move in bonds and just overall the rate cuts on the horizon would be a benefit to gold. Obviously, you had the tariff kind of headlines that moved it.
Yeah, yeah.
Are you any thoughts on gold or silver? I mean, they both have huge moves over the last week.
Yeah, I'm still long silver, not in gold. So I'm looking for silver to retake this like 9 and 21 day EMA.
Okay.
It's like in the middle of this range we've carved out from the July high and the July low. So I think a range trade for a while, but I'm in a long, so I'm going to try to stay there. If it gets above 39, I could get out of my position with a nice little gain.
Mm-hmm. I haven't traded silver in a while.
Corn already moving to the upside.
There we go.
Yeah.
Ooh. Yeah. Market's crazy.
It's hard to, it's kind of, I don't know how much there is more to short after the move we've had. So, I mean, if we got a less bearish WASD, even like a neutral one, I think we'd be up right now. But hopefully we get a rebound coming up here, in the next week or two.
I think I'm going to get back into an iron condor in gold. I was looking at doing something in SLV, but it's just there's just not enough juice to squeeze there.
Yeah, I mean, you got a nice range to play gold.
Like 22 or 32 to 35, 36-ish.
Yeah,
like that's kind of what I'm thinking, because we're right back exactly in the middle of this. I mean,
doing the 44 or 77?
I was thinking, so I was going to the 44 day, and I'm wrapped around 32.25 on the downside, just doing an iron condor, and then 35.25 on the upside. Yeah, you got 300 points of range, 150 basically on either side.
Yeah, I kind of like that.
Just kind of playing for an inside move, whether you do it $10 wide or $15 wide, they're all going to trade for around 1/3 the width of the strikes sort of thing. Ivy rank it near 20.
Yeah.
And there's not a lot of volatility around.
Yeah. I like that. I like these broke wing butterflies. They've been working out well. Just because even though we're in this little channel here, we're still getting two-sided action to where you can remove the risk.
Mm-hmm.
Like these moves are big enough to where if you have a broke wing butterfly on either side, you have opportunities to remove the risk and just leg into a free butterfly, which is nice.
All right, I'm in. I'm in on that.
He's in.
I did it 15 points wide, so it's $1,000 in risk. You use $400 in buying power because you get the span margin, which gives you a little added leverage to the position. So I did it at $5.30. So it gives you a risk of exactly 1/3 the width of the strikes, or just over it.
Cool.
Go 10 points wide. It probably trades at $3. Would be my guess. I could pull it up just see where it's at.
That's probably right.
Yeah, 370.
Sounds about right.
Yeah. Little shot.
Yeah. Yeah.
Yeah, I did that too. I did a little different, but between 33.25 and 34.45.
Ooh, I like that. A little tighter range. A little risk one to make one type thing.
Yeah.
I like that.
Love to see it.
Cool.
All right. So yeah, we're all long, aggressively long corn, neutral-ish long, gold. You just got in. I just flied it off.
Yep. Did the iron condor. Yep.
Yep. Wheat. I'm still in this. Oh, but this is a long-term one. I've got the 560 November, 595 September.
Mm-hmm.
September's lost a lot of value, but it's still almost $100 of value, so I don't think I'm going to touch that yet. But yeah, natty gas, we need a rally there. Crude, we need a rally there.
Yeah, what's happening in those two pigs? Natty gas, this is new low.
Yeah, I mean, production's just going up, and the weather isn't supporting demand as much as it should. I mean, you're getting into the winter now, mid-August.
No, don't say that.
Yeah.
Don't say that yet. Not yet. It's true.
Are they prepping for like a absolute Arctic winter in terms of supply?
I mean, Europe has to do that now, but we're doing fine on supply in the U.S. with what's going on right now. So it's looking like that's being priced in beyond the short term now that we're getting into this shoulder season.
And is that the same thing in oil futures too? Like, just more production coming on?
I mean, OPEC actually released their monthly report, and they increased demand estimates. They lowered production for the U.S. I think some commentary, I'm not sure if it came from the monthly report, but they said part of their reasoning for increasing production this year has been to punish shale producers.
Ooh.
Yeah, it's shale producers.
Now they're coming after us. We got everybody.
Yeah.
We got everybody trying to take us down.
Yeah, they're doing it. So I don't know. I'm not trading crude right now. I'm going to be trying to look at getting neutral to longs sometime soon, but I think I'm going to wait for the EIA numbers tomorrow and see how that impacts the market. You got this meeting with Trump and Putin on Friday.
Oh, that's happening now.
Yeah.
I know there's been like back and forth, like.
Yeah, so we'll see what comes out of that.
All right.
Interesting. Interesting.
Is that our volatility?
Doesn't look like it. 50-point expected move through the rest of the week in SPX. So this was the move, and now we just chop.
This is it. Now it's over.
But that's why they're killing vol. I mean, 10%, almost a 10% sell-off in VIX. Like this is what we're talking about. It's only a point move, and it's 10%. VXX.
Yeah, those
down
things
3%.
Those things are dead.
They're gonna have to split. Like UVXY is gonna have to reverse split again.
For sure.
Pretty soon here.
Yeah.
Lovely. Well, I'm gonna pop over to the YouTube chat now. See what's going on there. Welcome.
Yes.
Let's see. A lot of people talking about BMNR.
Oh, that's the
IMS
Tom
trades.
Lee,
Yeah.
the Ethereum treasury company. I mean, all these things, they're all going nuts. I mean, Bitcoin was down like $3 or $4 grand in the overnight session. It's now higher. Risk on, man.
Yep.
Just buy it. You know, it's what it seems like. It's always just been, money printer go burr. We got that coming later this year. And what more do you want? We got the President Pump. Pump. So, war's going to be over on Friday. Hopefully. That'd probably be a positive thing for the world.
No more worrying about bad job numbers.
Bad job numbers. We don't even talk about jobs.
We'll just revise those.
Yeah.
Getting butt kicked right now in these 0-day iron condors. Yeah.
Yeah, that'll
This
happen.
was, and I'm not sure what the expected move was going into this announcement, but.
Well, there's probably a little bit of, if we look at the VIX one day, you definitely got a little bit of a pop in volatility yesterday. You had a rare down day
yesterday.
So you did have a little bit of a pop in volatility, but you're I mean, 0-day stuff you should expect. A lot of them, if they go wrong, they're going to go fully wrong. There's not a lot of wiggle room there.
Yeah. Been trading around 100 lot of XLE shares. Shares are a year-to-date $100 loss, but because I sold premium around it on both sides, I'm up 200 overall.
Nice.
And he's up. Yeah. I was talking to someone at the Seattle show, and he was saying how he basically just buys the micro crude contract or the crude contract, and he layers into contracts, and then he sells a call where he thinks it will eventually go, and just takes the premium, collects it.
Yeah.
Yeah. As long as you have it sized correctly. Especially in crude. Crude has been a great two-sided trading vehicle where you can do that. And if you can absorb the volatility, whatever that is, you're eventually going to have an opportunity, especially if you're like right near the current. I think he was at 65. So yeah, you'll have an opportunity if it gets above 65 to take the profits and reestablish. But that is the nice thing. As long as you don't have a one-sided move that never comes back in either direction, the short premium plus the static delta can work nicely. Oysters.
Are you talking oysters?
Talking oysters.
The ones we liked were what?
Shinsei West Coast oysters. They were 10 out of 10.
Yeah, those were good. And the other one was the Olympias.
The Olympias.
Yeah.
Little tiny, like penny-sized oysters. But they were great. Are we going to the UFC Chicago on Saturday? I sure am, David.
Mike's been doing his research all weekend.
I did. Actually, on the plane, I watched an hour-and-a-half video, a fight-by-fight breakdown, and I took notes to make sure that I've got my DFS cards lined up right.
Yeah.
But let me know who you think is going to win, David. I would love to see DDP win against Chimaev, but Chimaev's just a monster.
Mm-hmm.
But Drickus is the current champion. He's been just plowing through everyone. But there's going to be some sick fights on that card.
You got an underdog you like?
Yeah, I like Mearshart as an underdog. He's
what's
fighting.
His spread at?
He's like plus 250.
Okay.
But
like that.
His opponent is projected to win, but his opponent has lost 9 times via submission, and Mearshart is a ground game grappling specialist. So, and he's already had multiple upsets this year. So I like that a lot. And then who's the other one? Barbosa. I think he's a favorite though. There's a lot of old men fights. Like when I say old men, I mean like they're 40 years old.
Yeah.
But in UFC terms, like
That's
that is ancient.
Yeah, that's old.
So there's multiple 40-year-old fighters that are probably just going to go in there and just blast each
Where's
other.
all the young guys at?
They're there too. But yeah, I think Mearshart and then Cannonier is another underdog. He's an absolute monster, but he's fighting this guy that's just like a little snake. He just like gets in and out real quick. So I don't like that fight for DFS purposes.
Cannonier's 18-8.
Yeah.
So is that the guy that lost 8 submissions, or?
No, that's Ole Chuck. If you look him up. But Cannoneer and Conor McGregor are the only 2 people that have knocked people out in 3 different weight classes. So that's a fun fact.
Yeah, that's a good fact.
But yeah, let me know.
Learn that in your video?
Yes.
Oh, well.
Yeah.
There you go.
See?
All right.
Math.
Yeah.
Science. I got to bring Tom to the UFC fights? Absolutely not. That would be probably the worst.
He definitely would
person.
not enjoy that. I don't think he's a UFC type guy.
No, I don't think so. I think he did like boxing at one point.
Yeah,
maybe.
The boxing is more like
old school. Yeah. Let's see. Thanks for the LE trade. That is ripping. Yep. I got in that trade, out for $100 or so, and then back in the exact same trade for the exact same price, and then it ripped again. Got another $100 out of it.
Go.
It's been great.
Hogs are moving too.
Yeah. Pete's Coffee, infinitely better than Starbucks. I agree with that. The Sergeant Dickinson blend.
I think it's
Major Dickinson.
Yeah. It's
whatever it is.
That is.
It's top tier, especially for cold brew. Yeah. Hazmat's a lock, the equivalent of selling SPX points at 1 standard deviation. Lol. Yeah.
That has been a lock.
When the win rate's around 70%, but it's actually 100%.
Yeah.
Until it's not. But yeah, I will be locked and loaded. ALB premium, pretty good for a semi-speculative stonk.
I don't know. Maybe it's the same person that's obsessed with the stock, but I don't know why everybody keeps coming to this. I think they do chemicals or something. Isn't that like the space that they're in? It's all to put in Dow, which is DuPont, or formerly DuPont. I don't know what they're. Let's see, ALB. Yeah, special chemicals.
Special chemicals.
Yeah. I don't know. I think the last time we looked at this, markets were kind of junky here.
Yeah.
There's our volume.
I mean, it's tough. Ooh.
There we go.
Premium's fine. It's just, you just got to, these markets are 20, 30 cents wide, so you got to be able to manage that. MSOS moving too.
Oh, I saw
the old pot stock.
Yeah, but didn't Trump say he's looking into possibly
Downgrading it. The schedule or the DA schedule, which I thought is what they were doing the last administration. Then they canceled that review process earlier this year. And now it seems like they're starting the same review process with the same intent.
I will say, if it is legal, you got to think there's going to be a futures contract for it.
Why not?
Which
I mean, the thing is with weed, if you're making futures, you got to standardize the product. Is like an
that's true.
Are you gonna have an indica futures and a sativa futures?
Yeah.
/MJ.
Yeah.
Yeah. MJ is one of the other ones. The other ticker for one of the. But you got to be careful with these because they have like MSOS. A lot of the stocks that are U.S. based, the biggest, producers, sellers, distributors, are not part of this ETF because they're not publicly traded. A lot of them are like swaps and stuff like that. Let me look this up here. So a lot of these are, the holdings here are 75% derivatives, which tells me that a lot of them are like swaps or notes on the U.S. based companies. So it's not, there is some drag there to it. It's not a pure play on like U.S. hot stocks because those aren't really tradable.
Yeah. I mean, MSOS is up 68% in a month. So, I mean,
it's a gay. You hit a home run.
Yeah.
I can't knock it.
Got some in my IRA. It's been down since
forever.
But This helps.
Yeah.
That's why I have Under Armour shares for the last 10 years, because I'm just waiting. I'm waiting for a potential day.
Ryan Grace had me slinging calls in MSOS.
Back in the day?
Let's zoom out on this. Because I remember him being like maybe the 50 strike. Yeah. Here, look at that. Nice. 2021.
Yeah. The heyday. Yeah, these, gotta be careful with these stocks. The individual names especially, because they're just like, if you Google the location, it's just a shack on the road.
Well, the ones that are U.S. based aren't publicly traded.
Yeah. But yeah, there will probably be some movement in this industry pretty soon here. Maybe it'll be back.
So Cureleaf no longer trading?
I was just looking it up. I don't think so. I think they're all OTC.
Oh, okay.
So a lot of them trade, like I'm looking at Cureleaf. I think it trades OTC.
Yeah, it is. It's OTC. I thought that was listed.
Yeah.
Why is ZBZ cheaper than ZBU? So a little bit of backwardation here. 114.21 versus 114.08 versus 113.31.
Yeah, those are cuts.
Yeah. And normally, like when you look at this and you see this in like CL or VX, that is backwardation. That is an abnormal scenario where it is usually tied to heightened volatility in the near-term cycles. But with ZB, you have cuts and you have other things that play a role into it.
Yeah. Then those get priced in the markets.
Yeah.
Yep. And E-minis, it's dividends because there's no dividend pay. You know, you don't get paid out on futures. The dividend is baked into the price, which is why the current futures are at 64.58. Our next contract is at 65.13. So that's the dividend baked into it.
Yeah. Ideas for going long ETH A, sell a put, performance covered call, Zebra. ETH A at 4,500.
Yeah.
Ethereum at 4,500. Big.
There you go.
Bigly.
I got my, did like an iron fly in this. I think I did this yesterday. Or not yesterday, last week. On the 6th. Yeah, middle of last week. I got to do something here, roll this one up.
There you go. Yeah, I think implied volatilities here at 80% in September in ETH A. So if you wanted to sell a put and maybe try and get a lower basis than the current rip, you could totally do that. It does use a lot of buying power if you're going naked. But these are still pretty cheap for if you're diagonalizing them. So if you're like buying October, selling September, you can still reduce basis. Like you can do a 6-point wide for less than $3. It's pretty decent return on capital if it continues higher. Or if you're playing for the downside move, same story. But I think if you're doing a debit trade here, it makes a lot of sense to have a short premium component because you're getting a lot of premium to have that on. Sell the UVXY 13 put. I would rather just buy the call.
Can't. Right.
Like there's no money to be made here. If it rips, you make 50 cents. Where if you buy the call in December, let's say, and you put up a little more capital, like if it rips, you're going to make way more.
Yeah, but you with these, you have to trade them. You can't buy December because the way volatility is.
Yeah,
you can't. These are short term. So
and the September 13 put, like it's hard to make money on this because if nothing happens, that put's going to go in the money. With the way that
it's just going to
drag down,
grind down.
Yes. So it's tough.
Yeah. And it's basically cash secured, so it's use a lot of capital.
ETH A strangle 3041 in September.
Yeah.
If you want. Yeah, it's just a little bit elevated buying power. I'm in IBIT. I've got
buy
this,
the wings 10, 15 points wide. I mean, you buy the 40, or I guess the 46. You don't really have the wings on the upside. I'm sure they'll open those up, but yeah. I think if you're trying to get long here too, I mean, you play this via calls, diagonal spreads, crab trades, those sort of setups play into this because there's a ton of skew here.
Yeah.
I mean,
are you doing anything with yours, or are you leaving it?
I have to roll up the puts. But I'm having an issue here on the platform. I don't know what I'm doing here.
Why is the GC price different from the price of gold? And how much difference should we expect?
In what?
Gold futures.
Gold futures to spot gold? Mm-hmm. Spot gold, you have to go through somebody. And so there's always... So there's going to be a markup. I mean, usually, what's it typically like if you go through like a JM bullion or something like? Isn't it like a 3%?
Yeah, it's saying I thought 5, but 3% might be it. Yeah.
3 to 5%, and that's on both ways.
And then that's the same if you go to a pawn shop, right? They're going to take a percent off. There's always going to be something where if you're trying to sell at spot, there's always, someone's getting their cut.
Yes. So that is...
It's the cost of doing business.
Yeah.
Yes.
There you have it. Let's see. Apparently, Veneta did something on ALB.
I'll have to go watch it.
Yeah. Earnings this week. I know we've got the News and Insights tab popping off. If you want some written content, I'll put a link there. What do we got this week?
We had
CoreWeave?
Circle. Yeah, CoreWeave. We had Circle this morning. That was kind of one of the bigger ones. We got CoreWeave, Kava. I've traded Kava a handful of times. I haven't looked at it recently. Kava is in there. You have basically over Cisco.
Cisco?
Yeah. Not the thong song, but the company. JD, John Deere is in there too. AMAT.
There were some youngins in the office that had no idea what the thong song was.
You know the thong song, I'm
and
sure.
we're like,
Yes.
what do you mean?
Come on.
You don't know who Cisco is?
Music
What do you
video
mean?
pops into my head right
Yeah,
now.
the silver hair.
The silver hair.
Yeah.
I think I was in junior high, and that music video would always be playing on MTV.
MTV every single day.
Mm-hmm.
True
Yeah,
classic.
you get home from school, throw on MTV as fast as possible, watch TRL from 3 to 3:30.
Mm-hmm.
Go skateboard outside. That was my daily routine. But yeah, we do have some earnings. Speaking of UFC, Paramount struck a deal.
Yeah, you get long now?
$7.7 billion starting in 2026. You can watch all UFC on Paramount Plus, I assume.
Or is it vaulted?
PSKY.
Is it going to be a new...
I don't know. Yeah, PSKY is Paramount Skydance.
KY. Oh, so this is the new...
Potentially.
Was this always around? Or is it just a new...
I don't know.
I thought it was a different ticker symbol.
I thought it was Para.
Para.
Yeah. Maybe they changed it.
Yeah, because they have that halted. So there must be some sort of combined entity.
This thing right here.
Yeah. It looks like it might be, but Gus wrote a little article on the News and Insights tab. If you can check that out. And
Read
Thomas,
that, I'll know what I'm talking about.
Yeah, Thomas did a CoreWeave one. What do we got for CoreWeave? Today after the close, I'll pop it in the YouTube chat. Today after the close, what's your analysis?
I mean, it's a big expected move. 20 points on $143 stock. I think it could go either way. NVIDIA owns about 7% of it. They're like a data cloud leaser, you know, if you want to use their data centers. So I think it depends on how strong that demand has been. But I'm not trading it, but
yeah, it's a mover. It's a little squeezy. Circle,
it's expensive.
Yeah, Circle had a big move to the upside. Or what looked like it was going to have a big move to the upside. Opened significantly higher. Where'd we open? 186. So another 20 points higher from here. Sold off there. So, are you doing anything in it?
I mean, I'm just looking at 10-point wide butterfly, and it's for it's
Yeah,
$1.
it's nothing. It's not going to go anywhere when you have that high of implied volatility.
Yeah, you have to hold it to Friday, pretty much, if you're trying to get a big chunk out of there. I really want to just throw it on, but do I do a broke wing butterfly? I don't know. I'll mess around with that. Couple more here. Is SMH going to crack $300?
Probably. Why not?
Yeah, of course. It's $299.
It's the next stop.
It's obviously going to hit 300.
You can't go to 400 without going through 300.
Correct. That is actually correct. Yeah, I mean, this has just been an absolute
Not
tear.
getting participation from NVIDIA, though. NVIDIA chopping around here was red for a slight minute. That it's every day. Anytime there's a dip in NVIDIA, you just buy that indiscriminately.
yeah, I'm long NVIDIA right now.
It's just up and away. 15% tariff, who cares?
It's kind of crazy because I've been saying this like until proven otherwise is kind of like a joke.
Mm-hmm.
Like I was always
just say
saying
never.
like there's still risk to the downside, but now it's just like
no more risk.
Up only, VIX at 14. We are in La La Land.
That's it?
Oh yeah, 11:59.
Lunchtime?
Yeah.
Yes. Palantir, Iron Condor. I've got an Iron Condor. Do you have a broke wing butterfly? Or no?
I think I do have a broke wing butterfly. I did this for one of the cherry picks, I think. Yeah. 175, 180, 185. And
So
then
nothing to do there.
2 honor. Right at the money.
Yeah. Nothing to do. It's
Sit,
right at the money.
chilling.
Just got to chill.
Yep.
All right. That's it for us. Thanks for tuning in. If you have any further questions, you can reach us on the Twitters. I'm a Trader Mikey B. Nick's a Trader Nikki Bat. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same.
Oh, it's a thong song. There we go. Dong, 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 dong.
We'll see you tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We're back. It's still Monday, August 18th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, soft start to the week in stocks. I don't think we're going to like what we hear come Friday.
It looks like everybody has settled in, gotten their popcorn, prepared their anxiety meds, because this is going to be the week where everybody collectively sits and goes, here's where the Fed's head was in July, and then here's where their head is now. Will they bring the magic serum in September? It's not quite so clear cut, I think, as the markets would like it to be. I think they would love for this to be an obvious layup kind of a thing. but it's probably not that easy.
Were it so easy, we wouldn't have this rapid decline in Fed cut odds since Thursday. Market priced in a peak rate of 105.7% chance for a September cut. So technically a 5.7% chance of a 50 basis point cut on Thursday. That's now down to 83%, Ilya.
Yep.
So the market's quickly understanding here that Powell's probably not your hero when he speaks this Friday. The CME FedWatch tool, as it were, when we take a look at the start of this week, I think is an important anchoring point. 83.05%. I know our producers love those hundredth of a decimals, so we throw them out there for you. But it's an important change insofar as the data that's evolved coming out of CPI and PPI are probably putting the Fed in an uncomfortable spot to declare September a finality for a cut. Why might that be the case? With CPI, with PPI, you can amalgamate what would be the PCE reading, something due out on Friday morning, 8:30 Eastern, 7:30 Central this week. And you're probably looking at CPI, PPI feeding into a 0.5 to 0.6% PCE reading, which if you annualize that, you're talking about inflation close to 6% year over year. So with another non-farm payrolls report due up, with another CPI report due up ahead of the September 17th Fed meeting, I think it's reasonable to suggest that Powell is not going to be dovish this Friday. And so if you have any expectation that he's coming to save equity markets, that he's coming to save the bond market, time to curb your enthusiasm.
Geez, which one of us is the skeptic here? I thought that was my job.
You're a skeptic. I'm a realist.
I agree wholeheartedly with everything you've just said. I think that's exactly it. I think the markets have hopped themselves up after the CPI number and said, oh, goody, it was expected at 2.7 and it came in at 2.7. La-di-da, everything's going to be okay. At one point there, the odds of a September cut were actually up to 100%, and there was a sliver of a chance that there would be a 50 basis point cut. The markets really got themselves into all sorts of happy myth making. But then the PPI numbers came out, and they showed everybody where the inflation is, and that wholesalers are done shielding consumers from it. And you start to see how when you already have in the CPI numbers the fastest core goods inflation in 2 years, and that's before the pass-through starts, and then you look at the PPI and you go, well, there's the pass-through right there. It's occurring at the beginning of the supply chain. It's occurring at the end of the supply chain. Then you very quickly find that this is just the beginning. And then, of course, you get the consumer confidence data where you get consumers worried about that very thing. Because inflation expectations tick up, and we end up with sentiment weakening as a direct consequence. So Powell is not coming out here to tell everybody free money for everybody, time to celebrate. And in any case, that much is priced in. The cut itself is priced in. Jackson Hole is perhaps more influential than even the September meeting, because we're going to get guidance on what comes after and whether the Fed has finally found appetite for a meaningful easing cycle. And I think the answer is probably they have not.
Not yet, because if Powell commits to a Fed rate cut in September and then you get a hot jobs report and you get another hot inflation report, he's going to have to put the toothpaste back in the tube, and the market's going to not like that whatsoever. So the least costly option, least costly outcome for the Fed this week, at least for the Fed chair himself, is to be non-committal. We're thinking about it. We still have more time to decide. Now, I point that out as a potential point of interest for me here, because taking a look at how some of these relationship between stocks and bonds have evolved here in recent sessions, one might argue that this move, where are you going, Arrow? Why not might take this move here in stocks to be something of related to what's happening in this decline in cut odds. So consider this. Last Thursday, the 10-year yield hit a low of 4.204%. Cut odds at the time were 105.7% for a September cut, 100% chance for 25, 5.7% chance for 50. Since then, the 10-year yield has increased to 4.343%. We've seen that the Fed cut odds have declined to 83%. During this time, the S&P 500 from the ESU 5 contract, the 5-day correlation with the 10-year yield has moved from negative 0.1, basically nothing, to negative 0.71 today. So higher rates are starting to become a little bit of an albatross around the market's neck here. And higher rates seem to be evolving along the line of diminished Fed cut odds. So this week, Elliot, we have cut odds squarely in focus with Fed Chair Powell's speech. I can't help but think this breakout that we're seeing here, maybe in the S&P and the NASDAQ, it's not going to get the juice it wants early on. The best thing for the market perhaps would be for the market to price out odds of a September cut back to 50% before Powell arrives. And then we can just go back to doing what we're doing. But the high from July comes in at 64, 68.5. Volatility is up a bit. Spot VIX north of 15. Momentum struggling, not broken. What say you at the start of the week?
I think we don't have the kind of confirmation to get bared up here, but we're starting to get there. If you look at what's going on with the S&P, if you look at what's going on with the NASDAQ, we're grinding through range supports here. And on 8-hour charts, on 4-hour charts, you can very clearly see it. So this is getting soggy now. And that it was a breakout above these levels last week that gave us, certainly those of us of the bearish inclination, enough of a spook to say, okay, you know what? We just broke to a new high. We very clearly took out the former high. Let's back up here. Let's not get overly cavalier for no reason. Well, now we're back through those levels. When you look at the NASDAQ, you're back through those levels. When you look at the S&P, you're not quite sticking the landing as cleanly in the Russell, but very, very close. And so we're starting to see the kind of sogginess that you might extrapolate to say, you know what, the market's going to de-risk a little into all of this. It's just going to back up some. If last week's exuberance can really be pinned to one day, CPI day, then this is really all about the Fed. This is about whether they are going to give the market that sweet, sweet, cheap money. And they've been yelling at the Fed to do it because they know that the economic downturn that the Fed is so concerned about, they know it's here. They just don't think it's an inflationary risk in front of that because they think the downturn is bad enough that the disinflation from it will subsume the one-time inflation shock. And the break-even rates have been telling you that for months. So the market is clearly in a place where it wants these cuts. It knows why it wants them. And the possibility that they're not going to quite get them like they want, that they're not going to get from the Fed exactly as they wish, with, by the way, already an expansive and much more dovish view than the Fed is owned up to, already priced into the markets. Lots of room for disappointment here. So before we get to Powell's speech, between now and let's say Wednesday for the FOMC minutes, and then again into Friday for Powell's speech, these markets might very well decide, you know what, why are we tilted? Let's rebalance these portfolios. Let's back up a little.
The NASDAQ is, prime position for that right now. You really can't take issue in the market too much today when you're down by 0.2%. The Russell is still in positive territory.
Right.
It does feel a little like there's some rotation here, and we'll take a look at the sector breakdown in a moment. But technically speaking, the NASDAQ here, it is struggling a little bit. We had mentioned last week and the week before, Ilya, that when you look at the scope and scale of the uptrends, the NASDAQ was already pretty close to channel resistance. Yeah. The S&P, the Russell were not, and had a little bit more upside room, if you will. you've certainly been looking at the Russell a little bit more closely than either the NASDAQ or the S&P.
Yeah.
So I don't think either you or I are surprised that we're seeing a little bit of this churn right now. Maybe it's a reloading. But for the NASDAQ, you're below the July high. You have these swing highs here mid-month, August 11th, that we try to punch through and we start to tilt back below in a certain sense. The S&P is only up by 0.08%. Give us 64, 68 and a half, and you can feel better about things going into tomorrow. But the Russell is what bulls really can hang their hat on. It's up nearly 0.5%, and it's catching in that zone where former resistance had been carved out. Volatility is staying low. This is kind of a breakout, pullback into support now. Start climbing again to a certain extent. This price action, at least, is a little bit more encouraging than what we're seeing elsewhere.
Mm-hmm. Yeah, I mean, it's an interesting thing to look at, but also if you look at, let's say, the 4-hour or the 8-hour, to where you sort of digest a little bit some of this volatility and subsume it into the price action, you can kind of see where you had a breakdown through the former highs. That's the top of your gray box there. And we're trying to test the underside, and it's not really sticking. Now, if you can find a little bit more momentum here and really have a convincing return out of this congestion area, let's say back north of 2320 or something like this, that's going to look better. But as relative to the NASDAQ or the Russell or the S&P rather, this certainly looks a little bit better holding than do those two for now. I wouldn't go so far as to say it's anything I'm prepared to jump in long on. Certainly, if the Fed disappoints with rate cut odds, that's going to be bad for regional banks. It's going to be bad for cyclically sensitive small cap names that don't have the war chest that some of the bigger names do. So it's not going to be good news here either. And I think to Tom's point on first call yesterday, this is a very binary risk on, risk off type of a situation. And if equities don't like what the Fed is selling, they're not going to like it altogether. So I don't think there's a whole lot of relative strength here, but if I were betting, Russell would not be the place I'd take my bearish playbook out again. Certainly not here. NASDAQ, probably the one that's on my list for today.
Since 1980, I count, how many do I count here? 22 occasions in which the Fed has cut rates near all-time highs. When you've been within 2% of all-time highs, in fact. The most recent ones have come in September and November of last year. September is looking good. The next month, 3 months, 6 months out so far have produced positive returns, as have the year to date since then. Same thing for November, though 1 month and 3 months produced positive returns. 6 months was negative, but then the year out since has been positive. In any event, Ilya, what happens when the Fed cuts rates within 2% of an all-time high? A month later, 50-50 shot. Half the time, 11 occurrences were up, 11 were down. Average return of 0.1%. But 3 months later, you're higher 77% of the time with an average gain of 2.3% in stocks. And then a year later, higher by 13.9% of the time. Or rather 13.9% average gain, higher 100% of the time, I should say. So how we arrive to September matters a lot. If Powell can tamp down expectations for a rate cut, and we get to the data and the labor market is holding up and inflation isn't as hot, you get a rate cut and everything's fine.
Yeah.
If we're going into September and the labor market's falling apart and inflation's running higher, got a real problem on our hands.
That's a whole other thing. And that's, of course, exactly what the Fed is afraid of. They're afraid of a situation that's going to have these stagflationary characteristics. And when, by the way, you don't have to go far. You can see an example. The UK is there now. The UK is in a place where you can get a great sort of sample, a preview of exactly what this looks like. Growth is fizzling. Inflation is at 3.6%. The Bank of England is sitting confused. The consensus on the MPC is razor thin, and they're trying to figure out what they're going to do. Now, the UK is a relatively small economy compared with the US, of course, and an economy with different characteristics and a hope for a big defense build out next year to juice up growth, much as we have on the continent around the rebuilding of NATO's ex-US defensive capability. But that's a different story in the US because that's, of course, not in the offing. So if you have a situation here where the Fed is stuck, especially in a world where the Fed has a formal dual mandate, the Bank of England does not. You can basically default to saying, oh, all I care about is inflation, la-di-da. Fed can't do that. So, and that's before, by the way, we get into pressure from the White House, Powell's term expiring, exactly in the teeth of when all of this occurs, and so on and so forth. I'm increasingly starting to think that part of the reason why the market wants these rate cuts sooner is perhaps because they want them during Powell's term. They want to get a good bit of support for the economy before the reins of power at the Fed are handed off.
I make a different argument. I think the market wants their rate cuts under Powell because if Powell delivers them, then we know they're rate cuts for legitimate reasons.
Well, I mean, I think we're saying the same thing.
Because let's say you get to a world, just game this out for yourself at home. If we get to a world where Powell's leaving next May and the Fed has not been able to cut rates, what would have happened with inflation for that to occur? What would have happened with the labor market for that to occur? There's a good world. There's a good world there. There's a world with the Fed needs not to cut rates because inflation, it stays elevated, but it starts to come down, but the labor market bounces back. And so if the Fed says, the labor market's strong and inflation's receding, let's just have nature take its course. That would probably also go alongside with positive growth. So a world in which the Fed doesn't cut by next May isn't always just a terrible one. There's also a terrible version of it where it's stagflation. And then a new Fed chair comes in and says, yeah, we're ditching our concern with the inflation side of this, and we're going to focus on the labor market side. That's possible.
That's
not
possible.
Right. We're not just going from point A to point B. The context with it matters, and that's why the context for the September cut matters.
That's right.
Ilya, for this week, I want to point out in the S&P 500, 4 days to expiration, 65 points priced in. You can see as we go day to day, it's about a 12-point spread. But then when you get to the Friday expiration here, it jumps up to about 16 points. So markets are expecting a little bit more coming out of Friday, but we're looking at a 1% move by the end of the week. I think maybe that's a starting point here. If you're someone who's looking at this market on a short-term basis, I can't help but feel that we should play the over. 1% move around Jackson Hole. That seems like the market's actually fairly underpricing the risk of Friday.
Yeah. And I think we're probably going to start to see that build out this week. This is probably some of the sogginess that you're seeing in equities here, and probably some of the sogginess you're going to see going forward if the market really is kind of appreciating the level of risk. You're going to see that start to build out. I'm wondering what happens with the FOMC minutes. Obviously, we know that we had two big dissents at the July meeting. We've heard why. We know what that's about. It's in the price already. That's not the part that ought to be surprising to anybody. The larger issue is that we're going to get a sense for just how committed the board is and where their head is at as a group and where the consensus is. One of the more interesting things in the minutes is you get this gauging of several participants thought this, most participants thought this, almost all participants thought that. And so you get a glimpse not of the dissents, which look very glaring in a statement on policy, because you have, this was, everybody voted for XYZ thing but these two. And the but these two really stands out. Whereas when you read the overall minutes readout, you get a sense for, well, just how out of step are these two? Where is the actual meat of the consensus? And if the meat of the consensus is not as dovish as the markets want, if Bowman and Waller are even themselves ready to cut, but not nearly the doves that the markets want to hear them to be, if this is not a watershed, if these are incremental differences about timing, which seems, by the way, more likely than not because of how inflation has worked out here, then the market's going to be disappointed. And those minutes are going to set the stage for them to get a lot chippier ahead of Jackson Hole than is the case now, because the stage will have been set differently. So both Wednesday and Friday, live risks, and the sort of path of least resistance is the markets don't want to get in front of a thing assuming they know what it is. And this is heavy-duty event risk. They might get defensive before they get within its gravitational pull.
Just keeping this in mind, to me, 65 points through Friday seems light. Seems like this is not a week where I'd want to be playing for the market to stay within plus or minus 65 points.
Yeah.
I don't know if it's complacency. The VIX is sitting at 15, but the short term, could we see 63.70 tested by Friday? Yeah.
Probably.
What about the upside of 65.70? Probably. I don't think that's an unreasonable estimation right now, is the point I'm getting at. Even going closer, right? We want to go to 6,400, 63.75. So 25 points wide on a long iron condor position here. It's a 42% probability of profit, risking 1 to make 3. Not a typical tasty trade, but it's a way of, vol contraction doesn't seem like it's in the cards. And I personally would be shocked if we get through Friday and the Fed tells us, like, yeah, we could cut, but we're nowhere close to making that as a definitive statement. Wait for the next CPI data. I mean, how can Powell do that if PCE comes out so hot Friday morning?
Can't.
And I know there's some read-through issues, right? A good chunk of PPI goes up because of things like portfolio management and financial services, which are tied to the value of the stock market. So when stocks go up, that feeds into hotter PPI, if you will, but not really. I think that's the way to play this. I don't think we're going to be pinned this week. This is not a week for pinning. This is a week for the market to make a decision if it's going to keep going up or down. The balance of risk right now seems to be to go down where I sit. So I would rather wait for a pullback to get long and get long right here. You get down towards 63.50 or so, we can have a conversation about the uptrend that's been in place since mid-May. Until then, I've got my 6,700 calls loaded. They have enough time in them, so I'm not going to put anything on new. But Friday seems like it's a trap for bulls.
It does. It does.
Little trap. All right, Ilya. Anything else here? I mean, the Russell's still up by 0.5%. Lean long.
This
Russell.
one is holding, but also this one had the worst week last week. So in the spirit of portfolios getting rebalanced, this is the one that has a little bit more opportunity to find some level of anchoring. It had a much worse week last week than did the NASDAQ or the S&P. So I would not look at this and say, oh, goody. Small caps are showing a little bit more resilience. That's business cycle positive. We're not worried about the Fed. No, the Russell had a much worse week last week. And if what we're looking at here is a mood to rebalance portfolios, if what we're looking at here is a mood to say, you know what, we got to record highs last week on the big indexes. We got this big risk this week. Last week didn't shake out nearly as optimistically as it could have, or as the markets hoped in the wake of CPI once the rest of the data came out. Let's not be tilted all the way over the cliff's edge, hanging by a toe and a half. Let's back up a little. If that's the mood, it makes sense that the Russell is finding a path of least resistance to retrace higher, while the other ones are finding a path of least resistance to retrace lower. That's sort of the scales shifting that you might expect.
In terms of sector performance today, it's basically an even split. I count 12 down, 13 up among the 25 that we track here, Ilya. Top performer, oil. We've seen oil swing wildly today, in fact. Excuse me. Love this summertime of year. Oil prices were down on the session. They have now traded back higher, and so oil services have become a leader in the clubhouse. We also see that telecom, signs of just things that have been leading on the way up still. We talk about the rotation. This would be the third highest close ever for the telecom sector. Retail here recovering. Ilya, this would be the second highest close that we've had of the year. This is a very tariff-centric sector, and it was the one that was hit hardest, as you and I have pointed out a number of times since April.
Yeah.
Never got through the, December FOMC highs like everything else did. Even an XLY here showing up on our chart as a top performer, and this would be its highest close going back to the middle of February. Trump is meeting with Zelensky right now, among other European leaders. He's officially at the White House, so I imagine we're going to have some potential headlines that move the market here over the course of the show. But Ilya, I want to bring our attention to what's happening in the bond market today, which we're following these September cut odds still. That has been the move for the bond market. And as those cut odds deteriorate a little bit more today, we see that notes and bonds are deteriorating themselves. We were seeing, generally speaking, flat price action for most of the session. U.S. traders come online. We begin to see that bonds start to sell off a little bit here. It is weakness after running into that 1 month moving average again. So this is increasingly a chart that's looking like it wants to just go lower right now. How does one justify being a bond bull here? How do you scale up that trade right now, noting that volatility is starting to tick up as prices come off?
It's an interesting sort of thing here because you're testing through levels that you don't want to see broken. And you kind of have to consider where you are. I think you can see with the naked eye here, you're approaching some area of congestion here, the underside of it. And the low, that swing bottom from early August is kind of right in front of you. So this is an interesting thing, and it starts to look like the kind of a deep pullback that you saw from July 1st to basically the middle of July. That was a pretty deep correction lower. But the overall structure of higher highs and higher lows going all the way back to the bottoms in late May, that's still there. And so I think you look at this and you say, well, what's the path of least resistance? Is it that rate cuts are going to get canceled? No. It's more like the Fed might do less near term. And if that's the case, more cuts go into the back of the curve. Moreover, there's risk aversion and there is demand for the Treasury bond, less so on yield grounds and more so on capital has to go to safety. And so begrudgingly, I think the bias here remains. There's virtually no IV in it. So there's nothing to squeeze out. So I'm sitting on a long-term, tons of duration exposure to the long end. At this point, I still have 32 days in the position to expiration, having already sat in it for 40 days. So, needless to say, lots and lots of duration that I built into this. I'm just going to sit on it here. I'm going to sit on it because I think the vol was relatively cheap, and it makes sense to let things figure themselves out. Worst case, scenario, of course, this expires worthless, but when vol is this cheap, that's not the worst of all things. You can find really, really asymmetric risk reward, and if it doesn't work, that's part of the strategy. It's not going to necessarily work every time, but when vol is this cheap and the trajectory is that asymmetrically tilted, seems like that's the only thing to do.
The opportunities here are, well, the volatility is staying low, that's for sure. We're no longer in negative IVRs. We had seen the MOVE index, Treasury Volatility Index, which looks at listed options, ZT, ZF, ZN, ZB. There are no UB futures options, giving us our lowest composite volatility reading since January 2022. We've started to move off of those lows. Looking at how trades are currently structured, I still have 39 DTE for the position that we put on here, the 113, 114, 108, 109 short iron condor. It's not the greatest risk to reward. You're beyond 4-1. You're giving up twice the buying power for, max profit. I don't love it, even though it's a 64% pop. The bond market, as Tom was arguing last night on First Call with us, Ilya, the bond market's really not the trade right now. Now, depending upon the strikes that you're using, you maybe find something that's appealing. For me, thinking about ZB, it really has been easy to operate right around the 1 standard deviation move, both to the upside and the downside. I look at ZB here with 67 days. It's not, again, high convexity trade, but risking a little under 3 to make 1, 65% probability of profit. There's something to do, is the point. But if you're going to do it, you're going to have to give yourself a little bit more time to get close to it, and you're going to have a very, very slow theta burn. I don't know if it's the most appealing setup, but more sideways chop, I think, is where you and I are at. If the Fed cuts, and let's just be clear here, if the Fed goes and cuts in September, given the trajectory of the data, as an investor, would you demand higher compensation given the seeming level of risk that's been introduced to Fed policymaking? That we don't really have a 2% inflation target anymore, that we're really treating it as a 3%, if not in practice, well, not in theory, but certainly in practice. Why wouldn't you demand higher treasury yields? I mean, there's no straight line through of cutting rates to lower mortgage rates. We saw that last year.
No. I think therein is where you start to get into a conversation about ZB being more a risk on, risk off type of animal, and for that matter, ditto the dollar. As you get away from kind of the April part of the flirtation, if you will, that there is genuine sovereign risk in the U.S., and then the realization that actually no, to the extent that there is a modicum of sovereign risk for any sovereign, yes, fine, whatever. But the idea that the U.S. has suddenly become a country that's dispensed with its exorbitant privilege on the sovereign risk side and is now a regular country in that sense, that idea has been shelved, clearly. And so with that, you have this idea of, you know what, if there's more policy uncertainty, if it looks like the Fed is in a box, if it looks like they're struggling still, even going into September, with balancing what inflation and growth are going to show them and how to navigate that, if that's where we are, there's going to be a ton of term premium that goes into this. Not because the markets expect this or that on rates, but just because of the sheer uncertainty of what's going to happen with the cost of money. Because if the Fed doesn't know, the markets definitely aren't going to feel like they're confident in their outlook.
Sure. Well, here's something that we perhaps could be confident in. Where are we relative to the post-Liberation Day hijinks, yippiness in the market?
Yeah.
Swing high that you have here in April, swing low that you have here in May, halfway mark of the trading range that we've been in over the past 3 months.
Mm-hmm.
That's going to come in right around 113.5. So thinking about recent trading opportunities, right? This isn't the trading range to play per se. We think about the more narrowly defined one. And if we want to use the technicals as a guidepost, okay, so 117 and 109. Okay, 117 and 109. We have that on both ends here. 57% probability of profit going 2 points wide. It's about a 2.5 to 1. Profit is double that of the buying power required. If we wanted to scooch these back a little bit more to get a higher pop, again, you're in that 3 to 1 neighborhood. I think these are still actually fairly appealing setups, right?
Yeah.
Are we going to break through? That's the story you have to tell. Bonds are going to get so weak that we're going to break through the May lows when we were all ginned up about the U.S. losing its place in the world. We're going to have to break through the highs that we had at the end of April when we thought we were careening into an imminent recession and all these Fed cuts were coming. In the next 45 in, 21 day out cycle, will we have answers to either of those big macro questions?
Nope.
Probably not. Ilya, it makes sense to me. I like the 117, 119 here. Let's get it going, put it on the board. Hopefully it can get filled. Hopefully we can move on now to the metals market, which are continuing to churn here. Let's head back over to the charts and take a look at what's going on with gold. It tried to rebound. It got back into that little moving average envelope, your 5, your 1 month, your 50. It said hello to its friends. It turned lower. It could be closing below the low that we had on Friday now, 3377.7. We're currently only about $1.50 north of there. That would be an engulfing bar and would further give evidence that we're due for a deeper pullback, probably to 3,300, bottom side of the recent trading range in recent months. How are you approaching gold here right now? Are you still leaning short deltas?
I am. So the idea here, as ever, was to play for vol contraction with a slight directional kicker, depending on where you are at the top or at the bottom of the range. So I played it from the long side, short puts when we were near the bottom of the range. I turned that over and became short calls at the top of the range. It's begrudgingly working. So I'm going to sit here and wait for now. I still have tons of duration here, as I have across pretty much all of the things I've been putting on. Just the markets have been so jittery that, as I've said before, I wanted to kind of dilute my exposure to naked delta and be directional, but also be a little bit conservative and be more protected from getting the full scope of the direction in the underlying. And so I'm looking here still at plenty of time. I still have 32 days to hold it, and I've already been in it for 21 days. So I'm looking here to basically continue to sit on this to see if maybe there is, in fact, a breakout that's forced on the downside. If the market gets into the thinking that, listen, the Fed is not going to deliver like we want, it'll cut in September. I mean, that much, I think, is pretty much a given. But how it cuts, how much it cuts, what it says as it cuts, has lots of room to disappoint markets because they're already ginned up on a lot more easing than the Fed has owned up to, in particular for next year. That's what makes Jackson Hole so important. And of course, for gold, it's critical because Jackson Hole won't be, oh, the Fed's going to meet and they're going to issue a cut. No. That's not what this is. This is stage setting for 12 months forward. So next year is very much front and center. And the markets and the Fed are something like 50 basis points apart for next year. So there's lots of room there.
The market and the current iteration of the Fed.
Yes. That's right. And by the way, the markets would love to get their easing from this iteration. To your point, they would trust it.
Here, gold at 11.2 IVR continues to dissipate. It's been a steady decline even throughout the month of August, outside of that little tariff kerfuffle we had here. Looking at the range post the initial April hijinks, that gives us a midway point of basically 3,400 in the GCZ5 contract. We're pretty darn close to it right now. And looking out, you could go to 38. Could go to 38. 71 right now, 63% pop, risking 2.5 to make 1. Similar type of setup. There's actually still a decent opportunity here. I'm thinking about the strikes, 31.75, 31.50. Where does that put us? Okay, below the May 15th low. And going back to the upside here, short call spread would be 35.75, 3600. Okay. That would mean we'd have to break through the April 22nd high. Again, there's enough. Now, I wasn't filled on this last week, Ilya, at 71 days. I wanted to lay out some short iron condor positions. Hopefully they can get filled again here today. But short iron condor to me in gold makes a lot of sense right now, given what we're seeing. I do prefer still leaning long silver, though, because this chart hasn't broken down. We've been watching that 37.73 level here in silver for a number of weeks now. It was the high back here in June 18th. Support. Still haven't been able to crack on through it, so not giving up just yet. Do you have any strong inclinations about silver outperforming gold in this environment? Why it's holding up better?
I think, if anything, silver is probably more vulnerable than gold in this environment.
Probably.
Because it has that risk on sort of flavor to it, more so than gold. And so if you're concerned, as I am, that this week you get a little bit of a soggier thing going into Jackson Hole, and especially after the FOMC minutes, if they are not the kind of thing, I mean, if you just take the president at face value for a second and say, you know what, Powell is the sticking point here. Powell doesn't like the president.
Always late. Too late, they say.
Has no qualms about making the president look foolish on camera when he says ridiculous things.
Won't wear a red tie, only wears a purple tie.
Surely everybody else on the committee is not crazy. Just look at Waller and Bowman. So if only these minutes were to tell us, you know what, it's just this guy, well, then everything's okay. Because the guy is going to be out of the way. We're going to have an expansive easing cycle next year, la-di-da. But that's not true. And that's not what's going on. So it's not one guy. It's also the inflation data and a majority on the FOMC. Because that's the responsible set of choices and decisions. And by the way, it's very possible that sensible people like Waller and Bowman have a difference on timing. 25 basis points here, 25 basis points there. Not on scope and thrust. It's, in fact, very, very telling how complimentary Powell was about both Bowman and Waller and their dissents in the last press conference, saying, I understand everything they're saying. We should have been cutting already if not for these tariffs. I agree. So we're in this situation here where the market is very vulnerable to be disappointed. First with the FOMC minutes, because the tenor of July's conversation ends up looking nothing like what the markets hope it is, which is just, man, if only this one guy would get out of the way. Then the likes of Waller and Bowman would hold sway, and they want to cut and cut and cut and cut until we've deforested interest rates completely. Well, no, that's probably not what we're going to hear. So, with that in mind, lots of room for disappointment. And if that's where risk is tilted, silver is not going to like any of that.
No, and with volatility so low, one has to consider the fact that maybe vol expansion is the way to play this. I see a very handsome looking triangle that's forming up here, Ilya.
Yep.
Symmetrical by nature, but bottom left to top right, you have to favor bullish outcomes.
You do.
Symmetrical by nature does mean that it can go either way. Really, you're looking for the spring to uncoil, unfurl. And so that would mean a move up to, in the SIU5 contract, 39.91, or potentially
debate as to
getting
whether,
back down to
as to
36.
whether this already broke out or not. Because if you take a less expansive view of that same yellow line that you have on the bottom there, then you have
this could be a failed undertest.
Yes, you have those lows from May, and now what you start to see is
Top coming together.
breakdown has already occurred, or at the very least, the uptrend has given way to consolidation, and then the symmetrical triangle really is neutral. And then vol expansion, to your point, is exactly your path of least resistance. It's
don't play a bet on that
something.
direction.
Yeah, it's
bet on the
coiling up for
direction
something.
going. Yeah.
Who knows what? But it's coiling up for something.
I don't know. I still lean long. Whether or not that's the right play is a different story. But gold here, silver, shuffling, rotation. Copper is still basically untradeable, so we're not even going to look at it. Oil prices continue to be volatile here. They were volatile pre-Trump Putin. They're volatile post-Trump Putin. I head over to the crude oil chart, which just taking a look at this on the daily real quick. You could see how we did dip below Friday's low. That was a 61.45 print. We're now back to 62.67, so up by 1.1%. Although Ilya feels like nothing's changed because here we are pinned
We're
right
still
here.
stuck at it, man.
It's like it's in CLV5,
level, this level
bucks.
is like the world's strongest magnet for crude. It does not want to leave it. It feels like this is about fair value. If ever there was a market where you looked at it and said supply, demand, and geopolitical risks and everything else you might think of crude oil balance here, you have your level.
You do. It has worked. Right around 63. Is it still an appealing trade is a different story, depending upon the strikes that you find. You have to go up to 59 days. There's not a ton of, you can't really operate between 30 and 59 right now. I'm currently sitting in at 30 still. This is continuing to work. So not this week, but next week would be my roll week. Would I want to roll into a directionally neutral position still? It's been what's been putting, it's been buttering these rolls. Is that an expression? Yes.
I'll take it.
The answer is yes. At a 27 IVR, I still think this is the appropriate thing to do. Now, I want to have more.
The last person in the world that you want to go to for expertise on American idioms, my knowledge of those begins somewhere around the early 90s.
And why aren't you just nodding along?
I'm
Doug Grannon.
I'm not.
Confirm.
Butter the rolls, whatever you want to do.
Perfect. So, yeah, I think this is still the appropriate thing to do. I would rather give a little bit more breathing room to the downside than to the upside right now, given the balance of risks. But directionally neutral still. It's not the sexiest trade, as we say, not high convexity, yeoman's work, but it has been working is the point. Really,
and to your point,
last
there's
4
a little
months.
IV left here.
There is still IV, and that's the nice thing. I can't get myself
to
trade
work with at least.
There is something to work with at least. There's a lot to work with in natural gas, which I'm still not trading here. I'd like to see recovery through the low that we had in November. You get that recovery, maybe you're getting through the 1 month, but we have not seen a print north of the 1 month.
Yeah.
And quite frankly, the 50-day going back to mid-June. So we are still very much in catching a falling knife territory as far as I'm concerned here.
Yeah.
Maybe on this 4-hour time frame, you want to go to the 1 hour to really fish for some hope. Okay. Moving averages are starting to get a positive slope. Not that it meant anything recently, but when we did have all three in unison, it's been giving us a bit of a floor to trade around. So for the adventurous, of which I would not consider myself still at this juncture, Tom was talking last night of something around a 2.6, 2.7 short put spread in natural gas. Look, it's not the worst thing in the world. It's a 60+% pop with a 3-to-1 risk to reward. That is the sweet spot. I'm in my own personal timeout box because when I have two really bad trades in a row in an instrument, or just really bad, when I don't make money 2 trades in a row, I walk away for a little bit just to give myself a chance to reset, forget any biases, not revenge trade, right? I see this here as a fine opportunity at 38 DTE. I'm just still in my own penalty box, which I may come to regret. And that may be my own bias, and I should stop doing it.
I'm not touching it. I think when you look at the chart here, you get a sense that you're trying to bottom. My view typically sort of leans to being directional, that wants to be directional, and so let's get it confirmed, and then let's find how we're going to express this view. I continue to be kind of stuck when it comes to natural gas because I don't have an instrument that works with the way I approach markets. This contract is huge. And if you want to be directional and you have enough capital, Godspeed. If you want to be directionally neutral and you have enough capital, Godspeed. For me, as we've discussed before, macro timing is notoriously difficult. So when you have a macro view, you're not going to get it right a lot of the time, and you need to be able to take very small losses so that when the view comes together, or when whatever view comes together, and you get the macro move, you can lean in and build a position as the market moves your way. And that's where you make your money. Law of large numbers, as it were. So when you look at this then, it doesn't lend itself, because unless you have a big enough account, it's difficult to take that kind of an approach here. So I'm watching it more as an indicator to see if maybe Zelensky and crew can encircle the Oval Office and get some sort of a thing done that doesn't look like capitulation to Russian aggression. And then we'll see what this looks like. But I'm treating it not as an instrument, but more as an indicator.
Worth pointing this out as well. I know that if you're trading energy this week, there are some things to be mindful of right now. Later this week, we could have a major hurricane moving its way up the East Coast. It's not expected to go into the Gulf region, which I think is important. Limited potential of having wells, platforms shut in, which is important for both crude and natural gas. But if this thing takes a westward turn, you could find yourself looking at crude and natural gas being impacted by fears of a temporary supply slowdown. Keep that in the back of your mind. It's not trending there. If the maps change, we, of course, will take a look, and I'm sure we'll see about it in the price. Quickly here, winding down, Ilya, the dollar bouncing back a little bit more over the course of the day as we see the session move on and those treasury yields turn up. As these European leaders descend on the White House, the euro, the yen have both been trading a little bit softer throughout today's session. Euro volatility is still fairly high at 35.5, British pound 37.5. Other than that, I'm still leaning net short Canadian dollar here because we haven't been able to crack on through 73, and vol continues to come in. You still structurally bullish on the dollar, I'm presuming, which has not changed since first call.
I'm fully loaded.
As
my boat is packed to the gills with dollars at this point.
I'm not surprised. We'll talk about it more on overtime later. What's next on the calendar for tomorrow? If you care about housing, it's certainly something of note that's been struggling here in the U.S. recently. The number of homes listed for sale right now is currently at its highest level since, I believe, October 2008. That seems like a very significant claim to make, but I've seen that number floated around a number of times here in recent sessions. We'll keep an eye on the housing starts, the building permits.
Yes.
We have Canadian inflation due as well, which, Ilya, as you might say, it is a loony in the coal mine. Actually, that's my expression.
But that's yours. You should take credit for it.
You though point out that it has. I use that expression because of what you mentioned, which is to say that Canada, we're their biggest client, we're their biggest trading partner.
Long mile.
80% come to us. 80% of their exports go to us. So if they're seeing a slowdown in inflation and growth, there are implications that you can draw about the state of the U.S. economy. So we don't want to ignore that. But it's Jackson Hole week. So Bowman, who is one of the Fed governors who's been talking about rate cuts, they'll be speaking tomorrow. And of course, we have some bond auctions coming up later this week too. Earnings. It's going to be a fun week, Ilya. You and I are back later tonight for overtime. I hear that Dylan may be there with fabled belt cam?
Could be.
People will have to tune in.
You got to come to find out, though.
People will have to tune in. We'll see everyone later at 4 Eastern, 3 Central for overtime. But there's more Tasty Live programming coming up next after a brief break. He's here. He's Dr. Jim Schultz. It's From Theory to Practice. See you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams. 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the We Are Back in St. Pete edition of what it is that we are trying to do, man. What a great time. On Friday, I went to the live event with Tom and Tony Trading. Got to meet so many of you guys and connect with so many of you guys live there at the event. It was amazing. Then we did the show live from the Chicago HQ there later on that afternoon. It was amazing. I am way behind on like posting trades. I'm a couple days behind, so I'm going to get it all cleaned up today. And so my apologies. I try to do that like as soon as I do them, but because I was so thrown off with my routine with like airports and traffic and blah, 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 I was totally thrown off. So I will get all cleaned up here today. But welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because if you do that, and it is real time, 2 o'clock Eastern, August 18th, 2025, or thereabouts, you will be able to communicate with your brethren who are also watching the program. Man, you could celebrate today if you are a bear. Can you believe it? We're actually down 50 points in the NASDAQ. It's never been done before. You can only see this live on the Tasty Network or live on the Tasty Live YouTube channel. So Josh, bring us in here. Man, are we still down today? There's no way. There's no way. There's got to be some kind of mistake. Even the S&P is down 9.5. Man, it's not good out there, guys. I mean, that's almost like 10 basis points. Risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product if you are brand new to the show. Down 49 points today? Man, that's not supposed to happen, guys. Something is not right. Got the boomers even down 85. But you got the Russell 2000 Futures Index kind of bucking the trend here, up $8.50 on the day. So, all right, so we can all breathe a little easy. At least the Russell is pushing higher. And so it looks like all is indeed going to be well in the world. You got bonds down a little bit. You got notes down a little bit. You got oil up 68 cents. You got UB40 down a little bit. You got the shifties down $3. Not really anything to write home about one way or another. You got British pound is down. You got the euro is down. You got volatility down. Got the Bitcoin bros celebrating a little bit up $900. And then we got silver, Hunt Brothers, up 7.5 cents. So a little bit of a mixed bag with the metals market, which doesn't usually happen. But I feel like it's been happening more lately. Like, I don't know if something is changing in terms of the, reliable and historic correlations even between gold and silver. Normally, they're going to run pretty highly correlated to one another. But I feel like we've had more days lately, like in the last few weeks, let's say, where, gold is up and silver is down or vice versa. And so that could be, one of these things where, remember, gold is an interesting thing. Silver is an interesting thing too for other reasons, but sometimes gold wears a risk off hat. Like, a lot of people think of gold traditionally as, hey, I don't know what's going to happen in the world. There's a lot of uncertainty geopolitically, economically, like you fill in the blank. There's uncertainty in the world. And so what do you oftentimes hear? Well, you should maybe consider parking some of your assets in gold. And sometimes, rightfully so, like sometimes gold is a safe haven play where if there's uncertainty in the more traditional risky markets like equities, things like that, and now, of course, crypto, then park your money in gold. It's a physical asset, especially if inflation kicks up, blah, 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 blah. Gold's probably going to do well. Well, sometimes that is what gold does, but that's not always what gold does. And that's what's really fascinating about gold as a product. It also will oftentimes wear the risk on hat and kind of follow its own brethren, follow the equity markets, follow the crypto markets. And of course, this week, I mean, it is all eyes. Like, you thought it was all eyes on Tupac? It is all eyes on Jay Powell on Friday. Again, we got to know how many buffalo he shot. We got to know how many bison he took down, but we got to hear his comments about the global economic situation that we're in. I mean, that's obviously less important than the bison and the buffalo, but hopefully we get all of it. Well, man, I mean, the metals are going to be watching, the equities are going to be watching, and everything could move together. And so maybe that's part of the reason why we're starting to see this kind of divergence between gold and silver. I mean, these are just my own thoughts, so obviously discard them upon arrival if you so choose. But I don't know. It's interesting that gold and silver are not necessarily following each other kind of down the pathway forward through the forest. But anyway, I digress. If we go to the spot volatility, what's the VIX doing? Yeah, VIX is up a little bit today. And so you've got VIX actually up a little bit. And so, the VIX /VX volatility futures typically also going to follow each other too, but they are, one of those is kind of spot vol. The calculations of the two are completely different too, because the VIX is calculated based off of, SPX options. And I mean, /VX is going to be a lot more calculated based off of just the order flow for the actual volatility future, itself. And so, but volatility pretty muted. Again, it's all eyes on Jay Powell this week. So, all right, so what I want to do though today, so listen, man, I see you guys in the chat. I want to get to you guys, man. Look at you guys. Daniel Rooney's in the house, Ash in the house, Scramble everything in the house, Sam L. Rancher in the house. Man, Joe's in the house, man. I appreciate you guys so much. Let's take a look at, man, we're having a nice little day. I mean, look at this, right? I mean, obviously, don't look at this. We don't look at that. We can just tell the P&L Open Bros to go somewhere else. But look at that P&L on the day. Man, that's looking pretty nice. I don't know. It looks like we're making, I don't know, 18, 19 bucks today. Like, that's a pretty solid day right there. And so I want to let's comb the portfolio. Let's kind of see what needs our attention. And then I don't necessarily have any new trades that I wanted to get into today because we have, obviously it's a Monday. We've got, potentially a pretty busy week this week with not only Powell on Friday, but then I think, earlier in the week, we've got Fed minutes on Wednesday. Right? We got Fed minutes on Wednesday, and these aren't any old Fed minutes, right? These are the most important Fed minutes that you will have ever experienced. And so again, you've got basically 48 hours. In fact, you have almost exactly 48 hours because the Fed minutes are going to drop 2 o'clock on Wednesday. And so you can get all your affairs in order. Like, you can have those difficult conversations you've been waiting to have. You can make that phone call that you've been dreading for the last, 7 or 8 years. I think now's the time because you may not get another chance after Wednesday at 2 o'clock. And so I don't necessarily want to put on a bunch of new trades today because we have a lot of trades in the portfolio too. I mean, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we have 11 trades on. I typically like to live around 10, usually between 8 and 12. And so that's just my own personal kind of number in terms of the positions that I feel comfortable carrying. I mean, especially given the fact that I really only trade live on the show to give you guys an experience where if you watch the show on a regular basis, and I know many of you do, and I really, really appreciate that, I want to reward you with, essentially, if you follow along, nothing's going to happen that you're going to be completely lost. Like you're not going to have to pick it up like midstream. You miss you miss something that maybe happened in the morning. You miss something that maybe happened overnight. And from time to time, especially with like butterflies and things like that, we do have to take them off in the morning or whatever. But we don't, we talk about it on the show, especially if it's a winner. I mean, it becomes the entire show that day. Like if it's a butterfly that's a winner, 30 cents, 40 cents, let alone $1. I mean, you're going to get 33 minutes of commentary around that butterfly later that day. So you won't miss a single thing. But when it comes to, managing positions, I mean, you need to figure out what the right number is going to be for you. For me, it's typically between 8 and 12. For you, it could be 5 or 6. I mean, I've seen traders that really only prefer to have a handful of positions on because of, their schedules, because of their lifestyles, because of their risk appetite. Like, there's a number of reasons why you're going to select the number of positions that you're going to select. But I've seen other traders that will do 30, 40, 50. I mean, it really is. There is no right or wrong answer. This is not a situation where there's one dedicated pathway forward through the forest. Like there's so many different ones that kind of sprawl out into the woods there, and you have to decide what makes the most sense for you. And so I would experiment. I would kind of figure it out. And then generally speaking, if your schedule doesn't allow you to trade as much, then obviously that's going to be fewer positions. If your experience level is on the lower end of the learning curve, that's going to be fewer positions. And if your account size is also on the lower end of the spectrum, so like let's say 25 to 30,000 or less, that's going to be fewer positions. But if you are in a situation where your schedule has a bit more freedom, especially while the market is open, you have more experience, you have a higher level of, kind of seasoning to you, kind of like a daddy's chicken, or you have, more skills and abilities, but maybe not like a daddy's chicken, but daddy's chicken. I've perfected the recipe, guys. I mean, I've perfected the recipe. It took me 9 years to figure out this recipe. And so you can bet your bottom biscuit we are not going to be deviating off of this recipe. But anyway, and then of course, if you have more capital, then that's going to obviously allow you to carry more positions too. So just a couple of things to think about here on this sweltering Monday afternoon. It's funny. It was hot in Chicago, man. I was like, wow, this is hot. Like it was kind of like neck and neck with St. Pete. Like I expect to go to Chicago and I'm like, all right, like I packed my pants, like I packed my rain boots, I packed my snow shoes, obviously, because there's always at least a 20% chance of a flurry. But man, I stepped off the plane. I'm like, man, it is warm. I'm like, I was not expecting this at all. And then I got back here. I'm like, all right, but this is the real heat. This is 100% the real stuff. So all right, let's see what's going on though in the portfolio. Like, what do we need to do? All right. So a couple of things. Number one, let's take a look at, Best Buy. It's unchanged today. I'm not going to do anything with Best Buy. Caterpillar, I think we just did this trade recently. I'm going to sit tight on Caterpillar. Nothing to really do there either. Quick little Chipotle check. Man, so look at Chipotle. So once again, guys, we have beat the system. We have gone yet another day without getting assigned on this deep in the money put. And I told you guys, I mean, you can go back. You can watch the show. We have done a Chipotle check every day since we took assignment on since the earnings, I believe, from Chipotle. So earnings was, hang on a second. Here, I'll even give you the exact day. Let me bring up my Allison change it really quick. Let's spin a little rooster for everybody. There you go, July 22nd. So on July 22nd, we did our Chipotle trade. Chipotle came out and said, listen, we're trying a new business model. We're maybe going to, surprise and delight some customers with some fresh chips. Let's see how it works. Everybody knew that was BS. And so the stock went down significantly. So we've had this trade on since July 22nd. I mean, we know that's not true. Come on, man. Like, don't even bother like trying to pull the wool over our eyes. Like, we know that's not true. But anyway, I digress. July 22nd. So we've had this trade on it's been almost a month now. So you could essentially watch the show on any day since July 22nd up until now. And I think we've done a Chipotle check on pretty much every single day because it went deep in the money like the following morning. And so one of the things I've said essentially every day is, hey, when there's still a lot of time to go, a lot of DTE, even with very low levels of extrinsic value. I mean, we've been riding on the razor's edge of 10 cents of extrinsic value pretty much the whole time. And yet we still haven't been assigned. Now, as I alluded to on Friday, and I will kind of remind us all right here and right now, the hourglass is running out. Like the crystals are running dry for sure on the time that we're going to have left where we're going to be able to skirt, kind of getting assigned on this position. Like it's going to happen at some point if we continue to carry this trade. That's fine. I'm okay with that. We'll just take the shares and we'll deal with it at that time. But I thought this was a really, really good and kind of a unique teachable moment. Not something we have a chance to do all the time on the show. And so to be able to do this and show you guys, like when you have a short put that goes deep in the money from earnings, from some binary event or just random market movements, whatever the reason is, it really doesn't matter. You don't necessarily have to do anything right away. Like you could say, all right, I'm comfortable with the position where I'm at right now. Like my position size is in check. I'm not too big. I'm not worried about like the next 20 cents in Chipotle or whatever. Like I can just breathe easy and figure out what I want to do next in the next couple of days or even the next couple of weeks, potentially at times. And so that's what we've had here with Chipotle. And so again, I think it's been a somewhat unique teachable moment that we don't always get a chance to go over. So Chipotle, we sit tight and let's see if we can't roll the dice one more day. I have a feeling 32 days, I think it's possible that we get assigned this week, actually. I really do. I think it's possible that we get assigned this week. I would say it's still unlikely. Like, I'm going to say it's 30 delta, 35 delta that we get assigned this week. Because, again, we're getting closer and closer to expiration. And it's always very helpful. I say this about basically every position that you have on. It's always very helpful to understand, all right, if I hold this position in its current form and I don't do anything and nothing changes about the market dynamics, what is going to happen? It's out of the money, it's going to do X. It's in the money, it's going to do Y. And then what's going to happen in my position as a result of that? Well, because I have an in the money short put here, I will be assigned. Like I will, if I take this all the way to September expiration, it's not assigned prior to that, which is very unlikely. But let's just say that it's not. If I go all the way through expiration, I don't change anything. The Monday after expiration, we will be long 100 shares of Chipotle. Like we will, 100%. Like there's no way around it. It is a 100 delta trade. It's going to happen with certainty. And so understanding that, like understanding, okay, this is what I'm up against. This is where this position is headed. Now, how do I kind of want to maneuver my way around that? Like, what do I want to do given the fact that this is the pathway that we're on for this position? I just think it's an incredibly helpful way to understand what's going to happen with a given trade. So that's Chipotle. There's our Chipotle check. And of course, we do nothing. And let's roll the dice one more time. I think we're probably okay today. I think if we're going to get assigned this week, it's going to be Thursday or Friday. And so, but we'll see. Google, there's not much to talk about. We did this trade on Friday. So thank you guys for that trade. So far, so good. HIMS, we sit tight. IWM, we sit tight. Meta, we sit tight. I want to talk about Microsoft. So take a look at this. This was another trade that you guys brought to my doorstep on Friday. So thank you guys so much. I can't remember who actually did it, but I appreciate you so much. I mean, I'll take it from here and take full credit. So thank you though for bringing it to our doorstep here. Microsoft down $4 today. Man, look at this trade. We're up we're up about $4 on the trade. And so this was or even is, it's not even past tense. This is a poor man's covered put. And so if you missed the show on Friday, go back and watch the show on Friday. You'll see me build this position out. You'll see me put this trade on. You can get all of my thoughts around, how I structure the strikes and talking about deltas and things like that. So that might be a useful thing. I don't want to go over that right now because right now I want to focus on what are we going to do now that the trade is working? Okay. When you have a poor man's covered put or a poor man's covered call, the one thing that you want to remember is that this position is intended to simulate a covered call or a covered put. So a poor man's covered put is intended to be a synthetic version of a covered put. A poor man's covered call is intended to be a synthetic version of a covered call. Now, why are you choosing the poor man's covered put or the poor man's covered call over the covered put or the covered call? Usually, it's because of buying power. Usually it's because you don't want to be long the shares, as in with a covered call. You don't want to be short the shares, as in with a covered put, because the buying power that you have to put up for those positions is significant, even in a margin account where you're getting 50% margin relief. But especially the case if you're in something like an IRA where there's no margin relief. And so choosing a poor man's covered put or a poor man's covered call gives you a synthetic version of the covered put, covered call at a fraction of the buying power. Okay. Now, what do you do when you actually get the move that you want, which is exactly what has happened here? Like we're already up $4 on the trade at Microsoft, almost $4. We could take it off today and we could just be done with it and move on. Is that a good move? Well, when you're thinking about a covered call or a covered put, it's kind of the same scenario, right? Covered calls and covered puts are similar in a lot of ways to just holding stock. From the standpoint of if you have a lot of distance between the stock price and the strike price, which is kind of what we have here with this Microsoft poor man's covered put, then if you get the move in your favor and you're bringing up some kind of economically significant profit, whether you take it off or not is really entirely up to you. Like the nice thing, well, maybe not the nice thing. Actually, I'm going to say the difficult thing. So I'm going to completely flip the script on you guys. The difficult thing with a poor man's covered call or a poor man's covered put is the simple fact that the profit objectives and like when to take things off, when to leave things on, whatever, it's not as clear cut as with a short put, with a vertical spread, with an iron condor, with even a strangle. Like the mechanics and kind of the adjustments and like the, kind of like the landmarks that we're looking for along the way are more clearly identified. But when you have a poor man's covered put, like we have here in Microsoft, it's like, man, I got the move that I want. I've got a nice profit on my hands. Should I leave it on? Should I take it off? It's like, man, we just put this trade on Friday. It's only been a day, or maybe like in your case, it's been a few days or a week or whatever. It's like, what do I do? Well, I still have so many opportunities to reduce basis. It's like, man, I mean, look at this. If I let me grab my my magenta here. I've got, we're short the 505 put in September with 32 days to go. And the back month is November with like 90 days to go. Right. So it's like, man, I have so many more opportunities to reduce the basis on this trade, not to mention where the stock is right now. Stock's at 515, right? My short strike on the September option is 505. So I still have another 10 points of runway before that short strike even goes in the money. And that to me is very important because once that short strike goes in the money, or actually let's back up. Once it hits at the money, now all of a sudden it's a 50 delta, right? And then of course, if the stock keeps going down, the delta on that short option is going to grow. It's going to be 55, 60, 65, whatever. That's important because remember, that delta on the short option, it is what is whittling down the overall delta on the position. In other words, look at the delta on the two legs of the poor man's cover put. Let's spend a couple seconds on this because I think this could be really, really insightful for those of you out there. If I look at my delta on my 505 put, let me stick with the magenta. Here, happy Magenta Monday to you guys. I didn't even wear the polo. I was actually going to switch my shirt, but I was like, I can't. I wore the blue polo this morning. I got to maintain the continuity and keep it feng shui. So we went blue polo again for the afternoon show. But if you look at the delta on my 505 put, you can see that it's only 34. Okay. If I look at my back month though, let's grab our, what is this? Our Glacier Blue. We got this from the Gatorade folks, or from you folks telling me about the Gatorade color. Look at that 560 put that we're long. That's short about 82 delta, right? So again, I'm just going to round to make it easy. If I'm short, if I'm short 82 delta from the long, and then I'm long 34 delta from the short, which sounds backwards, of course, but remember, we're talking about puts, so that's why it kind of sounds, like counterintuitive. Like I'm short, but I'm long, but I'm short. But that's how it works with puts, of course. I'm short 82 delta from the long put. I'm long 34 delta from the short put. That gives me a net of what, 58 delta? So right now I'm short, actually no, 48 delta? Yeah, maybe 48. Should I text Julia? No, I think she's doing some other stuff. We'll just go with 48. We'll put the squiggly line though, just in case we're wrong. So I'm short 48 delta. Okay, why is this important? Well, what happens if Microsoft goes down? Obviously, that's going to be great. I'm going to be making a lot more money. But all of a sudden, that short put that's right now 34 delta, it's going to be 40. It's going to be 45. It hits the at-the-money strike. It's now 50. When it goes in the money, now it's 55, 60, then all of a sudden, we're going to see the delta on my long put is going to be growing too, but it's not going to grow as quickly as the short put. And so I'm going to be losing my directional bias. And so in other words, I'm not going to, be able to squeeze as much juice out of additional moves lower from the stock once you kind of spill over into that in the money region on the short put. And so that's why, for at least a poor man's strategy, cover call, cover put, whatever, that marker, that specific landmark of the short put becoming, or the short option, I should say, so you can also apply this to a poor man's covered call. Once that short option gets at the money, to me, that's a pretty hard line in the sand, if you can have a hard line in the sand. I think they're all kind of soft by definition, but just go with me on this one. if I'm at the money strike for the short option, then all of a sudden, given our hard line in the sand, now I'm really interested in possibly taking this trade off because I'm starting to lose additional benefits from the stock continuing to move in my favor. So all of that to say, let's not do anything right now. there's 11 minutes of your life that you'll never get back, but let's do nothing because I think that we could potentially have more teachable moments in this position. We don't do too many poor man's trades, and maybe I'll do some more. Maybe I'll start weaving in, some more things in the future. But I think that this could be really fruitful for us as we try to learn together and grow together, moving out into the future. So, okay, let's go to the last thing I want to do though. Man, look at this up moving Starbucks. That's crazy. Starbucks up $2 today. Everything else is down. Major index is down. ES down. NASDAQ down. Boomers down. Starbucks up. Starbucks up big. Starbucks up like 2%, 2.5%. That's a pretty big move. Let's use this up day as an opportunity to sell a call against our long shares. This is our investment style covered call that we've been talking about for basically the whole year now. We did this trade. We started this position back in December. And so I'm just going to go into September. I know that we already kind of squeezed a little juice out of this guy from the call that we sold last week and took it off on Friday while we were in Chicago. So now I'm like, man, we got an uptick. Like, let's sell another call. Like, this is the perfect scenario, right? When you have any covered call, but especially an investment style covered call, these are the days when you want to sell calls. You want to sell into strength. And strength in this context is the market moving higher because you're going to be able to get more juice. There's more meat on the bones of that short call that you're going to sell. You don't necessarily want to sell a call when the stock is going down. That's when you just kind of sit and you just kind of stew in the filth. That's when you're just kind of like, hey, I still like this company. I like what they're doing. Like they've been slanging the same, B minus, maybe even C plus coffee for like 25 years now. And people just keep buying. So I'm going to ride this pony for a few more years. I mean, that's when you've got to really dig into that type of mindset. But if I go into here, what if we sell a 99 call for $1? Let's even try $1.01. Nothing crazy, nothing fancy. Like just, again, investment style covered call. Let's use the uptick to our advantage. We sell it for $1. I got no takers there. Okay, so we got filled there $1. Okay, so we're in the Starbucks position. We talked about Microsoft. We did our Chipotle check, and everything's looking good. All right, let's see here. Man, I want to see where you guys are at. Man, look at you guys. Let me surprise and delight somebody in the middle. Well, man, look at you guys, man. You guys come to play with these comments. You guys are really, really pushing this out in the algorithm. So thank you guys so much. If you haven't smashed the like button, then make sure that you do that. If you haven't subscribed to the Tasty Live channel, then make sure that you do that. And do it during my show so it comes back and tracks to me so I get all the benefits. And so I appreciate you guys. Let's see here. Let me see. Oh, you guys, you killing me, man. Sergio, don't do it, man. Sergio says, Dr. Jim, that Chipotle position needs to be hedged with some wolf. Man, forget about wolf. Man, wolf. They're still in business. That's unbelievable. $1.32. Look at that. Look at that. $1.32. But I'm seeing some people in the chat, and I actually saw this morning. There's not just one wolf. There's two wolves. And I'm not talking about wolves. Like there's two wolves, right? There's Wolf, WOLF, the OG, right? That still owes us a bunch of money. But apparently there's also kind of the new age modern wolf, WULF. Right? This is a $9 stock. This is TerraWolf. And it is on a tear today. We're waiting the entire show to say that. So TerraWolf, it sounded a lot better in my head, but it's out there now. Wolf, WULF. Right? So we have two wolves now. Right? Now we're done with the first wolf. Like I'm done with it. I'm not interested. WOLF is dead to me. Like it owes me money. It's dead to me. But maybe we can make some money back from its brother, Wolf with a U. So maybe, I don't know, man, TerraWolf, $9 stock. I mean, are there any options in here? We got some options in here. I mean, you've got the September options. Wow, it's actually kind of liquid. Look at this. Okay, you got a $10 stock. So, Sergio, you brought up Wolf, the OG, but we're going to go into the new age TerraWolf WULF. The at the money supply, you can sell a straddle for over $2. You can get like 2.25 for a straddle in Wolf. That's pretty wild stuff, man. Now I gotta see if the powers that be are gonna get me on the buying power. No, look at that buying power, $500. Man, that's $500 in buying power. And you really only have risk to the upside. I mean, you obviously have some risk to the downside, but it can only go to zero, right? Like it's not gonna, you're not gonna lose more than it going to zero. So, if it went to zero, I've collected, $2.27. I would lose what, $7.50, which is not insignificant. Like, don't get me wrong, but I'm not in a situation where it's gonna double, triple, quadruple, whatever. And now I'm really, really in the hurt locker for all my Jeremy Renner fans that might be watching the show. Which is an amazing movie, by the way. I think that was his breakout movie, was it not? Like, that was the one that really put him on the map. It was a phenomenal, phenomenal film. And so he really missed the mark in that off the reservation born, though. Like, was it just me or was that super weird? I was like, this is not, it's gotta be MD, man. Like, Jeremy Renner is a great actor. I love Jeremy Renner. He's amazing in The Town, amazing in The Hurt Locker. I'm pretty sure he was in The Hurt Locker. I hope I got that right. But then he shows up as a Bourne. And like, I can't remember, was he Bourne in the offshoot Bourne where like they veered away from MD and they brought Jeremy Renner? Or was he like somebody else in the program? Like, I don't think he was Bourne. If he was actually Bourne, that's even worse because he can't be Bourne. But it's like, then they finally looped it back in and went back to MD for the last one in the series there. But anyway, I digress again. So if you look at Wolf though, with a U, I should say, it's always going to be with a W. But Wolf with a U, there's really only risk to the upside. So I'm going to go ahead and let's do it. Let's put this guy on. Buying power is very, very low. $500. That's very, very manageable. Let's try maybe 226 and we'll see what happens. All right, beautiful. So we got filled at 226. All right, so there's some Wolf. I said I wasn't even going to trade today, but man, Sergio, I appreciate you. Oh, I see. Oh, wait a second. I see. Is that Daniel Perkins? Wait a second. Somebody said, yeah, Daniel Perkins says, no shot. You don't get assigned until under 5 days. Oh, no, that won't be right. I mean, I would say, so this is another great comment though, based on Chipotle, obviously, because that's the only one that we've been talking about. No, if I hold this position in its current form, we'll be assigned well, also assuming that Chipotle stays around here with no extrinsic value, we'll be assigned long before 5 days. Long before 5 days. And by long before 5 days, I mean maybe 6, maybe 7. Right? And so I think we're probably good this week, but we'll have to wait and see. Oh, hold on a second. Oh, okay. So here we go. We got some people hooking us up here in the chat. He was not Jason Bourne in the Bourne Legacy. He was Aaron Cross. Aaron Cross. Okay. All right. Well, that makes it still wasn't very good. I mean, am I alone? You guys let me know in the chat. Like, let me know. Am I just off my rocker here? Because I think it wasn't bad, but it didn't feel right. Right. It felt like they were square in a circle the whole time. So anyway, let's go to the beginning. So where are you guys at? I see Grumpy Mike asking about the Honda Civic. Is it still underwater? Yes, quite literally and figuratively. It's gone. It's over. It's like it never happened. Right. In fact, I think I'm getting the payout today. I'm getting like $5,800 for the Honda Civic. And so what am I going to do? I'm going to get another Honda Civic. Right. So I think I'm going to upgrade a little bit though. Like it was a 2010. I got my eye on 2011, 2012. I'm like, all right, man, like let's get into, let's see if they can, include me in some of the bougie bourgeois clubs with my 2012 Honda Civic. And so let's see, Ash is in the house. What's going on there, Ash? I appreciate you. Scramble everything in the house. Man, look at you guys. Joe says, it's Dr. Jim time. What's up there, Joe? Joe, didn't you cost me some money or something? It was Kava, right? Yeah, you keep fighting against it, but don't fight it, man. Just embrace it. Just embrace it, right? But again, remember, just to be clear, that was your trade. That was not my trade. So Daniel Perkins in the house. Hey, Dr. Jim, every Monday, I can't help but feel like Tom thinks your humor is C+ at best. It's not even C+, man. No, I'm not even sure we're passing in that class. Like, I think we're riding with a D-, right? And so, and the funniest thing was, so I don't know if you guys remember, but this was probably, it was this year, I think. I don't think it was late last year, but there was that week or two where Tony was gone, and we all came in to the studio, or we all kind of shouldered the load for a kind of, filling Tony's spot, which again, I mean, Tony leaves, it took 14 people to replace him. Right. So just keep that in mind. Right. But I was one of the 14, and I came in, I think it was on a Monday, and I did the whole live show with Tom in the studio. And you know what's funny is, I mean, I have a great relationship with Tom. I love, doing the events with him and stuff. It's amazing, right? It's incredible. But I've never really been on air with Tom where it's like just me and him. Like obviously when I was in Chicago for 5 years, I'd come into the studio every morning, every Monday morning and do the skinny with me, him, and Tony. And that was amazing. But when it was like just like me and him, it was like, I don't know. Like I don't know if this is working for me. And I'm pretty sure he was over there like, this is definitely not working for me. And so what's really funny about the C plus humor on the Monday mornings online is it's not even C plus. It's probably D plus, but it's even worse when we're actually like live together in the studio. And so, but I appreciate you, Daniel Perkins. Sam L, best way to kick things off with the Doc Demander tweets. Earnings trades like leg day. Painful. Yes. Humbling, but always come back for more. That's exactly right. I could not have said that better myself. Earnings are just like leg day. It's basically leg day every day. And so there you go. Sam L goes on to say, Doc, we have PANW earnings tonight. Who really needs cybersecurity anyway? I mean, I've never even heard of them. What's your play? I mean, obviously I've seen the ticker, but I couldn't tell you what they do. What's your play so I know exactly what to fade? I think am I going to pass on this? The woods. And so now that's where the bougie bourgeois live. PANW. Earnings tonight. Ah, man, do we really want to do this? I don't know. $176. I kind of want to do something. I kind of want to do something like strategic though. If I'm going to do something, let me look at like a super wide strangle. What if I sell a 150, 200 strangle? How much is it going to cost me in buying power? Wow, it's only $1,700. Yeah, I'll do this, right? I don't really feel like lighting stack his cash on fire today. And so I'm not going to do something directional. I'm not going to do a butterfly. I'm not going to do a vertical spread. This was not even on my radar today. So thank you, Sam L, for bringing this to my attention. And now, hold on, let me write that down. PANW is Sam L. Yeah, we're keeping the receipts now. Just because you guys take me down on a fairly regular basis. And so now it's time for you to start taking extreme ownership of these takedowns to make Jocko Willink proud. So 150, 200. Only 7. Yeah, I like it. I like the trade, Sam L. I like the trade. And if it works, of course, I will take it from here. And so let's see. If I take 552, no takers. Let's try 549. I'll probably get somebody out there. All right, no takers at 549. What if I do, let's see here. 547? Man, what's up with Palo Alto? Are my dollars no good in Palo Alto? That's very possible. I don't know that I'm allowed to drive a 2012 Honda Civic in Palo Alto. All right, so we got filled at 546. So we had to do some more aggressive price discovery than usual. But there you go. All right, so let's see. Scrub Everything says, I made it to the Dr. Jim's Power Hour, the 45 or 75-minute show. Yes, that's correct. Time to get, oh, there you go. Palo Alto, Home Depot earnings trades going with Best Buy earnings coming up. It's time for the PhD to shine. Yeah, I don't know that we've been shining the PhD lately. I feel like, Memphis might give me a call here pretty soon if things keep going in the direction that they're going, saying, yeah, we kind of need you to do some continuing education or something to keep this thing up. But I'm going to pass. I'm going to pass on Home Depot. Best Buy is coming up soon. Wow. Really? Huh. Okay, so it's in a couple weeks, August 28th. Remind me when it gets closer, because we may have to do a little something against our long shares. So I'm going to pass. We've already done Wolf with the U, and we've already done Palo Alto. So I'll pass on Home Depot. But again, Home Depot, if you guys want to know my thoughts on Home Depot, it's pretty straightforward. It's pretty obvious, right? Obviously, Home Depot, again, just use common sense. If you're not mega bullish on Home Depot, I really don't know what to tell you. I really don't know if I can help you beyond that point. And so you guys know what to do. And so let's see. Brad Glazier. What's going on there, Brad Glazier? I appreciate you. Thank you for being here, my friend. Let's see. Scramble says, no Andrew Cortado sighting. Now, he might be here. Maybe he's on vacation. That'd be good. Or maybe he finally decided, you know what? Dr. Jim gets 43 minutes of my life every day. I haven't gotten any of it back. And today I'm finally taking a day off, which that would be good, I think. And so let's see. Rancher, I'm right on time. What's up, Dr. J? Oh, I'm Dr. J, J-A-Y. I get my name I get a lot of J's, J-A-Y's. I've never gone by J, not a day in my life. And so I appreciate you, Rancher, but I've never gone by Jay. Never. I get an email that's titled, "Hey Jay, Jay. It's probably a 10 to 15 delta. Like on any email that comes in from someone that's reaching out to me for the first time, which I typically get at least a couple of those every day. Jay. And so that always kind of makes me laugh. I've never gone by Jay. But I appreciate you nonetheless. Sergio's in the house. Let's see. Rancher says the James gang. There you go. I have gone by James before though. Soul Train in the house. Dr. Jim, I just closed my APLD call at 822. The stock is rising. No real news. The shorts are moving in. When should I start shorting? Oh man, I have no idea. Oh, based on the chart, I have no clue. I'm not familiar with that stock at all. Is that Apollo? No, it's Applied Digital. So it just goes to show you have no idea. I mean, I don't know, man. Like, I mean, looking at the chart, it's pretty back and forth. Oh, that's a 1 minute chart. That's why it's back and forth. I mean, if you do like a 1 day, do the old daily chart. Yeah, I mean, I don't know. I mean, just looking at the chart, I'm naturally contrarian, so I would be bearish on this chart. I mean, it's obviously it's reaching for higher highs, and so don't let the momentum bros hear you. Don't let the breakout bros come and get you because they will come and they will find you and they will get you. But I would look at this and I would be bearish. And so I wouldn't even necessarily wait. I'd probably do it now personally. And so you know what to do. That basically just cements that they're going to at least 20, maybe 25. And so let's see. Daniel Rooney in the house. Morning, Dr. Jim. What's going on there, Daniel Rooney? Appreciate you, my friend. Wow, we're almost done with the show. You guys have no idea how fast it is. Ash Finn says we're outlaws, Rancher. Yes, you are. Grumpy Mike. I see a couple Amphicars for sale. Maybe that's Dr. Jim's Neat. I don't even know what that is. A car that floats and has a propeller. A good-looking 65 being auctioned. A rusty 63 for $29,000. $29,000? Man, if you think I'm going to fork over $29,000 for a vehicle that's going to transport us from A to B, you can bet your bottom biscuit Autumn is expecting a van. Like, she's told me, she's like, all right, you do whatever you want under 10 grand. You get yourself a Civic, get yourself a Corolla, get yourself a 97 Grand Am. I don't care what you do. She's like, but you start getting into the 5 digits, I'm going to need a van. She's like, I'm going to need a van. I'm going to need a van that's no more than 5 years old. And so, yeah, she has given me very strict instructions, very strict. And so you're talking about auctions, you're talking about 63, like whatever. It's like, yeah, man, I can't touch any of that. Like 29K, I better have a Chrysler Pacifica in that driveway or I'm going to have a whole lot of problems. And I am not going to be interested in that at all. And so scramble everything. Let's see. Oh, there you go. You got a partial fill on a Palo Alto strangle. There you go. Those are the worst. Yes, they are. They absolutely are. Mikos, hey, Dr. Jim, Target earnings are coming up. What are we doing with that? I don't know. Are they tomorrow? I'm not going to do anything else today, I don't think. But I'm curious now. Okay, so they're later. Remind me about Target tomorrow. So Target is Wednesday morning. Well, maybe we'll trade Target tomorrow. So just pop in tomorrow, Mikos, and remind me tomorrow, and we'll take a look at Target then. But I'm going to pass on it for now. Let's see. Sam L. Doc, did the kids even notice you were in Chicago? They did. Guess you're underappreciated at home too. No, they absolutely noticed. And so they get, my kids are, let's see, Penelope's 10, she'll be 11 in January. Eli's 8, and then Amelia's 5. And so they're all still really attached to both me and Autumn. I mean, pretty soon they're not going to want anything to do with us, right? I mean, that's just the natural that's just the way of life, the cycle of life, right? And so right now, like I like to lean into that. Like whenever Autumn leaves for some time, they're way more attached to her than me. But I'm always kind of surprised at how much they're attached to me. Like when I leave, like they get kind of sad and like there's extra hugs and kisses and I love yous and those kinds of things, which is kind of awesome. Right. And then when I come back, there's more hugs and kisses and I love yous and whatever's, which is amazing. And so that's cool. So they actually did know that I was gone and that made me feel kind of good. Let's see. Scrum everything. How are the Schultzes doing, man? We're doing great, doing absolutely phenomenal. So thank you so much. Jabril's in the house. What's going on, Jabril? Says, I can't believe I'm losing on the VIX this much on a down day like this. What's going on? Yeah, today's a weird day because it is down, but it's not down that much. And so, I mean, obviously the VIX is barely moving. It's up 8 cents. Today is, it's day number 1. Like that's the only way that you can put it, right? In the famous, words of Mr. Thomas Osnoff himself, this could be day number 1, right? And so, I mean, the NASDAQ down 30, 40, 50, it's like, all right, maybe it's down 50, 60, 70 tomorrow. Maybe it's down 80, 90, 100 on Wednesday. Like maybe this is the start of something. We've only said that 29 times in the last couple months. And so maybe this is it. Let's see. Rancher says, I rolled up my losing short call spread in UNH strikes. Up 320, 315. Still 33 days to go. What to do now? If it's defined risk, normally it's just sit tight. If it's a defined risk, which apparently it is based on what you put in that comment, normally it's just sit tight. I wouldn't even be rolling the strikes up like you did. So in my opinion, you've already done more than I would ever be looking to do with a defined risk strategy, kind of moving the strikes and trying to zig and zag. And so, I mean, I would definitely sit tight now. Without knowing anything else about what you collected and things like that. MJ's in the house. In the current market situation, what option strategy, in your opinion, is a better idea and why? Can you please explain? This is a great question. This is a terrific question. So right now, the volatility is low, right? So the VIX is 14, 15 or whatever. And so volatility is on the lower end. So when volatility spikes up, let me just use this opportunity to say, when volatility spikes up, my go-to strategies would be short put, short strangle, if you want to do undefined risk. If you want to do defined risk, I like short vertical spreads more than iron condors. You guys know how I feel about iron condors. I don't love them, but I do think they're great learning vehicles for people just starting out. But I would go short put, short strangle, undefined risk, and then defined risk, I'd do short verticals. Do a short put spread if you're bullish, do a short call spread if you're bearish. What about a situation where volatility is low? Well, now it's really difficult to sell a lot of premium. I still think it's okay to sell some. Like you can go down the watch list and you can look for, high IVRs, maybe in like an individual stock with earnings coming up, maybe in like an international stock or sector or something like that. I think that's fine because you want to have data working for you. You have return goals you want to hit. You want to keep your capital kind of moving forward. I totally understand that. Just don't go hog wild. Like, just don't go crazy with selling premium right now, because then when the volatility finally does spike to 22, 23, you're going to wish you had more capital kind of waiting to be deployed. This is when using diagonal spreads, poor man's covered calls or covered puts, which I talked about earlier today, and then long vertical spreads are going to be the way to play. And the main reason why is because all of those strategies across the board are going to benefit from volatility expansion. So some will benefit better than others, depending on whether you use calls and puts and what strikes you select. But just to give you a little something, MJ, to kind of get started, that's where I would kind of begin the analysis when it comes to low volatility. You're looking for a strategy, long vertical spreads, diagonal spreads, poor man's covered calls, poor man's covered puts. Notice all of those strategies are directional. All of them are directional. That's kind of the cost of doing business with trading during low volatility. You kind of have to be a bit more directional than you can typically get away with when volatility is higher. But Brian Dowdy, I see you in the house. Joel James, I see you in the house. Rick CR, man, I see you. Lefty, Ichabod, man, I appreciate you guys. Matt Hart's in the house, but I got to roll. I got to go and get you guys over to Jamal, but I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
What's going on, everybody? Tiny Little Stock Terrorwolf is on the run once again. We'll talk about what's going on there. Lilly is doing a bond offering. I mean, that you don't see that too often, especially the tranche that it's doing. So we'll talk about what's going on. And finally, talk about running. Solar stocks are on the move. Some legislation changed on Friday, and it's carrying over today. So we'll talk about those three things and more. Pretty quiet market here. Volatility is low. Things are kind of the same over the last couple of days, but we're going to make it work anyway. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler.
We're back.
Across from me.
We're back.
You know who he is. Josh Fabian.
We're bad.
You're black.
I'm mad.
Wait, what?
Yeah, something like that.
What's going on, dude?
How are you? How was your weekend?
I'm good, man. Actually, pretty low-key weekend. Pretty chill. I didn't really do a whole lot. I mean, there was a lot going on this past weekend in Chicago.
Oh, yeah.
You had the Chicago Air and Water.
Busted out windows on the
apartment building. They busted plenty of towers, Goose. I heard they busted plenty of towers. Listen, I mean, what do you want them to do, man? I mean, that seems kind of fun. But there was, that seems kind of fun. But there was also like a UFC fight this weekend.
Yeah.
I totally. And then, God, I guess there was like some acts. There was somebody there at the UC on Friday. Tate McRae.
Oh,
that's who it was.
Okay.
Friday. Yeah, it was a lot of stuff, but I did none of it. I was at home mostly.
There was a football game yesterday, too.
Were you? What'd you do this weekend? Fine, I'll bite. What did you do this weekend, Josh? Tell me.
Saturday, I did nothing. Just chores around the house. Took it easy. Sunday, went to the gym. And I spent a lot of time texting with Tyson Bagent's dad.
Who is that, Josh?
That's quarterback for the Bears.
The backup quarterback for the Bears?
Soon to be starter.
Okay.
Soon to be starter.
Okay.
We were texting back and forth quite a bit before the game. We're best buds.
Well, you know what? You should have him call into the show one day. We could hang. We could talk to him.
I can call him right now.
And talk about. I mean, call into the show so that everybody.
I could do that. I can have that. I can make that happen.
Make that happen. Yeah. As boys now.
Yeah, we're tight. We're tight. Yeah, he'd be like, I'm sorry, who? The game was actually, it's preseason, so don't jump to conclusions or anything.
Right?
We got to dial it back, but
Well,
we're definitely going to the Super Bowl.
Did the Bills even play starters?
No.
Yeah, the Bills didn't play starters. We did, and again, their situation is solidified.
Yeah.
I mean, it's mostly solidified. They got their quarterback who's been there a while. They got their receivers.
Yeah.
They're actually unique from the league that they don't have like a number one.
No, they don't.
Like receiver.
Ever since they lost, what's his face to
Diggs.
Yeah.
Like they don't have like a.
He doesn't want one.
Yeah, and it works for them.
Yeah,
and they ended up paying money for their running back. Who's from Miami, but
Cooks.
Originally from Miami, not where.
Yeah, he did his sit-in.
Yeah, he did, and it worked.
Yeah.
So yeah, it's interesting. And again, we have a lot to show and prove, and we're still trying to figure out what works. And so yeah, we needed to play starters. We should kick their ass like that last night. I mean, that's what it should be.
Yeah, but they look crisp, and it was like it was different from last season.
Yeah.
In that they looked like they knew what they wanted to do, which was nice.
Yeah.
So see what happens.
Yeah, I mean, honestly, like real talk, Bagent, not just saying this in front of you. I mean, he looked good last night. He could be. Look, one of the things you always got to have, you got to have a good backup quarterback because if something goes down, I mean, you're in trouble, like in any team. Yeah. And he seems to get grasp of the offense. He seems to know what he's doing. He can take off. He can outrun. I feel like he can outrun most linebackers.
Well, he's got some wheels.
Yeah, he's got some wheels. Yeah. What did we say last year? Was that like 2 years ago now when we were talking about his 40 time? And he runs like a 4.8. I think we looked it up.
Yeah, he's fast.
Yeah,
he's fast.
And I was like, first of all, in my heyday, I could run a 4.8, but I really do.
Oh, yeah, that's right, because Tom didn't believe you.
I could run a 4.8. I just don't want to risk it. I'm dead serious. I'm almost 50. I'll be honest. Like, look, there's times now when I'm running across the street and I get in a quick sprint. And I moved, but my calves hurt a little bit after. I'm not gonna lie, so I don't think I would want to do that.
Yeah.
What's up, chat? How you guys doing? Agent was here at the office the other day. He was also at the show. What's up, man? How you doing? Rancher, ER. How you doing? Do you work for like an ER company? I'm curious. What is it? Is it like the Ranch ER or is it Rancher? I never really knew.
It's a good question.
Yeah. I don't know. I see people got some questions about.
Hey, chat, what's your 40 time?
I
turned 40, and my 40 time was about 40 years after I was born. That was my 40 time. I don't do 40s.
I ran a 4.45 in high school. It was a long time.
So ableist. You know, before we went on, I said something about making me look taller than you, and so you started standing up. And then you talked about
standing up. That was what my chair was doing.
You're so ableist. What
are you talking about?
So ableist.
Can we pull up the platform, please? First of all,
where are you going to first?
Let's talk about what we talked about. I should say,
let's talk about what we talked about.
That's right.
That's a permeating syllogism.
This is not a name that I was really on my radar. I think you brought it to my attention.
Last week, yeah.
Was it this day on the big move, or was it before that?
It was.
How long have you been watching it?
I swear, I thought you told me about this stock months ago. So it's been on my watch list. But
I would think I was watching. I've seen the other Wolf Speed. I might have mentioned.
That's what you probably mentioned, and then I just put in the wrong thing.
No.
Yeah, but no, I think I brought it up to you last week when it made that big move, and it's. What did you say? Google took a stake?
Yeah, I think they took a stake on Friday, but then they clearly upped the stake, and that's what's got the stock on the move now. A Bitcoin miner. Yeah. I don't know. Is this thing?
I don't know, man. You see something like this.
I mean, the move has already kind of happened, right? Like sometimes you feel.
Well, that's what I thought Friday too. You know,
yeah, I know, right? Well,
or last week, whenever it was. Yeah, I don't know. There's certain things that you see that, like. Is this froth or is this legit?
To it?
Yeah.
I know, right?
Like, you know.
I mean, it could be one for my my zebra trade sort of thing that I've been into recently. It's really been into those. I mean, we talked about making. You know, we've decided. This is actually Josh's idea. I think it's a good idea. We've decided sometimes we're going to try and find a trade that carries throughout the week. This is a hard week for that.
I came up with the idea, the perfect week when there's nothing to do.
You know, this is a cheap one to put on. I mean, is there more upside? Do you feel like there's more upside? Do you think it's?
I don't know. I mean, honestly,
I could put on a zero right now for $300. That's not, you know, that's a small.
Listen, in this market where most stocks trade for $100 plus, yeah.
Or is this? You know, this is up today. Isn't open up again?
Yeah, opens up again.
Is this the beginning of the fade that we get in the market? 3% fade, and I mean, a lot of times crap stocks like this kind of signify that, right?
Yeah, so, you know why that's up? Because I had jumped in it late, and then I was like, all right, I missed it. Screw it, I'll get out.
Yeah,
and now it's up.
That's what I mean. Like, how do you approach? You know what? It's a good question. How do you approach that sort of idea sometimes? Because that is. You could call it urban myth, but we've seen that. I mean, for the people who have been in the market a long time, I know I've seen that a lot. We've talked about it a lot too. When towards the end of a bull run, those are the names we often talk about it at times on Tasty, the shitty stocks that are running towards the end.
I call them the I-Omegas. Yeah. I think we talked about it even here.
For sure.
Like these, to me, that's my first memory of this type of thing is the I-Omega effect.
But I would say open is probably more that than the Wolf. The Wolf at least.
Wolf has some legs.
Yeah.
You're so ableist. I can't believe you would go with that. My God. Oh my God. I can't believe you went along with that.
It does. It does.
No, it does. It does. It's got some legitimacy to it. You know, if Google's investing in you, you know, not that Google doesn't have money to throw around, but, you know, that there's some validation to it, right?
Yeah. Somebody's asking about a risk reverse. I mean, you could, I don't know. Look, guys, I would say a risk reversal type trade in this situation, I don't know if I love because it's so small. And the stock could really revert much lower and you can get a handle on that. I personally would rather a zebra because if I'm going to play it, I'm playing for the real upside, right? I mean, if this is a situation where vol is crazy high, which in the absolute it's 98 vol, but IV rank wise it's not. I would sell vol probably or do a lizard or something like that. But honestly, I like more of a zebra in here because if it's going to take off, it's just going to go.
Yeah.
Next thing you know, it's going to be trading 15. It's going to be trading 20.
Yeah,
and
exactly.
I just don't think you capitalize as much. You can capitalize with a risk reversal on that, but I think your risk is more harder downside in risk reversal than it is with a zebra. Honestly, it's more defined, I would say. Not to say it isn't defined, obviously, with a risk reversal because you got the short put, so that is that is defined to the downside. But it's just I'm literally risking $300 in this case on a zebra, and if it takes off to the upside, I get to participate more. I like
It's
that.
a cheap way to play it.
It's a cheap way to play it. I'm gonna put this one on. I'm gonna do it October.
I like it.
Whatever. We'll see how that goes.
Thank you.
Again, if it were a name that were like, say, if it were a $25 name and I could sell the 15 delta downside puts for like $1.50, and it hasn't had this kind of crazy move, I would probably do a risk reversal. I would definitely sell a put spread in here if it were like a $40 name.
Yeah,
I could get a put spread for $2.50 on a $10 wide spread. I would do that. That's what I would roll.
An expensive stock like this.
This is why I'm head of option strategy, okay? This is how I think about things. Why not synthetic? Yeah.
You could do that. You could.
Too.
What's the... I don't have it pulled up on my screen. What's the spread?
No, you could definitely
do it. Yeah, you could do it.
You could definitely do that.
What's the IVR on it? 21?
21 IVR.
You could do that.
You could do
Nothing wrong with
that. Scramble Everything is for those who are obviously not going to, when this is an archive. Scramble Everything asks the idea about a synthetic, buying the 10 call, selling the 10 put, and then you could cap your downside risk by buying that 8 put. That's also a good shot, too. But just so you're, let's see, the buying power is kind of almost equivalent to
it's under 10. If it's under $10, you're not going to get.
The buying power is kind of equivalent to what we're talking about for the same thing with the zebra. It's actually a little bit cheaper than zebra, so that's actually another decent one too. And again, anytime you do these, you can of course look at the. I know Tom has talked in the past about not liking the curve function. I like the curve function personally. I think it's good.
Do you?
Yeah, I do. I have no problem with it. I mean,
I don't have a problem with it. I
think it's a
really
reality
use it.
check. A lot of times, personally.
Yeah.
Colin Lewis Solomon, how about a short put spread in /NG? Colin, you're in timeout, okay? No, I'm just kidding. I'm just kidding. But I'm really not interested in trading any short put spreads in NG right now. I get it. It's not a bad idea. It's just more of a personal preference, but it's not a bad idea. You got a 46 IVR, and it's on its butt. I mean, it really is. But
you're also getting to a time of the year where NG can get crazy.
It's true. It's true. Rancher, actually, and again, you could buy shares in Wolf, too.
Yeah, that's the other
I don't know if it's marginable. I don't imagine. Oh, it is. There you go. You could do that, too. But again, it's not terrible, right? I mean, the stock could tank,
you can do a covered call.
That basically causes you to
What's
lose.
the 30 delta call going for in October?
30 delta call is 70 cents. You could do that, too.
Yeah,
and these are
all these
outside plays.
Yeah.
I'm playing this with the idea that it's going to jump to 15 at some point, right? Like, that's kind of my move. But we'll see. What else did we mention? Oh, Lily. Lily is one of those names. I've talked about zebras. This is one of those names that was on my list for putting a zebra on last week, and then it did kind of a jump. And now it's back at 700. And now there's this talk about taking a bond offering, a huge bond offering, including possibly a 40-year debt.
What's that all about?
I think they're a little worried about some volatility to come with what's going to happen with potential tariffs in pharma, and they want to get some cash. That's what I think.
I mean, that makes sense. I can.
You're in a strong position now. Why not do it now?
Yeah, it makes sense. Which, you want to finish up your thought because I have a question.
No, go ahead.
You. Why don't athletes do something like this, or celebrities? Why don't
like offering to get cash from people?
Yes, like it's been tried, but why don't they sell? Take for example, an athlete signs a $300 million contract that's backloaded. Okay,
so that's like 20 people in the entire world right now. I think. I don't know. That's about a robot.
Okay, fine, whatever. Okay. And they sell that contract out for $280 million.
Okay.
Okay. They collect 280 million. There's 20 million. That's the ARB.
Yeah.
Right. But they at least collect it all up front, so they don't have to worry about injury, whatever. I don't understand why there has not been a market for stuff like that. And you could do it for all sorts of different entertainers, athletes. So you can make baskets of this stuff.
Well,
it's a great idea.
Well, I think a lot of times these days, I think a lot of these dudes still get a lot of money up front. But forget it. Let's just entertain this idea. Let's just say this is like back in the day when you don't get a lot of money up front, and why wouldn't you do that? I would, one of the things, okay, if Lilly does a 40-year bond offering and they're getting money from, banks, right, like Goldman Sachs and all these other ones, right? If they default, then they got to pay that money back, and then people are going to take them to court, and it's going to be a lengthy situation. I would say that's one of the main reasons maybe why they don't do it, because you're worried about default.
Yeah.
If you default, i.e. you get injured for the rest of your life, or, like Ron Jeremy, like if something happened to his... You know what I'm getting.
Did you just say?
I did, yeah.
You went with him?
Yeah.
That's the first celebrity that came to your mind?
No, it's not, but I was just trying to use him as an example.
Of all the celebrities running through my head,
you could have done one on him in the 70s, man. If you would have done one on him in the 70s, you'd have been like, oh, I'm about to rake it in. Man. This dude right here, he's going to be the future. Imagine. See, I just saved you. I saved you a lot of money. Yeah. I saved you a lot of money.
Okay.
I mean, I think the risk of default is the hard. Like
the risk of default, yeah, but you have a risk of default in any market, right? And I see somebody in the chat.
Theoretically, Lilly has no risk of default.
Yeah,
theoretically, but there is a % chance, and that's where what do they call CDSs, right? Yeah, CDSs come in.
Yeah,
right.
Yeah,
CDOs. Yes.
Yeah. Yes. But that's true of any investment. There's always that risk. But, and I see in the chat somebody said something about they could collect and retire next year. Yeah, that's the risk that you take, because they could do that. But
what do you want to open it up to people? Do you want to give Pat Mahomes $100 along with the other however many million and wait to make some money on your $100? You think?
I just don't think they're going to
make
retire.
100x.
I think these guys are playing because they want to play.
Well, yeah. I mean, yeah.
I don't know. I mean, like, if you want to invest in my wheelchair football career, I don't know if you saw that I was headed there. I set that up bonds. Good, didn't I?
You have a bond offering right now?
Speaking of which, I expect you'll be at my tournament this weekend out in Rosemont.
You got a tournament this weekend in Rosemont?
Mm-hmm.
When?
Saturday and Sunday.
Saturday.
Come Sunday.
My kid has a game on Saturday.
Come Sunday.
Sunday?
Championship game will be at noon.
23rd. When's the 23rd? Saturday?
Saturday,
That's
yeah,
Saturday.
24th.
My kid has a game on Saturday.
Sunday.
It's a scrimmage game. Okay, Sunday in Rosemont. That's not far from me.
Yeah, it's not too far.
I could show up. I could show up.
All right, I'll text you the address.
Mall, hang out afterwards.
Yeah, not far from that stuff at all.
No, I'm not. That's not far from me.
I'll text you the address. Okay, back to the show.
Yeah, Lilly bonds offering. I just think that's what it is.
I think you're right.
It makes I wanted to do a zebra on this. You see what the stock has been.
Yeah.
It's taken a sizable haircut in recent times. But I don't know. I'm a little worried about the tariff thing, and that's why I didn't put any longs on.
I don't know what their situation is, what their exposure is with the tariffs. I haven't really looked into it, but
me neither, actually.
It's obviously it's significant if they're doing this bond offering. I'll be curious if some of the other ones start doing it. Some of the other pharmaceuticals do something similar.
I don't know. I'm trying to think. All the comparables escape my mind right now, but. Lilly, drug manufacturers. Oh, it's Merck. Well, Merck is in that category, right? Merck is in that. That's another name that's down on its luck recently.
Yeah, Merck.
Johnson & Johnson is on highs. AbbVie is on highs. Maybe they're,
AbbVie's mainly here, I think. I mean, they're headquartered up by me.
Yeah, they're here, yeah. Novartis, Merck. I don't know, man.
It's interesting. It's not something you hear about a lot.
It's not. It's really not. So it's kind of unique. But
kind of unique?
Yeah. I mean, it's not very unique. It's just kind of.
You're just trying. You're just trying now.
Solar stocks. I've been on the move big time recently. I guess there's been some legislation change recently. I really didn't. I didn't see this. I guess it. Yeah, I didn't see this. I'm surprised. It's been a 2-day move. I like solar names. I've always liked them. I have a soft spot for First Solar. I don't know if I ever tell you this. First Solar is probably one of my big first singular trades when I was trading at a firm. I made like $50,000 one day on it. I only had like a $200,000 book at the time.
I get it. Yeah.
And, I got in trouble for it.
Take too big a position?
Not even, actually. It was like, I might have had like, it might have been, I think it was like $5 to $7,000 was the size of the position, and it turned into 50. But the reason why I got in trouble, when we were trader trainees, so I was still a trainee. I had my own book, but I was a trainee, and we were supposed to run a lot of ideas through our
senior account manager
guy. Yeah. And he was not even a partner. He was not. He was just a guy who would. So what they did when I got there, they had hired former traders on the floor.
Yeah.
And were teaching them all of the basically all the these guys on the floor. People don't realize they didn't have the type of technical stuff and just tech that we have now. So they were teaching them our tools, and then they hired us young people who had never traded, and they were teaching us the way. But once I got to the trading, a guy who had traded from the floor, who really didn't, outside of knowing options, he didn't really know that much more than I did. He had never traded a book with 100 different names. He had never done it, really. But he was considered more senior. We were supposed to pass ideas through him. Well, he would never say, you know what, that's a good idea. He would just, if it wasn't specifically to the strategy of the firm, he didn't like it. And I knew he wasn't going to like my idea, so I didn't tell him. So then when me and 2 other people in the group decided to put it on and didn't tell him, we made money. Literally at the end of the day, this dude was like, all right, well, why don't you just tell me why you decided to do that trade? Because I know they're going to ask me why didn't I have some of that trade on too. And it was the weirdest thing, man. I don't care. It's still I got in trouble for it. Yeah, I got in trouble for making money, and I don't care. Still has a soft spot for First Solar.
We all have a soft spot for the first one we made money with.
Sunrun has been another one that's been on the run. One of these solar names. I don't know what to make of this. I don't know if I don't know if I want to sell vol in here.
I honestly haven't until just before the show started, and you said something about solar stocks. I haven't even looked at them. I mean, just completely fell off my radar. Just been. I mean,
look, Josh. Have you looked at the volume in the market today? Okay, this is not many things happening here.
No, and that's my point. Is it's what do you What do you watch right now? I
know, right?
It's a fight to keep your eyes open, and I mean, all I've been watching really. I mean, SPOOs are. Have you looked? SPOOs?
Volume?
Yeah, have you looked?
No, but I'm going to guess 890,000 contracts.
670.
Dang.
Yeah.
That's pretty darn quiet.
Yeah. I mean, I've been watching that. Bonds. I mean, in-the-season bonds is really all I've been watching. And it's just so damn quiet. It's like, if I see that's not doing anything, I really don't even start looking for anything else.
I mean, that's
nothing's going on. It's like, what am I going to look for? And if I find something, it's going to be an anomaly.
Yeah, it's really quiet, and it's hard to force any trades right now.
Yeah.
To get to some of the things I know people were asking about, do I have a price target in MyX? Not really. I'm actually thinking about pitching the stock probably later today. It was just kind of something.
What's it at right now?
$33.
I did pitch. Oh, so you talked about it on the show?
Well, I think somebody just saw that I have it.
Oh, yeah. I pitched mine.
What else? Oh, yeah, earnings. I know PanW has earnings today.
Yeah, and HD before the open tomorrow.
I saw somebody asking about Target. Honestly, I'm not trading Target until actual earnings.
Yeah, that's later this week.
PanW is somewhat interesting to me. I feel like this name has moved before on earnings, big. Again, I like to play big earnings movers. Yeah, but I ain't selling this. There's no way.
Look at that gap, though. Look at that gap.
I know. Look at that gap, right?
We just did that study, too.
What?
We did a study last week about filling in gaps.
What does it say?
I can't remember. No, it was something like 60% of the time they fill in over 45 days. I got to double check it.
Damn right they do. That's why I do these trades that I do. That's why I do these.
Okay,
these
well, now all of a sudden.
It's fairly cheap to do. I mean, to do these calendar call spreads in this. So that's what I'm doing in here to see if maybe it fills that gap. Because like you said, there is a decent size gap after a breakdown. When was this breakdown? Actually, this was it was related to them buying something, I think. that could be problematic. Actually, now that I'm putting this on already. No, because if people are upset about whatever purchase they made, you know what I'm saying. I should have thought about that, but whatever. I'm in it now. It's too late. Just do it. Very cheap, out of the money calendar call spreads. The 90, 95, where's the stock? It's easily going to move $10. I'm not going to waste time doing the 185. I want to see if it runs $20. That would be awesome, but it's probably going to drop $20. And if it does, big deal. I got it's only $153. I mean, that's of my position. Selling vol? Oh, I mean, it's popped up there, huh? I don't know. I don't like selling vol strangles and names like this where it's only $120. I mean, that's actually a pretty decent strangle, but I don't know. My core weave position. Some of this is just out of the money. So I was short calls upside and last week's expiration long some further upside calls. My big position in here is actually the 92.5, 95 zebra in October. That's my big position. Where I'm losing at is really mostly on the calls, but I'm not really down 25 grand on this. This is just my P&L open minus the short calls that I was upside last week. So I'm probably really down like $1,300 in here, I think, overall. We'll deal with it. MIAX, yeah, that's the new Miami Stock Exchange. It is. It's been around for a bit, actually. Yeah, other than that, dude, I don't know. I'm thinking it's going to be, I mean, we got FOMC meeting minutes on Wednesday. Fairly cool.
I don't think those matter because they got rid of Adriana Kruger, whatever her name is, and they're replacing her. So I don't think the FOMC minutes actually matter.
Oh, good point. Yeah, she's out, right?
Yeah. I mean, I think that, honestly, I don't think much matters this week. There's housing starts. I don't know. I just need bonds to rally back because
I don't even know why bonds fell the way they did. It's actually.
I can tell you why bonds fell.
Why?
Because I bought them.
I know.
I didn't get them on Friday, so I was like, I had my chance today, so I bought them, and as soon as I did, they dropped.
Yeah, I don't know what happens. Yeah, I think you're right. I think it's just kind of a quiet week.
It's dog days of summer, man. It's last. It's the end of August, and like. People are going back to college. It's out of office emails are left and right.
And look, I end the show with it, and I'll do it in a second. And trade small, trade often, but only things that make sense, honestly. I mean, I think we're going to get a crazy market here in the next couple of weeks again. More volatility. I wouldn't overtrade right now. Just be smart.
Yeah, absolutely. Yeah. I mean, September can get some volatility. Like, just be patient.
Yeah, totally agree.
Yeah.
Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Hey, everybody. Well, like I said, I'm traveling this week, but we've managed to cobble together a pretty decent setup here. The only difference probably for you is going to be my giant, terrifying head right now, but we'll get rid of that soon enough. So it's a pretty quiet day. It's been very grindy. The markets have been kind of red and or green, and they've just been kind of going nowhere fast. There's just not much to move things. There's two looming events over the next couple of weeks that should change that. One of them is Friday, Jackson Hole. Now, before 2009, I don't think many people cared about Jackson Hole, Wyoming, although it's a beautiful place. But that all changed with Bernanke in 2009 because he basically unleashed this nightmare of liquidity that we're still living with and will live with until it all goes kablooey. And that was a sea change for the market. It was a sea change in the government's willingness to prop up the market for any cost, which is why we're $37 trillion in debt. And everyone's always on the edge of their seats about what is the chair going to say. So Friday, I think traditionally the whole Jackson Hole Symposium is closed door, but I believe Powell's speech is public, and we'll see. So Friday morning could be a bit of a shakeup. And then a little more specific news would be the following Wednesday, which is NVIDIA. And it's just one company, but it is the biggest. And not only just biggest in terms of market cap, but also just sheer influence, because there's no single stock that can move the whole Earth's equity markets more than this one. So yeah, dull now, but 9 days from now, we should have a couple of earthquakes. So anyway, let's jump into the charts. I've got some preloaded for you, and dull that the day may be, I've teased out some mildly interesting stuff to talk about. Here we begin, as always, with the spider, and you can see, based on this, we had our nice tariff tumble there, and then the powerful recovery since, and an almost daily exercise in lifetime highs. That isn't happening at the moment, and the past 4 days we've just been marking time, going nowhere fast, and there we will stay until such time as either Jackson Hole or NVIDIA vaults us into another spasm of highs, or we start to break down. This particular time of year tends to be very risky for bulls, so statistically speaking. Second half of August, all of September, volatility tends to come back because right now the VIX is just about zilch. Here's the IWM, same kind of peaceful tranquility here. 3 days of absolute nothing, kind of wedged between in the mayhem of Tuesday and Wednesday. So we're just kind of floating on the water in our inner tube. Here are the cubes, and these are down a little. They've had a couple of lurches here and there intraday, but on the whole, just pretty quiet. This had a lifetime high on Wednesday, and it eased back a little, and eased back a little, and eased back a little bit more. I would also mention in that realm that there's a couple of interesting charts here. One is this incredible high flyer, Reddit, RDDT, and this was intraday lifetime high today. And what's kind of stupendous about this is if you look starting here, it's just almost without exception, every single day is up. Up and up and up and up and up. And it's round about lifetime highs now. It is at lifetime highs intraday. And there was another interesting stat I saw today, which is that, artificial intelligence systems need training data. And they gather up data wherever they can get it. And the number one source for it is Reddit. I think like 41% of all training data hails from Reddit. So I don't know if Reddit's compensated for that, but it's definitely seen as an arbiter of truth. Another kind of interesting one, which has its own AI efforts, is Meta. And they were at a lifetime high on Friday. They have given up last week's gains Now they're sticking around down here. Exceptionally highly valued company, an exceptionally expensive AI effort to catch up. I could go on for a long time about what I know about that. But suffice it to say that they are badly behind and they're hurling hundreds of billions to try to catch up. And I don't think they will. But yeah, I'm not sure what the dip today is all about. But yeah, I would say if I had to guess a year from now where they're going to be, I would guess probably a lot lower. But we shall see. What else is going out there? I was surprised Japan, they have been just on fire. And look at this, just blasting higher, not doing much of anything today specifically, but an extraordinary rise. Because when you hear about all the kind of demographic challenges they're having, aging population, a shrinking population, fast shrinking, which is not good for any economy, and fewer and fewer workers supporting more and more retired people. It's just not good. In spite of that, their equities are doing stupendously well. Also, rather weirdly, this is the cross rate between the US dollar and the Japanese yen. And what it seems to suggest is that it could well be the US dollar gets pummeled by the yen. This is the third major instance I've seen on this chart, which goes back decades. We've had a big top here, a big top here, and the biggest top of all right here. And I'm not going to attempt to reconcile why the dollar would be worth so much less than the yen in the months to come. But if that top completes, I think that's going to be the case. Now, on Friday, a lot of, especially the speculative holders of call options, did great with United Healthcare. It was disclosed that Warren Buffett has taken on a sizable stake in UNH. The stock had already been climbing. Maybe the rumors were spreading. Maybe his acquisition was having an effect on the price. But they bottomed out here and climbed. And on a Friday, huge gap higher. And they've augmented that gain some, although as you can see, it's kind of stalled out at the moment. It's a net gain, but doesn't have the fervor that Friday did. And, it seems to me that whatever problems had driven the stock lower aren't gone just because Warren Buffett's interested in the stock now. So I really don't think it's got much more left to it. This is the most recent lower high. And I would say that's important resistance. I don't think it's going to cross or even match that level. Its competitor, Centene CNC, has also sort of come along for the ride. Although, as you can see, today's gain pretty modest compared to yesterday's. All in all, if you look at XLV, which is the healthcare ETF, it's had a nice little bounce, but it seems very counter-trend to me, very ephemeral. So, yeah, that's probably about all she wrote on the healthcare recovery. What else? Oh, well, Bitcoin. This is very interesting. You and I have been following this trend line on Bitcoin for some time because it has been, it acted as resistance for a while. I mean, it's support, I beg your pardon. So it was support, and then crack support here, and didn't change the resistance, didn't become support again. It became more of a magnet. And it has clung to those prices mercilessly. And then it tried to reach escape velocity here. It actually got up to about 125,000. It's been smacked down about $10,000 since then. So that line still has a lot of potency. In turn, MicroStrategy, which is their only business model, is hoping Bitcoin goes up, has been slipping for the past 8 trading sessions or so. And just as an aside, the number 2 great trade distant second place, Ethereum, as I mentioned last week, tried to make a lifetime high, didn't quite grab the brass ring as it sunk a little from there. So that is crypto. I would also mention, usually I like to just talk about gold briefly when we talk about crypto. The triangle's still intact. It hasn't been violated. I'm getting a signal here that I think maybe it's going to have I'd put about a 40% chance of that cracking that supporting line. Is not looking great. We're rather weak here. We've got a little bearish engulfing pattern today. Would not take much to crack that trend line. The point being that it's imperative that the prices respect the support here and ultimately crack above resistance here. But the jury's out, and it seems to me it's possible. I'm not confident enough to short it, but it seems possible that it could slip below that support. The only thing I've done even remotely related to that is I did short XME on Friday. And so far so good. I got a good price on Friday. It fell more today. It's near the day's lows. And I've got an absurdly tight stop just above today's high. So I want to lock in that profit if I can. And getting more and more far away from crypto, but XOP, I also like. I'm not in a position on this, but I'm thinking about it. And this gap right here, defined by Friday's low, I think would be an interesting resistance point. You've seen this chart before. You've seen it many times, and that's the semicircle, that rounded top for that one. Which, if we could just get below it again, I think we could start to get some action on the downside. This was interesting too. I wish I could say I was short this, but I wasn't. I don't think I mentioned this on Friday, but if I did, I'm sorry. I'll just mention it again because it's a cool chart. I write a lot, and I write, as you might guess, about short setups and so forth. And there's another newsletter that does too. And on Wednesday, I think it was, they did a write-up about this FLYE company, FLYE, and very negative article. And I was intrigued by it. And so I went to look at the chart and looked at what it was doing, and it was just journeying higher. I'm like, well, I guess nobody cares about that, expose. So it was higher, and the next day it was higher. And I'd kind of forgotten about the whole thing. And then Friday, it completely crashed. Like 86% loss, and it's dropping even more today. I mean, this is looking like bankruptcy land, delisting land at this point. But it is curious that the information was floating out there for a good 2 solid days, and finally the world decided to notice. But it particularly highlights just how perilous these young profit-free companies are, even if their stock does look like that, because it looked great until people blinked their eyes, woke up on Friday and saw they were at a negative 86% on it. So not so good. I don't have my normal setup, so I'm like watching the clock at the side of my eye here, so I'm running out of time, but we'll say goodbye real soon. One other kind of thinly traded stock that looks like a potential short setup, although it's kind of a low-priced stock, so I'm not going to pursue it, is Clover, CLOV, Clover Health. And there's the gap. And I think that's not a bad place for a stop loss on that. So food for thought on that one. You might want to take a peek. And one other one, which has been a sensation until recently, is JOBY, Joby Aviation. They make the world's coolest looking flying car. It's basically a drone that you fly in, but this is breaking down too. So it might be something that you want to have a look at as well. Well, you know what? I had a few more symbols, but it is the bottom of the hour, and I'm going to put my best manners on and say goodbye. But I'll be here again tomorrow with my giant head. And thanks for joining me, and I'll see you then. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tool first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the last call, Sodnoff. And the last call might have been last night as the E-mini S&Ps rumble, stumble, bumble with almost 700,000 cars traded. That's the lowest volume I've seen in some time. I know Chris is going to come on here in a minute, but I think he told us that it's probably the tightest market since March of last year, tightest bid high to low. NASDAQ down 15, Russell up 8, Dow down 62, volatility's got it right, down 40 cents to 1805. I did get the emails about market being lower, meaning E-mini S&P down 2 right now. They were down 8 earlier, and volatility down 35, 40 cents. I mean, I really can't look at E-mini S&P down 8 as a down day after being at all-time highs. Like, I don't see that as a capitulation of anything. But it is both lower. Bitcoin caught a little bit of a bid, 116.5. I say that because it traded under 115 this morning. Ethereum down $30. It too caught a little bit of a bid, about $100 and something off of its lows. Oil up 65 cents for the first time in quite some time. Gold down after being higher this morning, down by almost $5. Silver up 10. Sadnoff, your bonds, 113.26. But who? Who bought them one tick off the low? That's right, Sadnoff, you did.
I also bought them one tick off the high, so I'm not too impressed.
I understand.
This morning,
I was trying to finish on a high note. There was nothing for me to do here. There was nowhere for me to go. There was nowhere for me to run or hide. So I figured I would try to finish on a high note.
earlier today, when Scott came on, I mentioned that the VIX one day was trading in the 6 handle.
Yeah.
And I just want I want people to, I mean, you're going to have days like this, nothing you can do, but I want people to appreciate that the markets aren't, the way the markets move, there's a lot of randomness to what happens. But the way the amount of money that's out there that chases,
it's not stupid money.
It's not stupid money. Exactly. The amount of money that's out there. We used to have an expression back when we were trading on the floor. It used to be "spoos don't lie."
Yeah.
And the crazy thing about this market is, not only do spoos not lie, but option prices don't lie, and volatility doesn't lie. Now, occasionally it gets oversold, and then it corrects itself. Occasionally it gets overbought, and it corrects itself. That is only, at those levels, only about 10% of the time. Everything else, it lives in between somewhere. Mm-hmm. And when they have the VIX one day at 10 o'clock, at 9:30 in the morning, which is only an hour after the opening, at, trading in the 6 handle.
Yeah.
Just be thankful that we weren't doing our live trading show today. We were doing it on Friday when there was at least a little bit of movement.
But you know what? All the 0-day trades, no matter what you did, they all worked. It was only a matter
today, the 0-day, it's been
how
nothing
much
else.
more you were going to make.
Yeah. What's funny, also something else today I did, because volatility was so cheap and because there wasn't a lot going on, this is the kind of day when, I don't know about you, but I took off a lot of things that had the Ivy ranks in the single digits and like in the low teens, and everything, even the only stock I traded, I only made about 40 trades today, but every trade was at or near mid price. And the only stock I had to pay up or to get filled was RBLX. It's the only thing I couldn't get filled near the mid price. Everything else, no matter what it was, filled 1 penny around mid price. So people were definitely desperate to trade. I mean, they were doing anything. And because vol was collapsing on a down, even though it's not down, down $2 is not down. But even though vol was coming in a little bit.
Coming in by 2.25%. I mean, definitely coming in. But RBLX volatility was actually upticking.
And I just
the stock had sold off so much over the last couple of days.
Yeah. The markets aren't very good in there.
That's fair. That's fair.
I did look a little bit. I don't like the earnings trades for tonight. I looked at
Palo Alto Networks, Home Depot, and Medtronics.
Yeah. So I looked at Palo Alto Networks. Home Depot only trades 2.6 million. It's expensive stock. Yeah. It only trades 2.6 million shares. Now the markets are not horrible.
Mm-hmm.
So if you want to, if you want to trade something, you can go pretty far out of the money in Home Depot, which is surprising. Let's see. Expected move this week is about $14. Stocks trading at let's say $30. No, you can't. No, I take it back.
Yeah, the expected move is almost $14.
No, I take it back.
That's with 4 days to go, Sadnoff.
I know, I take it back. It's crap. I thought there was something there. I thought there was something there, but there's nothing there. Markets aren't as bad as they were this morning. That's for sure. They're okay. And they did trade some at the money options in there, but I'm going to pass. Low volatility, way too much risk this late in the cycle. There was some big moves. I forgot what stock it was on Friday, but one of the stocks that we didn't trade had a huge move.
Some stocks at a downside. Meta's been the dog all day long. I mean, it is $13 off of its lows. It's still down $15. CRCL is down $7. Microsoft has been soft all day long. It's pennies off of its lows. Boeing's been acting kind of weak this morning too, or today also. It's just about $1 off its lows. Reddit, you never see down. It's down $4 and change. The upside, I don't know if these are the usual suspects, not, but FSLR, Carvana, Costco up $7. That stock's back to almost $9.80. Netflix up $7, and your beloved UNH and Tesla up around $6 and $4 respectively. So it's not the usual, it's not the Apples or the Microsoft or the Nvidia, although Nvidia is up $1. I mean, AVGO is another one that seems to always be leading in the clubhouse. It's not your usual stocks. It's a
stock. I'll just say it again. It's a stock picker's market. there's no, like you can look at, certain correlations, you can look at things, but on a day where you have after a full day when the NASDAQ's had about a $20 range and a full day when the S&Ps since 9:30 this morning have had a $5 range, you and Russell's had a $2 range and the Dow hasn't even moved. You're going to be hard pressed.
That's a $23,000, almost $24,000 product to have a $50 range, $20 range. You're talking that should be the bid ask between the quotes. Forget about
in a high volatility market for sure.
Yeah.
Right now you're talking about like these are kind of death trades. Yeah, the only thing I did position wise today was buy some bonds. I bought some bonds at 114 and 1320, but I did not I didn't do anything else. I mean, man, show me something that looks good from a directional side.
No, Mama said there'd be days like this.
I'm really surprised by the S&P.
My life choices.
I am surprised by the S&P volume today. I didn't look all day. I knew it was crap, but I didn't look. 700,000 on a full day. It's a holiday day.
It's horrible. 2.5 million SPX options have traded. Usually it's 3 million at this time.
Well, that's not actually nearly
not horrible, but usually it's closer to 3 million.
Yeah, not as bad. I mean, listen, you're cutting into the end of August. You don't have a lot of earnings left, and there's maybe there's just there's obviously an absence of a conviction here. I think that's the whole thing. There's no like I said earlier today, I don't think there's a lot of shorts out there, and there's maybe not as much conviction among the longs. I think it's just money shuffling around. Like it's just like one, today we'll sell Meta and buy Costco. Okay, great. Have a nice day. It's free. That's the whole thing now. It doesn't cost any money to trade. So, you can do we wing them and how? Whatever's up, you buy them. Whatever's down, you sell them, and you hope it works out at the end of the day. I don't know. Maybe that's what these guys are doing.
I don't know. You don't have to fall in love. That's for sure.
Well, these institutional traders, they used to pay just to give you an idea of what, institutional traders, not talking about retail. Retail traders used to pay, when we were on the floor, retail professional traders used to pay a penny a share, right?
Yep.
And that was the going rate for forever. Now, individual self-directed investors, shares are free. I mean, free. Nobody makes any money on free. Trust me. And on the institutional side, they used to charge them 5 cents a share for an accommodation. So if you were a professional money manager, you say, well, these guys stay in it forever. They stay in it forever because the nickel a share, you can't afford to trade.
Right. They can't afford to churn.
Yeah. But now they have the rates on professionals, a penny a share would be massive. It's like a fraction, and they still charge them by share, but it's like a fraction. So you might get a quarter of a cent, a third of a cent tops. Mm-hmm. And so even on the institutional side, they can basically trade for next to nothing. And I think that's one of the reasons there's still a lot of stock buying, because they don't have any money issues. But I think that's one of the reasons you see that this kind of trading where you have stocks, that it's such a mixed day where you'll have some stocks like you mentioned, like Costco and UNH and things like that, and Netflix and Tesla up, and then you'll have other stocks like Boeing and Intel and Microsoft down, and Palantir, and I think it's just rotating the money.
Yeah, it certainly could be. I mean, that's a good explanation.
Everybody's chasing. They're playing a game. What was that movie? They used to be Chasing Amy.
I don't know if that's true, but I'll go with you.
Wasn't there a movie called Chasing Amy? These guys are not, instead of chasing Amy, they're chasing Softy. Whatever you want to say.
Chasing Amy? Is this some rom-com? There was a movie in '97. It's a romantic comedy. I figured you would know it. You are correct. Chasing Amy. It got 87 on the Rotten Tomato meter. So
yeah, it was good. It was a good movie.
Mm-hmm.
Chasing Amy. But now we're chasing Mr. Softy, or whatever you want to say. Or,
whatever you want to say. I don't
Mr. Costco.
You're chasing. I don't know what you're chasing. You're chasing Reddit. I don't know. But now they're up on the day. Yeah,
it took all day though, Sadnov.
This is nothing. I don't care if they close up 5, down 5, whatever it is. This is the worst holiday day. It's not a holiday anywhere, is it?
No, not that I know of. Mm-mm.
Yeah,
but you're right. This would be worse than most holiday days. I agreed.
Oh yeah, we trade over on a half day. We trade over 700,000 futures.
Yeah.
I think everybody's at the Cubs game today. Playing a doubleheader. I think they're all at the Cubs game. I think every trader's at the Cubs game today.
Well, it could be as all three indices go green. Only the Dow is down by 25.
Yeah,
it's hard to get excited about today, Sadnov. It really is.
Yeah, well, sometimes you get these crazy slow days, and they lull everybody to sleep, and then you think,
Is this time to buy the dip in Roblox? I mean,
not with my money. That stock sucks. That stock's one of the most overpriced stocks I've ever seen. I think it's going under 100.
What makes you think that? Just out of curiosity. I mean, for the rest of the month, it has just about a $16 expected move, which gets you.
I think it's going back to under 100. I think it's overpriced. And I think if you get any kind of a down move in the market, any kind of a down move, you're going to see that stock probably drop, $20. I think if the market stays strong here, there's not that much risk in it, but it just depends how you want to play the market here. I'm staying a little bit short, and we'll wait and see what happens. I don't know. I mean, listen, at this point, you're not going to squeeze that much more blood out of the short premium like at these levels.
So what do you do? That's a good question. Okay, so what do you do then?
Well, I don't know. My theta number is as low as it's been, and we haven't even rolled yet. I'm scared to see what it's going to be when we roll. Right. So I need to get some positions on ASAP.
Well, your EXT will go up, but your theta per day will go down for sure.
Yeah, my EXT is nothing right now. Right. We're at fractions of where we usually are. So we're little.
But isn't that where you want to be? If you're
yes, because I'm mechanical now. I don't force anymore. If this was 10 years ago, we would have had the same positions on now, because we would have just said volatility is what it is. You just keep your positions on.
Sure.
We've changed the way we trade, and now I allocate based on volatility, and you got to be low.
And you're profitable. See, Sadnov? I mean, it was a big change for you. Welcome to my world. Welcome to being a Johnny. This is good.
If that's what I become, shoot me. Please, just shoot me.
You can only hope to be a Johnny. Okay?
Please, just shoot me now. All right, let's see what else do we got here going to close. What time is it? About 2:50.
You don't care about Medtronics or Palo Alto?
No.
Okay.
I've never traded Medtronics. I should just take a look. But I really don't care. I don't think volatility is too cheap here to do anything.
Okay.
Medtronics.
MDT has an IV rank of 50. It's one of the higher IV ranks on the board that has earnings. Markets in Medtronics in the weekly options are about 15 cents wide, maybe a little bit more.
No, thank you.
Right. So if you go out to September, they're going to be twice as much as that. And there you go. You'll see them right there. They're actually 4 times as wide. So
yeah, no thanks.
Medtronics, I think you have to have a directional bias if you're going to do anything in there.
I have no bias. I don't even know what they do. Probably they're into tronics.
And they're going to get into AI. And
they're into medtronics, whatever that means.
Yes, medical tronics.
Medical tronics. And they haven't had a downtick since April.
No, it has not.
It's literally it's not doubled, but it's literally up like 50% since April. So no, I'll pass on your second favorite stock.
Just making sure.
Yeah.
Just making sure.
No, I'm gonna now I covered my gold positions today. I covered a lot of stuff. I covered anything that was in the teens. I think IV rank and gold got down to 11. Commodity positions are getting a little light too. We covered gold. Oh, that's about it.
Yeah, gold is 11. Oil.
I covered Adobe. I covered Affirm. I covered CRM. I covered Dow Chemical. I covered GLD. I covered HIMS. I covered IBM. I covered Lilly. I mean, these are all zero. I covered PANW because I didn't like the earnings play. I covered PBF, whatever that is. I covered Palantir. I mean, I covered TGT.
You really cleaned some house. You better hope the market does something.
I cleaned some house because, Tony, they were all like 10s, 11s, 9s. I'd rather lay them out at better prices.
Yeah.
You know? I don't know. I mean, listen, when there's, I could have forced, here's what I could have done. I could have forced some bad trades or covered some good ones. You know what? That's how I look at the world.
Right.
So I covered some good ones as opposed to forcing some bad ones. And I think that, man, I wish I'd been doing that my whole career.
Look at these IV ranks. Snap is under 1. Amazon is under 3.
Do you know that Snap, I traded it for earnings. Snapchat stock was $9 or something. I think it opened at 7.5. I haven't looked at it in a while, but I'm long this stupid stock and short the 8 calls. You cannot make a dime in that stock. Every earnings cycle, it goes to basically zero, and then it fights up. It fights its way back over the course of the next year.
Even something like Carvana, which we don't trade that often like that, but it's always a big mover. $350, $60 stock has an IV rank of 5. I mean, so even the high flyers, you got to kind of avoid these days.
I mean, mostly all the high flyers are down in the single digits right now. There's a couple, like there's a few stocks like Oracle and a few other stocks that have decent IBR, but it's
MSTR is 14 IV rank. I mean,
I don't care. I don't trade scams.
I don't either, but usually crypto's always been the one that's kind of had one of the higher volatility. I know as of late, last 6-8 months, it's been coming down to.
I mean, you can trade Coinbase if you want, but I don't. That one's low too.
Okay, use that as an example then. Coin with a 12, 100%.
Yeah, and I'm just saying, if you're going to trade crypto stocks, trade a real one.
Okay. Okay. All right. And coin volatility has been contracting over the last 5 days, another 3%.
And you remember that stock we were talking about this morning that I know is a total scam, bullish?
Yeah.
There's $6 sales. Stock's dropped $60 or something off its high in just 4 days.
Was it BLSH, right?
Yeah. These are just pure internet scams, as I can call it.
Yeah, you're not the first one to say this. I even got emails about it today about how it's crappy, but it's a hard to borrow stock. You can't sell it short.
Yeah.
There are no options.
Yeah.
There's nothing to do but look in amazement, in my opinion. You can trade the stock if you can short it. That's it. You can't short it.
I could buy a stock where the CEO has zero respect for individual investors. Zero. I never forget that stuff.
I know.
All right, let's bring on the gimps.
Bring on the overtime boys. What we got? There we go. Hello, gentlemen.
Bring out your dead.
Gentlemen, how goes it?
How is
good?
We have Dylan from Rego Park joining us today.
Dylan from
We're doing the talk radio, baby. Talk radio is the future, people. It's back to the future. Just calm down. They don't want to see me. They want to see the charts anyway. I'm right here.
There you go.
I like it.
Well, boys,
we're buying United Healthcare. We're buying it hand over fist. Just want you to know what's happening. We're all in on the Luigi trade.
Yeah.
We're short Luigi, long healthcare corruption.
Don't get hit by a car, Dylan.
So, all right.
You'll notice our Rego Park friend is just the picture here. So who knows where he is with statements like that.
So, on the slowest day, on what could be the slowest day of the year, at the S&P's on full day, I think we might set. I don't know. I think we're going to set the record today.
Tightest intraday range since March 24.
Oh, there you go. I was trying to repeat that.
And what?
Mr. Citation at your service.
Can I say something interesting about that? Tightest intraday range since March 24th. Do you remember?
March 2024.
Oh. Okay.
More than a year.
That ruins what I was about to say.
I apologize. We can go back to the other world in which you didn't hear me correctly.
Because if you were going to say tightest move since March 24th, I was going to say, well, look what happened in early April.
Right.
But also, look what happened last April. The market pulled back last April. Late March, it began spilling over. So you're still right, boss.
No, not taking that.
Now you're just pandering. Are you kidding me?
That's pandering. Yeah, that's
that was straight. But that's a pandering penalty.
Yeah.
I'll tell you what, though, nothing has happened in these markets. Looking at the big equity indexes, Russell aside, S&P, NASDAQ, since that CPI number came out on the 12th. That was the last big move. No follow through on anything since then. S&P is basically flat since that day. NASDAQ is actually down about 0.5% since that day. The only thing that these markets apparently care about is happy inflation data, or so they thought, that tells them the Fed is coming to some kind of resolution on this thing. And since then, they have found zero follow through whatsoever. So
I wouldn't look at it anymore as lack of conviction, Ilya.
Total lack of conviction.
Hey, Dylan, we got to get rid of you, man. The feedback's too bad.
Come on. I'm going to call back in. I'll call back in.
All right. All right. Ryan, kill him. Yeah, just kill it.
No, you can't kill a man born to die, Sal.
You can't kill a man born to die, but we don't need Dylan on. I don't like feedback.
Yeah, I hear you.
So anyway, I hear you.
That is not a lack of conviction.
I hear you, Ilya, but listen up. I think, as I was saying to Tony before, I think it's as much a lack of conviction here as it is anything else. I
agree.
I don't think anybody's looking at this thing going, nobody's saying, wow, if I don't get short here, I'm going to miss everything. Or if I don't get long here, I'm going to miss everything. I think there's a lack of conviction at these levels. Mm-hmm. And, there's not a lot of things that are cheap, and most people buy. There's not a lot of things that are cheap. Mm-hmm. So, retail investors are smart. They see the prices. They're like, I'm not sure how much Palantir I want to buy at 180. I missed it.
I totally agree.
That kind of thing. So
I totally agree.
That's all I think it is. I just think it's a lack of conviction. And I think if you're looking for something cheap, that'd be the bonds. And if you're looking for something expensive, it's a lot of equities, but I don't know. And there are some other, like you could take, like if I want to get long here, like I'd sell puts in the bonds and puts in natural gas and puts in, some of the stocks that just haven't participated. There's a few. Like I sold some puts today at ENPH and things like that. I mean, you can do a little bit of that stuff, but I don't know.
I think what the lack of conviction tells you in the context of the other thing you've just said, most people buy, right? The stock market is biased long.
Yeah.
The lack of conviction in a market that's biased long is a different kind of diagnosis than a lack of conviction in a truly two-sided market without a bias or a tilt. So that there is not conviction here tells you if your thought process, a la our departed friend, Mr. Radigan here, is the AI super glide, supernova, whatever you want to call it, whatever he wants to call it, subsumes everything. Well, the answer is obviously no. It isn't, because the market doesn't buy that story. It's not running it up.
Well, as soon as we got rid of Dylan, they sold off about 10 handles.
S&P down 2, NASDAQ down 11. Correct. Russell still green by 9. All right, I'll be glad to put this day to an end.
Me too. Boys, good luck in overtime, and we'll let you connect down with Dylan. And have a good overtime. We'll talk to you tomorrow.
Do we have to?
Gentlemen.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show.
Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price. And he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice.
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
See, because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Stocks did nothing. It's Monday, August 18th, 2025. This is, overtime for whatever session this was, Ilya.
Do we even know, and does it even matter? They haven't done it.
They really haven't done anything. It's incredible to say that here and start off the show with a joke because it's the smallest intraday trading range for the NASDAQ, for the S&P 500 since March 28th, 2024. Nothing happened today. We're pinned.
Nothing happened.
We entered this market, of course, waiting for our friend Dylan Radigan to call back into the show. He's still remote here, but will be joining us shortly. I'm in New York. Ilya's in San Francisco. We're here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. So if you're watching on the platform Tasty Trade or the website tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you think of this market. Let us know if you traded today, because not many people seem to have traded today. It's an S&P 500 that's only down by 0.03%, NASDAQ down by 0.02%. I suppose the good news is the Russell hangs its hat above water, up by 0.4%, just off the highs. Elsewhere, yields, they did move up over the course of the session, although by the time we get to the end point, we are slightly off the lows. We have Dylan Radigan joining us now. Dylan, good to hear from you.
I'm a literal man on the street.
And we're going to learn what people on the street think after this show, because not much was going on today. In any event, though, gold slightly lower, silver up marginally. Bitcoin, crypto, generally speaking, comes back in. Are people out there buying the dip into 115,000? We'll find out more. Dollar bounces a bit. Trump is meeting with European leaders to talk about a potential ceasefire or peace agreement in Europe. Those headlines could be hitting the tape anytime soon. Ilya, it's the most boring day in the market since March 28th, 2024. The S&P 500 that day had a range of 20 points. Today's range is 28 points. Are we waiting for Godot, or dare I say Jerome Powell?
I mean, I think that much seems clear, because if you look at what the markets did last week, never mind today's snooze fest, they didn't do absolutely anything after that CPI data. CPI data came out, gave the markets a big push higher. The subsequent 3 days, nothing. The S&P 500 returns 0.05%. And the NASDAQ is actually down 0.56% in the 3 days last week that CPI is not. So Monday, there's a little bit of a lead-in. Tuesday, we get the CPI number. From there, the market goes to sleep. This was a market that had all the conviction that it looked like it had after those CPI figures. It certainly didn't show up immediately after and hasn't reappeared since.
Don, you have any opinions on the state of this market here today? Stocks really don't do much of anything, but is this part of the supernova digestion?
No. I mean, let's be quite clear. It's the last 2 weeks. It's the beginning of the biggest vacation weeks of the year. I mean, I don't think you can read anything into it. It's what August looks like when there's not a catalyst. I mean, obviously things can happen in August if there's a catalyst, a big data point. Absent a big data point, I think you're just looking at August. I do think that it still sort of provides an opportunity to posture. And, I still think that, for instance, oil is interesting on the long side because I'm skeptical of the Trump peace plan, for instance. I'm happy to see the dollar having a little bit of life. And I think that the dollar is still a friend of those who own it. So, I mean, if anything, I think it's a chance if you sort of have things that you like, days like this and moments like this are a chance to add a little, I guess, in the context of a calm price environment. And so for me, I like the little oil position. I like the UNH thing, as I was sort of half joking with Tom and Tony during the handoff. So I think it's an opportunity to get more of the things that you like. I mean, I guess the only reason I would sort of slow myself down is all the Ilya things having to do with data and the Fed. But I mean, by any reasonable measure, barring some bizarre and insane CPI or jobs data in September, which obviously you can't rule out, but there's going to be rate cuts. So,
well, are there going to be rate cuts, Ilya? Since Thursday, we've seen that rate cut odds have fallen back fairly meaningfully. 105.7% chance for a September cut, basically 25% locked in, plus a 5.7% chance of an additional one in September. We get through the start of this month, and we now find ourselves seeing rate cut odds pulling back in 83% at the close today. Why is the market becoming less sure of a potential rate cut in September? And moreover, is that one of the reasons why stocks may be stuck up here?
I think that's exactly the reason why stocks are are stuck up here. I don't think it's necessarily the case that the markets are losing conviction in a September cut. I mean, as you've pointed out rightly, when you are anywhere above 55% within striking distance of a rate cut, and we are increasingly there, that rate cut occurs, or rate change, we should say. It's either cut or hike. It doesn't matter. But when we look at this now, there's about an 83% chance that we're going to get the cut in September. It's about a 50-50 toss-up for October, and by December, a second cut looks likely. So the 50 basis points that the Fed has been advocating for really since December of last year, it's in the market. And the key difference here is the level of conviction. At one point in the wake of CPI last week, the markets had the September cut at 94%. Now it's at 83%. At the same time, the market also had no likelihood, no chance that there would be no cut. The edge case was maybe a 50 basis point cut. Now that's off the table, and the possibility is that there is a standstill. That's at about 16%. So the market, I think, is just evening out. It got very hopped up on the CPI number for some strange reason last week. It really wasn't all that convincing, but the market loved it. It got very hopped up on it. Since then, we've had a kind of moderating of expectations to something more reasonable. And of course, we have major event risk on this score this week. There's the FOMC minutes, which are going to tell us whether the Fed really was in the midst of a dovish head change, as evidenced by the Waller and Bowman dissents in July. And if now that head change has occurred, will be found out on Friday when Powell speaks at Jackson Hole. So you get a kind of 1-2 step here. You get a sense of whether the Fed is already getting there in July, which would be encouraging for the markets, where they would go, oh, well, if only the data is neutral relative to this, then we're going there. And then you get confirmation or not on Friday. And the data we got last week, and perhaps this is the absence of follow-through epitomized here, the PPI numbers were not encouraging at all. And then the consumer confidence numbers on Friday were not encouraging at all. Both of them said that tariff-based inflation is coming to a store near you. The PPI numbers told you the pass-on from wholesale to consumers is well underway. And consumers, being clever, figured it out because the consumer confidence numbers had a pickup in inflation expectations and a parallel decline in sentiment. That's not what you want to see. That's not what the Fed wants to see. Those are not the ingredients for an expansively dovish Fed, which is what the markets want. They and the Fed are still about 50 basis points apart. So when you look at all of this together and you say, well, what are the markets actually priced for? The 50 basis points this year is a given. The issue is next year. And for next year, the markets are at 70 basis points and the Fed's at 25. So if the minutes and the Jackson Hole speech don't go the way of these expectations, well, then risk looks expensive. And I think it's that simple.
Dylan, do you have any strong feelings about what Fed Chair Powell might do in Jackson Hole this week? Otherwise, I think we should probably go into the more interesting topical news of the day as it pertains to tech stocks.
I mean, I don't know that I think that Powell is going to basically do as little as possible. I think it's in his interest not to tip his hand at this point. Like I think he'll go out of his way to say a lot of words that mean nothing. Like, what incentive does he have to basically try to alter the expectations at this time?
And then what happens to stock markets?
Well, I think that's the important point, Ilya, that you and I were drawing out earlier today on Futures Power
I
Hour.
think Dylan's absolutely right, by the way.
Insofar as when we take a look at how, well, he has to obfuscate. He has to obfuscate because there's still a few data prints due out ahead of this next Fed meeting on September 17th. And so if you get a PCE report Friday morning that has 0.5, 0.6% month over month, how can Powell come in and say, no, it's transitory again. Trust me, this time. We're going to cut in September. It just too much liability there from a credibility standpoint. So given how the market's been reacting to treasury yields, where treasury yields up, stocks pulling back in a little bit, maybe that's a reason for a setback later this week. But the incentive structure isn't for Powell to stick his neck out and make any grand claim that we have inflation defeated, Dylan.
Exactly. And so I just feel like every incentive for him is to say as little as possible, to not add any new information to the situation, basically.
As John Rockefeller said, write nothing down, say less. Dylan, I want to talk about our problem that we have with one of our heavyweights here in the NASDAQ right now, though, because if you've been following the news over the weekend, NASDAQ has a 6.24% weighting for Meta right now. Meta is seeing some fairly bad headlines related to what their chatbots are talking about with kids. It's off 2.27% today. It fell back even more. It hit a low in today's session of 780.82. Is this the new risk to your supernova thesis, that these AI bots are actually going to cause societal harm, particularly for younger members? And as we reconsider the glories of the supernova, we have these externalities on the downside that need to be addressed before they spiral?
Sort of base assumptions, if you will. One, no one and nothing will stop AI. Two, I believe it's 100% chance there's going to be AI for unstoppable. Catastrophic things occur as a result. And so I think the question becomes, what is the consequence of widespread AI and widespread social liabilities from AI? Not just in terms of the sort of terrible advice that it will yield to young people relative to their life decision making. I mean, the biggest issue with AI, having been using it more and more, I use the GPT-5 with the subscription on my phone. So to be clear, when I say AI, my experience is that it tends to basically validate whatever you say. So if you say, is it a good idea to use a social media strategy to launch a coffee company? It'll say yes, and here's why. And then maybe say, is it a bad idea to launch a coffee company? And it'll say, it tends to sort of agree with whatever it's fed, which means it basically becomes an amplifier to whatever the mood of the prompt is, because mood is, the emotions are transient like the weather, it tends to make me think that part of the liability of AI is that it amplifies negative inputs and validates negative inputs, which sounds like my words, but some interpretation of what they're talking about with the meta feedback loop. I mean, I guess you could have a social backlash. You will have a social backlash against it, obviously. But I mean, there's a social backlash against all technology, and it hasn't stopped technology.
Right.
I guess, in other words, I don't look at the risk of social backlash to AI as a meaningful investment risk. If anything, I would use it as an entry point from a trading standpoint. Like if there are sell-offs based on negative AI headlines, I would buy the stocks. Cynically.
Okay, evil always wins is one perspective, Ilya.
Well, and every technology has two sides. because every technology is a reflection of the people that then use that technology to do what they're going to do. I mean, are we going to get mad at the radio because the radio has both informed people and disseminated some of the vilest, terrible, violence inciting nonsense in history and enabled it? No. Are we going to get mad at film? Are we going to get mad at railroads because they shortened travel times, or airplanes for that matter, because they shortened travel times, but they also transport tanks and bombs? No. So it's one of those things, as ever, that is a mirror image of the user. Of course it is. Why would it be anything else? Dylan makes a great point that this thing really ought to have some kind of a anchoring in reality. It ought to not just spit back subjectivity, but some semblance of real life. But if you get away from asking it opinions and start asking it, hey, can you execute XYZ task for me? Well, then that becomes just a tool, and a tool that essentially reduces how much friction there is between ideation and execution. And as more people are empowered to get to execution from ideation, whereas before maybe they didn't have the technical skills, maybe they didn't have the time. If somebody has had the greatest of all ideas about some movie script that nobody has written, but they have a day job and no time to write it, and now that they can dictate it to this thing, and this thing can shorten the time to execution, or somebody had an app idea and this thing can code it for them if it is explained conceptually by somebody that doesn't have coding skill. This is game changing. But at the same time, it's gonna have negative externalities, because the people, those people that have good ideas will be enabled, but those people that have bad ideas, damaging ideas, dangerous ideas, violent ideas, they will also be enabled. So as anything else, it will have upside and downside.
Yeah, you guys need to prompt your GPT, Claude. I always tell it whenever they release a new model, I say, always respond formally, cite real sources, do not infer or guess about anything.
Yeah.
As a meta-system prompt.
Add that to your prompt?
Every time they update the model, that's the first thing I send into the model. And it updates its memory.
Different? So you get an improved performance?
When I don't log in versus logging in, I'll ask a question, and when I'm not logged in, it's like, great question. You're really inquisitive. So it's like, no, it's like, get off, please.
Yeah.
Okay.
Stop it, Skynet.
It's like you, talking to Sosnoff.
Yeah. Well, and then, right. So I've had to do that because I don't want it guessing, and I don't want to have to be like, double check yourself. So you do have to do some meta system prompting, but I also do the contextual prompting, and let's role play. You're an assistant working at such and such. I need you to find these 3 things for me. This would be in your realm of knowledge, how to figure this out. So go figure it out. But I think that, I always ask it to give me real sources, no fluff. Don't make anything up. Otherwise, it's just so backpatty. And there's a lot of creepy subreddits out there, Dylan.
Well, can I just say the most interesting thing but before you get to that, the most interesting thing that I saw, or that I read, I should say, regarding AI in general, is that the entire apparatus, whatever that means, every possible piece of the apparatus needs to be encoded with maternal instincts. And if you don't encode it with maternal instincts, that it's going to end up leading to catastrophe. Which it sounds simplistic, but I think it's a reasonable. Like, you're going to need a central organizing principle. And I can't think of a better central organizing principle than encode it with maternal instincts.
There is a great HBO show out there called Raised by Wolves that explores the idea of an artificial intelligence with maternal instinct. It's actually specifically on this subject. The archetype of the devouring mother is not an archetype for no reason. And so
hamsters.
We just want to be careful before
Polar bears.
we have one-size-fits-all solutions to things.
Scorpions. They all eat their young.
I mean, just if you'd like a great non-sci-fi example,
tiger sharks.
Watch The Sopranos. It's on display readily.
Okay.
Let's say healthy maternal instincts. Maternal instincts that are in the interest of preserving the young. How about that?
Yes.
Yeah, like a do no harm type of central thesis. I know it makes a good deal of sense superficially. I'm curious, though, what the research says about it. Why, if you don't program that, it automatically starts leaning into other outcomes. I suppose we can look at Grok.
I think it's because it does confirmation of whatever it's getting, and a certain percentage of the inputs are going to have negative, and some are going to, and a small percentage are going to have extremely negative bias on the inbound side, and I think AI is inclined to agree with whatever it gets.
All right, so Dylan, let's switch topics here. We have oil prices moving up today after the Trump-Putin summit over the weekend. You're always one to look for an opportunity to sell a geopolitical rally, although I doubt we would call it this. Cool images and videos aside of pixels missing from the sky with the B-2 bombers flying over the Putin-Trump meeting. What have we accomplished here? Are we actually looking at an off-ramp? I know they're having a meeting right now, but should we be prepared for a much bigger move in oil this week because of this summit or whatever they're doing in D.C. today, Mr. Radigan?
I kind of said my piece on when we spoke last Thursday. I don't see any relevance to the outcome beyond whatever Putin wants to do. I believe the world has zero leverage. And so if anything, I think Putin is just trying to take advantage of the West and Trump specifically, and his interest in sort of being seen as a deal maker to take the meeting. But I just don't see the only reason Putin is going to bring this to a conclusion is because it's in his interest. Because I believe, as I said on Thursday, I don't see how anybody has any leverage, including the United States.
I agree. I mean, I think for Putin, this is survival. And if it looks at all like he lost this thing, then the wolf pack that is the Kremlin will eat him. I think he understands that. I think he understands that he needs to bring home something that can be reasonably sold as worthy of the sacrifice. Russian people are notoriously ready to sacrifice if they can be made to believe that it is glorious and patriotic and worthwhile. And if that cannot be sold after the rhetorical hole that Russian propaganda has already dug itself into, then it's not going to end. So for him, it's, well, run it up and either it goes my way or I go down with the ship. Not a big difference for him. So I think Dylan's absolutely right. The only real question is here, at what point does it become too costly to continue? So to have this kind of group all together, basically that Zelensky decided that this time he's not going to get ambushed by J.D. Vance. This time he's going to bring the whole of the EU with him. I think that makes a big difference here. We'll see what that means. And he wore a suit. We'll see what that means. He's not kidding, clearly.
No, and he actually had a really good comment when the reporter who asked him about the suit last time questioned him today. He pointed out the reporter was actually wearing the same exact suit as last time. So Zelensky came with a little bit of a punchier attitude. Him and Trump looked like they were getting along, which I don't know if that means anything, but it looks like it's a headline here that's going to move the market at some point, either later today or tomorrow when these meetings conclude. Does it mean anything for oil, though? Up 1.11% here. If we get a bounce back, does it mean anything? Ilya, we've been fairly stayed quiet on this because there's been nothing to do except to watch it trade sideways. And I think that's still the right approach right now. If you're trading it sideways on a long enough basis, whatever headline comes out this week, subsumed in a few days, 3-4 days, one might imagine. But oil at a 27.2 IVR, a little bit more juice than we're seeing in our equity market here. I do want to keep it with commodities, though, as we get through that halfway point of today's programming. Ilya, we have gold that's chopping around sideways. It's off by 0.12%. I saw a really interesting number here today, which was what allocation do fund managers have right now in their portfolio? 61% of fund managers say that they have only between 0 and 2%. 0 to 2% of their clients' funds allocated to gold. Does that surprise you, given how much gold has run up so far this year? Does that tell you that this is still very much a market that's being driven by central banks and not necessarily by your longer-term stockholders?
It seems like it. And I mean, let's remember, where is the top of this range? I mean, we're talking just in the wake of Liberation Day. Gold has basically gone nowhere since that time. So we had a big run up, obviously, on the back of all of those concerns. And gold has been listless since. So it seems like the essence of the run up before was this idea that maybe there's a genuine sovereign risk in the US. Once we got off that idea, and it became clear that even this administration is not so reckless as to flirt with really opening up a sovereign risk type of a crisis for the US, which would be completely self-inflicted if ever there was a country in the current environment that does not have meaningful sovereign risk, it is the US. So once it became clear that that was not the case, we got into this interesting mix where on the one hand there is yields and on the other hand there is the dollar, and the dollar has stopped falling, and yields are not exactly cratering here. In fact, if we look at something like ZB, it is basically the same range as what we see in gold. It is just sideways waiting for things to happen. So I think momentum has meaningfully exited this market, which is why I've traded it mainly from the vol contraction perspective. Now I think looking at this week and onward, as we get more clarity on the Fed and you get some sort of conviction on yields and the dollar, you have an opportunity for this to get a little bit cleaner. It seems to be coiling up for a breakout of some kind.
Dylan, are there any concerns about what happens on the other side of this deal that we might mark up with Russia? Do we need to think about where the money flows after the sanctions come to an end? UAE, the ETF that we've been talking about for some time as a potential destination, started the year closer to $16.50. It's now $19.96 on today's close. Is that really the trade? We're looking for opportunity, not just tending the crops right now. Where does the Russian money go?
I mean, I love this sort of discussion. Obviously, I think Dubai is the number one place. I just don't know how tradable it really is. I don't know how much, how real, I just don't know. I mean, I just think that the European, I feel like they will do everything they can to try to make sure that this doesn't happen.
Why? Because if that's the case, then that's a real problem for the
Europeans don't
euro.
want to lose the money. No, I'm saying I think capital flight from Europe is something that they will try to prevent. How, I don't know.
Well, one big reason that capital flight from Europe may be a very different sounding narrative next year is this very big defense spending initiative that is likely to lift a lot of boats in Europe next year. In fact, if we look at the sort of landscape for, let's say, ECB rate cuts next year, we can see that there's, at this point, no rate cuts on the menu at all for the ECB next year. In fact, there is a sort of periodic flirtation, if you will, with the possibility that the ECB might actually need to hike rates next year. Going back to March, we were even looking at about a slightly better than 50% chance that there'd be a hike. That's since come off. Now it's basically standstill. But if we get all of this money, 800 billion that just the EU has earmarked for defense spending, and not all of it is already accounted for, only about 100 to 200 billion has actually been made official through policy. But if that's what we're talking about, if we're approaching €1 trillion spent, I mean, that's going to be a ton of money that's going to be sloshing around in European markets next year.
Dylan, how serious is it that all of these European officials are over here in the U.S.? I can't remember the last time that it was outside of like a UN gathering that all of Europe's brain trusts absconded on the U.S. soil. This is a big deal.
Mm-hmm.
How much of a turning point is this? Are we understating the moment right now for what this week means, even though it's a vacation week for most people?
I'm just such a Trump skeptic because he's such a fan of theater without consequence. I understand superficially why this, like if this was a normal administration, I would think that this is a much more substantial situation. But I feel like Trump loves the attention and loves the theatrics, but delivers a lot less. Like he's a showman, and he has the power to do this and the power to create a show. But I mean, so I tend to be skeptical of the whole thing. I mean, the less cynical interpretation would suggest that this is a setup for a peace deal with Russia, which would then sort of bring back the capital flight discussion in Europe. Will they, won't they, can they, can't they? And it'll bring up the sort of future of oil prices relative to the potential of bringing Russian oil back into the European theater. But it's either a prelude to a peace deal or it's a meaningless show.
Prelude to a peace deal or a meaningless show. Hey, I got a comment earlier.
I think it's Putin's decision, not theirs.
Well, of course it's Putin's decision. He's the guy who started the war.
Like, what are we doing here?
Ilya, I did see a question earlier if I saw Torsten Slok's latest chart from Apollo about his 1990s analogy, because we've brought up the 1998 idea here on the show previously. This was from his blog over the weekend. I figured we'd share it here today. We're about right here, right now. If this is the 1998 analogy, we're going into 1999 soon. I know that 1929 likes to make its way around the market when things are looking scary. I like to pull out these analogies time and again because they make me feel nice and warm when I'm trading on the long side. Why shouldn't traders look at this and start buying $7,000 strike calls in the S&P 500?
Because it doesn't mean anything. I mean, there's absolutely nothing that says you have to look this way or that. And just because you've had some symmetry up to here in no way says you are necessarily going to have symmetry from here. It's just such a flimsy argument for me to think that one other time you had a chart that has looked similar. You're comparing one stretch of time to another stretch of time and saying, well, don't these look similar? Yeah, of course they do. But if ever there was a case of squint hard enough, change the scales, you'll notice there's two different scales on this chart. Squint hard enough, change the scales, and forget that correlation is not causation. And sure, you can feel better, but who cares? This is to presume that this works would be to treat the market as though it is some sort of a magical machine where you have almost like punch cards of scenarios. And you go, oh, well, time for card X. Not card Y? No, card X. Load it up. This will be good for the next 7 years. Obviously, the world doesn't work that way. So if ever there was a truly meaningless thing, this is it.
Here's a more interesting chart then. Also comes from a similar deck. FedEx stock prices starting to go lower, which tend to have a relationship with global trade. Another one of these charts that he was shared last week, just running through some of the stuff that's publicly available here. So you can go to his blog to find these. Let's go to this one here as well. Apollo Academy, container ship departures from China to the U.S. falling back down to levels that we saw when the trade war started picking up. And total shipping.
In other words, the front running has been spent.
The front running has been spent.
Yeah.
The front running has been spent is the takeaway that you see here. So regardless of
second quarter GDP numbers would tell you exactly the same thing.
Yeah, and that's why, Dylan, I'm looking at what's happening in oil and putting this all together, and we have a 27.2 IVR. And so if we get a headline that gives you a rise in oil prices here, it's got to be something to fade, because the backdrop with which it would be occurring is one of a weakening global economy still. Geopolitics have been a fruit that we've been able to harvest a number of times this year.
I mean, I just, the thing with these is like the risk, where I've gotten caught on a couple of these, I've had a decent amount of success with a handful of these, as we've talked about, but where I've gotten caught on a couple of these is because I'm of my relative confidence that it's a good trade to sort of short any geopolitical oil spike. There's a risk of getting it. It can go up for a few days or even a week or two. Like you could come out of this super summit with no deal, and the interpretation could be endless war, and you could get more juice before you get short. So I guess it's one of those things where I guess a half a position. I just would be it's because it's only just got going. It's only a few days old. That's my only caution. For sure, I think it's a short, because you got to your point. It's a slowing economy and it's a geopolitical spike.
I agree with that assessment. I agree with that assessment completely. I think this is not enough of a geopolitical spike to fade, but because I think we are of a general consensus, at least here, that this war is not ending but for Putin wanting it to end, and he does not have the incentive structure to do that yet. Hopefully what they're talking about amongst the leadership of Europe, Ukraine, and the U.S., amazingly all in one spot here, is how to compel him to see the calculus differently. But short of that, this thing is not going to end. And he's going to continue this to the last Russian. So with that in mind, there could be a much bigger disappointment spike here to then fade than anything we've seen so far. It's just too early. The risk reward is off. If instead the market decided, you know what, we're just at status quo and we're going to slowly move the front back and forth by an inch here, an inch there around eastern Ukraine for however long, for an unspecified amount of time, then growth becomes the concern. Jackson Hole and the FOMC minutes are relevant in that sense, and probably Jackson Hole more so. And if you get a break, okay, then you're short. But in the meantime, there's not enough geopolitical fervor here to want to be a skeptic.
There's enough to be a skeptic. The dollar bouncing back today, I think, says enough, and the euro being one of the weaker currencies on the board says enough unto itself. As far as the Fed pricing goes, putting this all together, the war is going to go on. The U.S. is going to provide less help to Europe. It's greater financial strain on Europe. It's difficult for me to think that this is a path forward of anything good for the euro, Ilya, because you get into a situation where they become the primary financiers of future defense of Ukraine without, maybe there's a U.S. security involvement, but that's as long as the bullets don't fly. Ukraine's not getting into NATO as long as Donald Trump is president. So it's stronger dollar. Maybe that becomes a headwind for stocks here. Second half of the month typically is a little bit more of a rough time for the equity market. Although if you've been following seasonality, which has produced a 0.07% gain on average for the S&P, we're up 1.4% month to date so far, give or take. If you've been looking at volatility is up 70% of the time over the past decade in the month of August. Not this month, off about 1.5. So who's to say that we're following any sort of normal glide path here? Dylan, you mentioned that is the second half of the month. It's one of the quieter weeks of the month. Can you explain why that matters from a market structure perspective here? I have my views on it. Ilya has his as well. But as someone who's been in the market, involved at the margins as a journalist for a number of years, what's different about late August? And how do you think retail traders should approach the market a little bit differently?
I mean, late August is second only to the Christmas week for just the smallest number of participants. There's just the smallest number of human beings that are actively on financial trading screens, institutional or retail. And the only weeks that are slower is the Christmas New Year's week. So really, let's say December 23rd to January 2nd or something like that is probably the slowest. But outside of that, this is as slow as it gets, which simply means that on the one hand, you can actually get bigger price action if there are news traders. So like if there was a Russian peace deal, you might get actually bigger price action because the markets are shallower, and so it's easier for prices to move. And absent real triggers, whether it's a Powell says something crazy, the market could go hog wild just because of the relative thinness. And on the other hand, absent a trigger, whether it's an economic event or whether it's a geopolitical event, it's more likely to behave the way that it did today. So it's either going to be super quiet, or if you get a trigger, you're going to get a bigger heater. And if you get a big heater, especially to the downside, it's probably a great entry point because it's a less reflective price. The price action in general has less integrity, I guess I would say.
Oh yeah, do you change your approach at all for these final 2 weeks?
Your best case scenario, what's that? Your best case scenario is that you do get some sort of negative trigger and you get a big sell-off and you can buy it.
Ilya, do you change your trading style for the final 2 weeks of August as you would around, say, the holidays in December?
Not really, no. I let the price action decide for me and dictate how things go, because the markets can absolutely be listless during this period, or the low participation and the low liquidity can actually amplify volatility and make for bigger swings. And so I think really the question is, do the markets get something of conviction? And is that something of conviction overlaid with thin liquidity give you a bigger move? Or do they not get something of conviction and then there is a listless drift for lack of participation? I don't think that there is that listless of a drift on the menu after Jackson Hole this week, because clearly, if you look at what CPI wrought last week and the standstill thereafter, the markets are asleep but for Fed news. That's what they care about. That's what matters here. Because in the immediate crosshairs is the cost of money itself. Before you get to there's this risk and that's happening and this is happening and maybe AI is overcooked and maybe it's not overcooked and maybe Russia and Ukraine can come to some sort of an agreement and maybe Israel and Hamas can come to some sort of an agreement now that the entirety of the Arab League has called on Hamas to disarm and leave Gaza. Maybe finally there is a breakthrough in that theater now that Hamas has been neutered to such an extent that over the weekend in Israel, the estimates are wild, but the amount of protesting the government to end this war, unprecedented, even relative to what was happening before, and even relative to the massive protests that were happening when before October 7th, the administration was trying to change the standing of the Supreme Court, and the population wasn't having that. So maybe we're finally getting to something there. All of those things aside, though, none of them matter more than the market's perception of, is money too expensive to be put at risk? Or is it going to become easier to put money at risk because the Fed will make the money cheaper? And so it will be easier to digest all of these risks and to have positive disposition because, to Dylan's point, the AI snowball will continue to roll. Or are we getting to a place where the money is too expensive to make the risk make sense? And that's solely a Fed question. So I think it'll be very, very interesting to see what happens this week. But clearly the markets demonstrated last week, when it's Fed relevant, they move. Everything else, they can't be bothered.
Can I share with you guys one of my favorite charts that I've covered?
Question, Chris. I mean, how do you think that this late August effect is it relevant in any way to you?
I do think it's relevant. I think that if you're trading in complacent markets, that, you know, if these are frothy, again, CTA positioning is still at the 100th percentile. So trend followers are loaded to the gills. You can't really make that case right now for the futures market, though, because the CFTC cut report shows that traders have become more net short over the past few weeks to the highest level that they've been at all year, at least since the depths of April. I mean, Ilya, it's hard to make the case that everyone's in one side of the boat. So taking that aside,
yeah,
if you're going to be trading, you're trading small, you're trading a little bit thinner, you're not getting loaded up. If you're going to be bullish, you have to be willing to cut it, because if the thing goes south, it could go south quickly.
Yeah.
But the market still favors upside in a low volume, listless technical drift type of situation. So I'm still hanging on long in the short term until I get bucked off this Bronco. I can't overthink it. Overthinking it's been very harmful this month.
It's dipped through intraday range support today on the 4 hour, on the 8 hour. And so I've nibbled a little bit again on the short side, but as ever, tons of duration, 60 days this time. Small, risk defined. We'll see. I mean, the risk reward, because vol is so cheap, was amazing, especially on the S&P. We're talking something like 3-1. Not as rich on the NASDAQ, maybe about 2-1 there. So the options pricing itself is telling you it's an asymmetric opportunity. If you set it up with enough duration and in small enough size. I'm doing it in the ETFs to keep things very risk contained, using the Qs and SPY rather than ES and NQ. Russell, I don't think is there yet, but I've nibbled a little. Let's see.
Ilya, I'm thinking about the market move through the end of this week. This is perhaps the opportunity. 62.73 points priced in through the close on Friday. That would effectively mean that this is a market that could go back down to what, 6,400 or maybe break above 6,500 with the FOMC minutes Wednesday, with Fed Chair Powell's speech Friday, the PCE report, and the fact that this is the week that it is. I don't know if this is the week that I fade vol. It already seems pretty tight. And again, today was the tightest range that we had in the market since March 28th,
vol is
2024. It's cheap. The ranges are narrow. I think that plus or minus by Friday's close. So do I want to fade this here and say that we're going to be pinned at 64.70 by weekend? No, that is not something I want to do. But you know what, Ilya? Overtime is out of time. You hear that, Dylan? You can hopefully be on video tomorrow.
Boys. I hope you don't mind.
I missed that face. I missed that face.
You're gonna get it whether you like it or not. I can't wait to see you guys.
Excellent. Well, we'll be back tomorrow. Don't worry. With that, overtime's out of time. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central. Always after last call, Monday through Thursdays here on Tasty Live. So for Ilya Spivak in San Francisco, Dylan Radigan somewhere. I've been Chris Vecchio in New York. Good luck trading. Up next, after a brief break, more Tasty Live, Macro Money with Ilya. See you there.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I got to think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Did the markets even open today? Absolutely listless across Wall Street as we finish the first day of the week here, but we do have an action-packed week ahead. Not so much in terms of data, but certainly in terms of Fed watching. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what the markets did last week by way of stage setting to see what might be coming up next, and then take a look at the risk from the event calendar immediately in front of us and try to get a sense for what all of it means going forward. Because we do have, against all odds, despite a relatively thin offering on that calendar, plenty of risk to contend with. So, let's consider first how the markets did last week. We can see a modest increase for the S&P 500, a modest increase for the NASDAQ, things slowing down significantly from the prior week, just 0.4% added for the NASDAQ, 0.9% for the S&P. A kind of a mixed bag on yields. On the front end of the curve, things relatively steady. It looks like Fed policy expectations looking mostly anchored here. At the long end, slight uptick on yields, but not a whole lot to write home about. 0.9% gain. Crude oil continues to do its own thing, down 1.7% last week after a 5.1% drop. There's, of course, lots of back and forth here. We had a meeting between U.S. President Trump and Russian President Vladimir Putin in Alaska. Now the president is meeting, President Trump is meeting with the leaders of the European Union alongside Ukrainian President Volodymyr Zelensky. So we'll see how that goes. For its part, crude oil is basically pinned to the center line of the range that has basically contained all of what's going on, geopolitical crises in the Middle East and Russia inclusive, since basically mid-September of last year. That range roughly between about $74 a barrel and $54 a barrel on the WTI contract. We're pinned right there and we're not going very far. So despite these oscillations here, not a whole lot that's going on. Gold price is down a little bit last week, in by 3.1%. But again, that stuck in a range, and in fact has been in an increasingly narrow range since late April, once the dust settled on Liberation Day. So we're looking on a market here that wiggled a little bit, but ultimately isn't very much changed this way or that. Euro a little bit higher, yen a little bit higher last week, so very modest pullback in the US dollar. Bitcoin basically idle. So really all the action last week seems to happen here on the equities side and by slight extension in the bonds. And what's particularly interesting about this is it all basically happens on a single day. So consider, this is the S&P 500 here, the continuous contract for S&P 500 futures, and just do the count back here 5 days. Here's last week. Nothing happens Monday. We get a US CPI report that the markets get all kinds of jazzed up about. And then for 3 days, nothing. Standstill. As a matter of fact, the S&P 500 ends last week across these 3 days, this side. Across these 3 days, there is absolutely no movement. 0.05% is the net change across these days. So if not for this CPI report, the markets did nothing last week. Moreover, in the wake of this CPI report, they found no fuel for follow-on conviction. It's a similar story for the NASDAQ here. Here's the CPI report right there. And actually, in the NASDAQ's case, over the subsequent 3 days, it managed to inch down a little bit, off 0.56%. So it moderated this rally a little bit. But again, no conviction. So what was it in that CPI report that was so eye-catching, and why did it fail to give the markets anything but a single day's worth of support? Well, we can see here that the inflation numbers came in refreshingly, quote unquote, normal. 2.7%, so inflation flat from one month to the next, from June to July. The core number ticked up from 2.9 to 3.1, a little bit of a tarnishing on the overall story, but the market seemed to be relatively okay with that. More importantly, the expectation here was for 2.8%, so ostensibly this came in a touch lighter than expected. And the markets took that to mean that the Fed is going to be ready to cut rates. Most inflation still stuck in services. The inflation from the goods side still relatively modest, though rising. And perhaps this is why we ended up without follow-on conviction. The markets loved what they saw at first glance. But then, of course, we see that a quarter of a percentage point almost was added from the goods side. And indeed, if we take a look at the change month on month in contribution to overall CPI, we can see that while most inflation, of course, remains on the services side, it's also stalling, and as of July, even inching down by a little bit. Whereas the thrust from the goods side for a second consecutive month looks relatively potent. In fact, if we disaggregate inflation here into core goods, core services, and shelter, the main components, we can see here that services inflation actually cooled from June into July, whereas goods inflation quickened. Moreover, the year-on-year pace of core goods inflation has now increased to the highest in 2 years. Whereas for the service side of the story, we certainly have been inching higher, but we're only the highest we've been since December of last year. So a much more modest sort of situation here. And of course, for shelter, the trend speaks for itself, even though in July, this marked a little bit of an uptick. So we can see here that goods-based inflation is inching its way into these numbers, giving us exactly the kind of thing that the Fed is concerned about. That is to say, tariffs being at the same time a pushback on growth and a push up on inflation, which of course complicates policymaking. The pushback on growth would demand rate cuts. The inflation would demand, at the very least, not cutting rates, if not raising them. And so the Fed continues to sit on its hands, to everybody's consternation. Now, we can see that in the wake of those CPI numbers, through these few days of digestion, we still are looking at the likelihood of a September rate cut as overwhelming by historical standards. Generally speaking, when you're meaningfully above 55, 60%, the Fed almost always, if not always, delivers on those expectations. The question is, how far away are you from, let's say, 55% on the eve of a meeting, or let's say a week before a meeting? We're a little bit further away from that here. The next Fed meeting is September 17th, so we're a month away here. So lots might still change, but this still looks fairly convincing at 83% and about 17% chance for a hold. What's eye-catching, of course, is that in the wake of CPI, we were looking at 94% chance of a cut. This, that is a hold, had a 0% chance. And there was about a 6% chance that we'd get a jumbo 50 basis point cut. Obviously, in the subsequent 3 days, 4 days, things have changed significantly and the markets have come off that dovish extreme. Part of that, surely, is a deeper thought about what we've just talked about, the appearance now, tepid though it is, of core goods inflation, a sign that the tariffs are making themselves known, starting to show up in the numbers. But where it really presented itself with much more conviction was the PPI report, the producer price index numbers that followed the CPI data. We can see here there is a dramatic month-on-month jump. In fact, the largest one since back here in 2022, which is, of course, the meat of the post-COVID inflation scare. And what we find when we disaggregate this a little bit, here is the jump for final demand. That is wholesale inflation for goods that are ready to be put on shelves. Final wholesale, as it were. And here we have the biggest increase in the margins component for wholesalers. This services component, the trade services component, measures wholesalers' margins. And what we see is a massive expansion in their margins after a fairly soggy showing earlier. In fact, this was the largest one, again, since back here in early 2022. Even more eye-catching here, going earlier in the supply chain, was this jump in margins at the intermediate demand level. This is early in the supply chain, before you get closer to retail and closer to consumers. This is just after the goods that we're talking about and even inputs into final goods that haven't been finalized yet. This is as close as you can look, for the most part, to margins for wholesalers near where tariffs are assessed. This is the beginning of the US-based supply chain. And here you can see that earlier in the year, there was a move by wholesalers at this part of the supply chain to eat the inflation. So you see this massive deterioration in their margins here in shock of shocks, April. And you find that they're basically looking at the uncertainty around the tariffs and saying, look, we're not going to pass on these extra costs to wholesalers downwind, and certainly not to consumers, because we don't want to destroy demand. We don't want to increase prices and drive everybody home, because we don't know what this policy is going to do. We don't know exactly the scope of the issue. So we're going to eat it into margins. We're going to take on the burden of these extra costs, and we'll see what happens. Well, now it looks like we've seen what happens, because we can see that the costs are being passed on here. The margin expansion suggests that faced with higher costs, these wholesalers have started to pass them downwind. That whatever we saw here is just the beginning. We are ostensibly just warming up there. And there's quite a bit more to come if this pass along is going to continue, which is perhaps why the markets looked at this and said, wait a minute, hang on. This is not necessarily everything there is to see. There is some degree of smoke and mirrors in this data still. And of course, the biggest issue here comes down to consumption. If in fact we've seen that so far things have been relatively well anchored and the economy has held up reasonably all right, and so perhaps it was tempting to say, well, these tariffs are not a big deal. It's difficult to make that case when you see that the costs of the tariffs were being insulated away from consumers. And even with that, as well as, of course, another barrier to inflation surging, this front-running of the tariffs in the first quarter through the restocking of inventories, we still have the weakest consumption the weakest contribution from consumption to overall GDP in the first 6 months of this year since the first 6 months of 2020, which was, of course, the COVID recession. Now, you can see here, this is contributions to GDP. Imports are subtracted from GDP. So when they grow, that is a negative contribution. And when they fall, it's a positive contribution. So you can see in the first quarter here, imports surged, which was a big change in GDP, where we had a significant pull down from essentially companies front running the tariffs to stock up inventories to then sell out of inventory and not out of post tariff expensive goods. We also saw, and this has a breakdown of the investment component here into fixed investment and change in inventory. You can see that residential investment is essentially non-existent on here. Non-residential investment is a sliver. The biggest surge here for the overall investment component is this change in inventories. It's all of these it's all these imports going into warehouses. Now look at what happened in the second quarter. You can see that the defense mechanism here against tariff costs is unraveling. Imports are a positive contribution, which is to say that they're falling. Inventories are a negative contribution, which is to say they are being depleted. So the front running of the tariffs is spent. It's over. And so instead, what you're looking at is wholesalers passing on inflation costs and back inventory of goods at a pre-tariff structure for its prices. That's dwindling. And so, not surprisingly, there is the possibility here that higher inflation will crimp consumption, and the starting point before that bites is already the weakest consumption since the COVID recession. So not surprisingly, the markets want these rate cuts very much. The threat here is acute. Europe is still at standstill. China is still at standstill. If the US falters, the global economy is without its only operating engine. So, when we look at then the consumer confidence numbers that we end up seeing on Friday, it is no surprise that consumers were savvy. They saw the inflation reappearing. They saw the pass-through occurring. And so sentiment deteriorates. In particular, the assessment of the current situation sees a meaningful decline, overall sentiment down, and that's happening against the backdrop of inflation expectations rebounding. We're back to 4.9% on the one-year inflation outlook. And it is with that in mind that this week becomes all about whether the Fed is actually going to deliver on these rate cuts. Now, as it stands, the markets and the Fed are basically of one mind for the outlook on this year. The markets have 47 basis points. When the Fed issued their last projection in June, that's what they had. The current median is 4.4, down to 3.9 is 50 basis points. The disparity occurs for next year, where the markets have 70 basis points. That's most of the way to 3 rate cuts, whereas the Fed, from 3.9 to 3.6, has a single 25 basis point cut. And this is where things get interesting. The first major touch point this week, minutes from July's FOMC meeting. In that meeting, we had something of a moderating flavor to what the Fed was saying. It took back this idea that uncertainty about the economic outlook has diminished. It thought maybe it did in June, and then in July it promptly reassessed. We still see a relatively steady statement thereafter, although we have here the indication that growth of economic activity is moderated in the first half of the year. We get that sense. That would be that weak consumption that we just looked at. But interestingly, we get two dissents at this meeting. Governors Chris Waller and Michelle Bowman vote against the consensus. The consensus decides to keep rates unchanged. Bowman and Waller decide that they're going to vote for a cut. What's interesting in this context, of course, is just how telltale that is of a broader shift in the thinking on the FOMC committee. And so minutes from that July meeting, due on Wednesday this week, should be very interesting to see because, needless to say, in the wake of this stage setting, then followed by CPI, the markets talked themselves into believing that the Fed is increasingly on autopilot. If that is not the case, if for Waller and Bowman this was not a massive head change, but instead just a thinking about sequencing and the idea that it takes between 12 to 18 months for a single rate cut to be fully absorbed into the economy, so maybe it doesn't make sense to be overly cute about it, this meeting or that, but to just get on with what will be needed in the economy a year hence, year and a half hence. If it seems like there isn't a broadening dovish consensus to be extrapolated from these dissents, that probably tells the market that the Fed is not nearly as expansive in its thinking as what is currently priced in. Again, the markets are valuing securities from the perspective that there is 117 basis points in rate cuts on the menu. And for the Fed, there's only 75. And then, of course, there is the Jackson Hole Symposium. This is the annual central bank conference that the Fed holds in Jackson Hole, Wyoming. As ever, the main event for the symposium will be Friday's Fed Chair Powell's speech. That's a kind of annual lens-setting exercise where essentially Powell tells investors, or whoever the Fed chair is tells investors, how to think about valuing the trajectory for policy a year forward. It basically establishes for the markets the sort of academic and tactical lens through which the Fed is looking for the year ahead, so that Fed watchers, markets, of course, front and center, can take in information, incoming economic data, incoming headlines, filter them through what they then believe the Fed's thinking is, the sort of overall structure of how the Fed considers the way forward, and see if they can then come up with expectations that approximate what the Fed might actually do. If that stage-setting exercise does not give us the dovish conviction that investors want, if it does not set us up to come in September, not just with a rate cut, which again is widely expected despite some diluting of the chances here, and if what comes of it, that September meeting, is not a meaningful revision of this into a more dovish direction, well, then perhaps the markets are not going to have the confidence that they've been having about the idea that the Fed is coming to their rescue and will avert an economic downturn before it really gets to be a dangerous sort of thing. And if that's the case, well, then the markets perhaps have some room for a pullback from these levels, because then perhaps we've arrived at the idea that with the U.S. clearly cooling, as even the Fed has recognized, with consumption, which is 68% of overall GDP, now contributing a pittance, and with the inflation dynamics here, again, as surmised by this consumer confidence data, and as telegraphed in this PI data, as well as now this slight angling beginning to seep into CPI, if that's going to give us a consumer that's more reluctant, if consumption then continues to weaken into the third and fourth quarters, even as the Fed is worried about the inflation piece and holding back from the kind of stimulus that would actually push back on these dynamics in a timely fashion, well, then perhaps the markets will reason that assets are just too expensive for a rosy, soft landing kind of a view. And where the likelier scenario is that the Fed is going to have to do some catch-up cutting because it will have allowed the economy to weaken more than is optimal. And of course, the tricky thing with recessions is they are nonlinear. So once you've missed the opportunity, there's no telling what might end up at the bottom of the pool once you start to drain it. If a recession, even a very mild one, were to strike, all manner of knock-on effects become possible. So when we look at the way that the markets are likely to treat this week and in the way that they've approached last week, when there is something dovish or could be painted as dovish, the markets seem to be in generally good spirits. Absent immediate fodder fueling that idea, they are at best listless. And if the commentary this week from the FOMC minutes and from Powell ends up looking less than the perfect dovish world that the markets would love to see, well, then the markets, at least for the equity space, appear to be somewhat soggy in their positioning and might end up slipping. That, of course, is likely to have knock-on effects on bonds and the dollar, where haven demand might prevail. And we'll see what it does for crude oil and gold. And if it manages to engender some directional conviction there, finally. With that, we have macro money for today. We are, of course, here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays, on with Chris and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love Love you guys so much.
The hottest take of this market? I got to think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't chat GPT." And so back, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a four things. One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof. You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Dan Cecilia, and special guest, Stephen McIntosh from Mill City Ventures. Stephen, welcome to the show.
Thank you. Great to be here.
It's great to have you here. We're excited to talk to you. Certainly given everything that's going on in the market with a lot of treasury companies being spun up. We're going to talk about that in just a second. But before we do, can you give us a little bit of background on yourself as well as the inception of Mill City Ventures, and then we'll get into all the details here as to what you guys are doing and kind of what you're seeing in the marketplace.
Yeah, sure. So I'm Stephen McIntosh, co-founder of Heritage, which is a proprietary hedge fund. We invest in deep tech and crypto. We've been investing in the space for a number of years. We originally got connected with Gavin and Vitalik when they were at Ethereum in 2016. We were early investors in the Polkadot ecosystem, in the Solana ecosystem, right the way through to Sui, Mist, and Labs, and most recently payments-focused blockchains like Plasma in conjunction with Tether. And we've really invested across the stack from the consumer level, like Pump.Phone, right through to fully homomorphic encryption, right through to security companies, right through to centralized exchanges, decentralized exchanges, and everything you can kind of imagine. We've also been very, I think, strong backers of early stage managers in the crypto industry. We've backed about 16 different hedge funds and VC funds, often anchoring them to get them to explore new kind of verticals, whether it's DeFi, gaming, security. So we've got a really broad portfolio. We've seen everything crypto has to offer over the years. And yeah, we've been a prolific investor in the Sui ecosystem. Delighted to have joined that team at the beginning of their journey and have invested in a number of companies that have come out of that ecosystem over the past few years, from DeepBook to Walrus to DoubleUp to Shio, SuiLend, and many others we can talk about in the show. But we think this is a generational opportunity. We think it's the most important blockchain to custody in a public treasury strategy. And I'd love to get into what makes Sui unique on this show today.
Yeah, well, I guess let's just jump right in and start there. Mill City Ventures, ticker symbol is MCVT, VT or TV? Sorry. VT. Apologies. Okay. You've recently spun this up, right? And there's $450 million in the treasury company. You've been in the space for a while. What is it about Sui that has your attention?
So I think it's good to go back to the beginning of where this company came from. This is the team that was hand-selected by Mark Zuckerberg to build the Libra and Diem crypto projects. And as you can see in the recent press around the war for AI talent, Zuckerberg hires the best, he pays the most, and he's very competitive when it comes to world-class talent. And he hand-chose these individuals. The 5 founders that are at Mist and Labs are the highest intellectual capital in crypto. And it's important to stress that when Zuckerberg kind of started those initiatives, he was looking to roll this out to 3 billion users at the time. And I think that's a really important starting point. And had that company been allowed to succeed in their crypto project, which was prevented by the previous administration and SEC regime, that could have probably been the biggest business in crypto, bigger than Tether, bigger than Coinbase. I think that's highly likely given the distribution and the intellectual capital that came out of that team. Whilst they were there, Sam Blackshear invented Move, the only smart contract focused programming language that's designed for crypto that has security by design. The Move kind of base programming language is super unique, this object-oriented data model that allows for a lot of unique programmability. The consensus mechanisms that are placed in Sui, from Narwhal now to Mr. SETI, allows for incredibly fast finality on the network. And it is a truly universal coordination layer for the internet of the future. If we think about the types of experiences that have been we've been so accustomed to in Web 2, social media, gaming, they have been prevented from flourishing in Web 3 because of the underlying infrastructure. And Sui is designed to solve that. It's designed to onboard the next billion users. And we think it's not a question of if, but when a breakout use case emerges in the next couple of months or the next year, which will have hundreds of millions of users. And if we think about what the future represents in terms of these huge driving technology forces, in AI, and stablecoins, you need a network that can handle trillions of dollars of payments flow. And you also need a network that can handle agentic actions that are probably emitting billions of events at the same time concurrently. And I think it's been proven through the statistics that are coming out of SUI at the moment that it's got all-time transaction volume. On the network. It's got incredibly high number of users joining the network. It's got a really huge growth in TVL. And in the past year, I think according to the latest Electric Developer Capital Report, it had the fastest growth in developers of any ecosystem. So you can see that all the numbers are pointing in the right direction. SUI is only 2.5 years old on mainnet, but the velocity of growth of this ecosystem has been extreme. And I think we as investors at Caritage have underwritten that growth from the very beginning. I think what's come out of the SUI ecosystem has been profound. They've got programmable storage in Walrus. They've got this really important center of liquidity in DeepBook, which is kind of the on-chain NASDAQ that underpins many things together on SUI. They have now these incredible acquisition and onboarding technologies from ZK login to passkeys that came out in the past few weeks, which allows anyone to create a wallet seamlessly using biometrics or using Google single sign-on. These are the types of enabling capabilities that will allow breakout use cases to emerge in SUI in the next year or so.
What do you think some of those potential use cases are? Is this more DeFi oriented? Is it gaming? You've mentioned AI and agents. Kind of how do you see this playing out?
I think it's all of the above. I think, what's great about SUI is it is a universal coordination layer. And, the types of experiences that, require hundreds of millions of users, billions and trillions of transactions, they can only really be enabled by SUI. And I think that many analysts and many technology commentators and reporters have kind of come to that conclusion recently. I think the consensus algorithm is novel and unique and has been proven to have this very specific kind of fast path consensus mechanism, which allows for really fast finality and high throughput. Similarly, the very kind of essence of the move-based programming language allows for programmable transaction blocks. It allows for inherent concurrent scalability, so you can handle transactions simultaneously and not be prevented from dealing with sequential transaction ordering that you see on an account-based model that's typical with Ethereum and Solana. So I think SUI is a very important and new technology paradigm that will enable hopefully use cases we've never seen before. I think what you mentioned, payments, DeFi, gaming, sure, agentic experiences, they all, I think, will flourish on SUI. And just for everyone's kind of benefit, I used to be in the AI industry, previously was chief commercial officer of a company that was started in the UCL AI research lab alongside DeepMind, and we ultimately exited that business to a New York Stock Exchange listed acquirer. I'm very familiar with the event workload that is emitted when individuals or kind of businesses, make requests on these ML infrastructures. The types of transactions that are coming through, the scale of that is so significant, and you can see that in a lot of the reporting around how much GPU, how much compute is required to scale AI every 6 months, every year. It's just growing exponentially, and you need a network that can handle that throughput. And right now, I think SUI is totally unique as a technology in being future-proof. One last comment is that there's a huge existential threat to crypto networks in the form of quantum computing. And if you look at the research that came out of SUI recently from the chief cryptographer, Kostas, who incidentally was the head of cryptography for WhatsApp, for Instagram, which had billions of users. He's just released some really groundbreaking research on post-quantum security in EDDSA chains. And you can see that SUI is really building for the future. So that's how I would answer your question. It's set for every type of use case, and it doesn't, necessarily have to be pigeonholed into one certain sector.
Awesome. So, you guys are obviously making over at Mill City Ventures a considerable investment in the space. I'm curious to kind of learn a little bit more about the strategy, but before we jump into that, this is clearly a trend here. We've seen this support a lot of different assets, and what I mean by this is the treasury companies that have been spun up. We've seen those for Bitcoin, obviously, with probably Strategy being the first and most well-known. We've seen this with Ethereum. I've seen a couple others mentioned with BitTensor, purchasing Tau, Sui. What is it about the treasury companies that is attractive to investors? What's the reason for those?
I think that we are at a tipping point in crypto's history. I think that what Saylor has done in MicroStrategy and what the Circle IPO proved this year is that there's an explosion of latent demand for crypto equities, equities that have some kind of crypto adjacency, right? Even in Robinhood, for example. And institutional appetite has been pent up for a while because of an unclear regulatory environment. And I'm here from the SALT conference in Wyoming, where the chairman of the SEC will be speaking alongside Cynthia Lummis and many other members of Congress who are part of the pro-crypto administration and pro-crypto Congress that are really pioneering a new future for our industry. And I think it's incredible how all of these different things are coming together. I think in regard to institutions, many are getting up the curve in terms of custody and security for how to actually own the underlying assets, but not every institution's there yet. And it requires, personnel, human capital, insurance, and policy change to actually purchase spot assets. And so what DATs offer investors is a safe and compliant equity wrapper to access the explosive growth of a new network like Sui. I think that, as you can see in some of the high-profile names that are coming into the DAT space, it's multi-strat hedge funds. It's even the likes of Fidelity and others are coming in now to these DATs. The investor base is transforming right before our eyes, and I think the U.S. capital markets are so unique. The liquidity there is not like anything we've ever seen in crypto. And you can definitely create generational companies like what Michael Saylor has achieved with MicroStrategy. He's done such a great job at educating Wall Street on the compounding effects of Bitcoin. And now we have access to these next generation technologies in the form of Sui, that, as I say, came from Facebook, where probably could have been the biggest business in crypto in the world, and are now being able to flourish in an unrestricted way through Sui, through the Sui ecosystem. So many investors are very interested in the technology progress of this sector. Many investors and analysts think about the growth of the internet in the 2000s and how it created companies like Facebook and Google. And I think for us as investors, and for many of the investors who joined our pipe round, who were disclosed in our press release, they see this as the opportunity to get access to one of the most important generational companies in crypto. And then you also back a management team to deliver a dynamic strategy. So, our job is to accumulate Sui in the market in a dynamic strategy that drives return for our shareholders. Second, we will provide economic security to the network in the form of staking and potentially also running our own validator. We'll return that yield back to investors in the form of Sui per share. And then in the medium term, we actually want to be a really important actor in the Sui ecosystem. We, as I mentioned, at Caritage have been one of the most prolific investors in this ecosystem. We think that it's an incredible community, and we want to drive not just economic security, but the growth, the value of Sui, and we want to drive that community. So we think our balance sheet can play a very interesting role in providing liquidity into growing Sui DeFi and other aspects of the Sui ecosystem. And then we will provide that return back to shareholders in the form of Sui per share. So it's all about driving a dynamic return, being value accretive in the form of Sui per share, and having a competitive strategy that's most importantly backed by the SUI Foundation. And we brought this to market in partnership with SUI. We were both the lead investors. And we did something that was disproportionate in the DAT space. We locked our shares for 12 months to prove to our shareholders and to the SUI community that we are long-term focused. This is not opportunism. It's not a trade. We're here to build the SUI ecosystem long-term and drive the value of SUI.
Yeah, I want to dig into that because that all it makes sense. Why you guys are different and what you're doing specifically within the SUI ecosystem. You spoke about projects like Walrus. You spoke about projects like SUI Lend. I'm big on SUI Lend and was in Walrus. I'm just wondering, are there anything other projects that come to top of mind that you'd be looking to back as one of the main, funds for SUI? So is there anything like crypto AI you mentioned before, just anything that is on the horizon for the SUI ecosystem that you would either like to see or that you could potentially, back?
Yeah, so I think the most important answer that I would say is that Bitcoin on SUI is driving a lot of investor appetite right now. We think that the opportunity to have Bitcoin natively on SUI at real scale in the next few years is going to be extremely exciting. I think, a small percentage of all Bitcoin is wrapped. Institutions, individuals don't want to take bridging risk. They don't want to take synthetic risk on their Bitcoin. We're seeing very interesting innovations coming from both the external SUI ecosystem, like incur, which was announced recently, that has kind of come up with some very novel 2PC, MPC technology, which allows for kind of, a much more secure way to get financing on your Bitcoin without bridging it. Similarly, there are some very interesting initiatives coming out of the SUI team and the Miston team itself related to BTC-Fi on SUI in the next couple of months. And I think that's going to be a very exciting part of the growth story. In our investor docs, we actually have the ability to custody both SUI and Bitcoin. And we expect to play a really interesting role in the growth of Bitcoin yield on SUI in the future.
And Stephen, what is the reason for that, where you're seeing demand for Bitcoin on SUI? Is it that it's used as collateral to finance participation or other operations in some way, or where does that demand come from?
I think that yield on Bitcoin is kind of like the holy grail, right? Everyone has been, accustomed to the compounding value of owning Bitcoin and not selling it. But ultimately, it's a very important asset to get liquidity against and to get, to mint stablecoins against. And I think the growth of BTC-Fi could be transformational for crypto. You need a way to handle those assets in a secure and safe way that minimizes bridging risk. I think that the unique qualities of the Move programming language, this ability to have objects at the core of the data model rather than accounts, allows for very unique programmability opportunities. And similarly, coming out of Miston Labs, as I mentioned, kind of Kostas before, the chief cryptographer, not only are they researching kind of tracks related to post-quantum security, they're also looking at areas related to AI and to Bitcoin. And I think what will come out in the next couple of months is going to be very, very exciting. I think, stay tuned to Twitter and to Korea Blockchain Week and other events where SUI is going to be present to follow that. But I think that, the overall growth of liquidity that could bring to the whole of crypto and not least the SUI ecosystem could be gigantic.
Where do you see this going long term? I mean, obviously you guys are in it for the long term, given the lockup period, and again, very sizable investment here relative to even the market cap of SUI today, which I think is probably close to 12 billion, maybe a little bit more at the current prices. For anybody that's not in the space or isn't even familiar with SUI, how do you think about it? Is this something that I suppose could reach the market cap over time, assuming this all goes up, of something like Solana today, where you have a roughly $100 billion market cap? And maybe I'm kind of just grasping here, but how do you guys think about valuations long term in this space? We've got maybe 3 to 4 trillion. I don't know what the exact number is in terms of total crypto market cap today. But as this plays out, 5+ years, and where do you see this going?
I think that we are witnessing an exponential growth of crypto right now. The network effects are truly starting to kind of hit that J-curve, and one blockchain stands out amongst the rest for enabling these billion user type experiences, and that's Siri, right? It's 2 and a bit years old on mainnet. It reached an all-time high of FTV around 50 billion. Solana's 5 years old and has done extremely well, but do I think Sui could outperform Solana within the next year? Definitely. Do I think that Sui could outperform Ethereum in the next 2 years, 2 to 3 years? Definitely, because once you've landed the breakout use cases, the types of experiences that have transformed Web2, the TikToks, the YouTubes, the gaming experiences, once they land on Sui, I think we're set for a very different future. And as I mentioned, if you really think about, agentic experiences, what does that mean? It means AI wallets that can think and act for you. It means like going from an LLM query to an action somewhere in an IT real estate or on a blockchain, right? Like that type of coordination layer is going to be handling billions, if not trillions of dollars of events. I remember back in my previous life when we used to kind of convert unstructured communications data into structured data, and we'd emit those kind of those conversions into structured data via a JSON format in the API, and then that would be fed into a Kafka stream, which could be enabled in the broader IT real estate, whether it was Murex or Salesforce or ServiceNow, to take action on those events. ChatGPT's drawing on upon, I think, like 700 million weekly active users. Just imagine the load that would be required if every one of those users emitted a request at the same time or 10 requests in the same minute. What blockchain can handle that scale? And I think the answer is Siri, right? So in the future, I think the growth of the ecosystem could be incredible, and I think that we are underwriting the exponential growth of Sui in this public company. That's definitely the investment thesis.
Makes sense, yeah. And just real quick, we got a couple minutes left. I'm just curious, like, where do you think the crypto treasury market is going from here? And then specifically, what's top of mind for you at Mill City Ventures? How are you going to manage the sweet treasury, and what's kind of top of mind there for you?
I think the DAT space is a really interesting phenomenon. I think it's unlocking U.S. capital markets liquidity in a really profound and meaningful way that could create generational companies like we've seen with Michael Saylor and MicroStrategy. I think that it could also change the commercial destiny of many of these protocols. In us at Mill City Ventures, we have an executive team that's highly commercial. We've got a great asset manager at Galaxy, and we are remember inside the business, which is a non-bank financial lender. And so we see the role that we will play in the public markets as driving the value of Sui, driving the vision of Sui, but driving operating return and shareholder. I think enabled to do things in the market that a foundation can't do, doesn't want to be seen to be doing, and that commercial mandate is limitless. I think in many ways what we could become longer term is kind of like a quasi Sui bank. Build a large balance sheet, provide return on that balance sheet, use that balance sheet to provide liquidity and lending into different pools. And I think there are tons of industries that haven't flourished yet really on blockchain rails. One is SME credit. One is kind of like fintech. Another one is AI. So we can go into those industries, look for targets, look for companies that have hundreds of millions of users, hundreds of millions of dollars of cash flow, and look to potentially acquire them or bring them over to Sui in some way. There's a really limitless future of opportunities that we can pursue. But I think what will stand out from the competitive bench is, are you coming to market with a foundation? We looked at the DAT space at the beginning of the year as investors at Caritage. We DD'd pretty much every company, and what mean? Like, what would that mean if you had an exclusive right to purchase tokens from the foundation at a discount you negotiated for your shareholders? What would that mean if you could like join in media and marketing initiatives with the actual founders of the technology themselves? What does it mean and how can you leverage each other's expertise and not just provide, as I said, economic security to the network, but commercial growth longer term for this ecosystem? That's a really exciting future, and we do it in maximum respect for the founders of this technology. We aspire to be great custodians of their brand in the public markets, and we really aim to try and grow the value of this ecosystem, the value of this token, and the value of our stock for our shareholders. So I think it's a united vision with the founders, and it's all based on success.
For Mill City Ventures. Again, ticker symbol is MCVT for anybody that wants to check it out. But thank you for coming on the show. Before we let you go, where can everyone learn a little bit more about Mill City Ventures, or even follow you if you're on Twitter, learn more about you? Where can they go?
Yeah, so please follow me on Twitter or on LinkedIn, and please go to our website and to our Twitter page. We'll be publishing all of our SUI holdings and how we've acquired that SUI dynamically in the market every week. We aim to be super transparent, so all of our investors and our kind of community members can follow our journey and be a part of it.
Awesome. Well, it's been a pleasure, and thanks again for coming on the show this evening.
You're welcome.
All right. That's going to do it for our show. We'll be back on Wednesday. Until then, I'm Ryan.
I'm Dan.
Peace.